The committee will come to order, a quorum being present. Without objection, the chair is authorized to declare a recess of the committee at any time. Pursuant to Committee Rule 3 and House Rule 11, the chair announces that the chair may postpone further proceedings today on any vote relating to any matter under consideration during today's markup. Without objection, all members will have 5 legislative days within which to revise and extend their remarks and to submit additional materials to the chair for inclusion in the record. I now recognize myself for 5 minutes on the measures under consideration today. In 2019, the committee had a very productive year and advanced legislation on a wide range of issues to benefit consumers, investors, and the economy. The committee marked up 69 bills and convened 74 hearings to inform the American public on important issues in our jurisdiction. 55 Financial Services Committee bills passed the House, and I'm proud to say that 50 of those bills had broad bipartisan support. In 2020, this committee will continue to address the challenges that face Americans and ensure that the economy is fair for everyone. Today, we will mark up a number of housing bills that continue the committee's efforts to make housing more affordable and fair. Last year, the committee held a hearing on the importance of federal investment in housing infrastructure, which is just as critical as the funding needed for our nation's roads and bridges. Today, we will mark up my bill, H.R. 5187, the Housing is Infrastructure Act, which would authorize more than $100 billion in federal spending for the nation's affordable housing infrastructure, including public housing, supportive housing for seniors and people with disabilities, and rural and Native American housing. We will also consider H.R. 149, the Housing Fairness Act, a bill by Congressman Green, which would authorize increased funding for the Department of Housing and Urban Development's Fair Housing Initiatives program and make a number of reforms to the program. H.R. 4351, the Yes in My Backyard Act, a bill by Congressman Heck, which would require localities that receive community development block grant funding to submit a plan to track and report on the implementation of certain land use policies that promote housing production, and H.R. 5931, the Improving FHA Support for Small Dollar Mortgages Act, a bill by Congressman Clay and Stivers to require the Federal Housing Administration to conduct a review of its policies to identify any barriers to supporting mortgages under $70,000 and report to Congress within a year with a plan for removing such barriers. We will also consider a pair of capital markets bills. H.R. 5930, the Workforce Investment Disclosure Act, a bill by Congresswoman Acne to require the Securities and Exchange Commission to require public companies to disclose how they train, compensate, and otherwise manage their employees, and H.R. 5929, the Shareholder Political Transparency Act, a bill by Congressman Foster to require public companies to disclose to both the SEC and the investors the amount, date, and nature of the company's expenditures for political activities. Additionally, we will mark up H.R. 5932, the Ensuring Chinese Debt Transparency Act, a bill by Congressman Hill, which seeks to address concerns that China is trapping developing countries in a cycle of predatory debt. And finally, we will also mark up the committee's views and estimates on the budget for fiscal year 2021, including our strong concerns with Trump's proposed cuts to vital programs for America's most vulnerable communities. So I thank the members for their outstanding work on these bills and measures. I now yield 5 minutes to the distinguished ranking member, Mr. McHenry, for his opening statement on these measures.
Well, thank you, Chairwoman Waters, and thank you for holding today's markup. I know we have areas of agreement during this markup. We also have areas of disagreement, but let's start with areas of agreement. As I've raised in this committee and over my time, significant period of time in Congress, I want to start by saying that I'm pleased that my colleagues on the other side of the aisle are agreeing with Republicans that China poses a real threat to our national security. I think we've had a broader conversation in this committee than we've ever had before, and I'm grateful that Chairwoman Waters has been eager to engage in this conversation. And I'm grateful that this year we're seeing, especially in this markup, committee Republicans have a bill through French Hill that helps with this debt trap that is part of the Belt and Road Initiative from the Chinese Communist Party. And I'm glad that we can actually have a bipartisan vote on something important as it relates to China. In fact, a report by the Center for Global Development found 8 Belt and Road Initiative countries are at a high risk of debt distress due to Belt and Road Initiative loans. Pakistan and Cambodia are 2 examples of those countries. So Mr. Hill's bill is a much-needed step towards combating China's plan to dominate the global economy by exposing their debt trap diplomacy. I'm glad to see we'll be able to consider several housing bills. Affordable housing remains an important issue for this committee as well as the country. Committee Republicans agree there's no place for discrimination in society. We need to ensure HUD and state and local enforcement entities have the tools they need to enforce the Fair Housing Act. This includes holding bad actors, even cities that are represented by members of this committee, making sure they're held accountable, and ensuring that they do not benefit from any type of federal funding without significant improvements to their administration of those funds. We also need to bring our housing programs into the 21st century. I commend Chairwoman Waters' commitment to addressing the housing shortage in this country. But I don't believe giving $100 billion to America's East and West Coast cities is the solution. This approach will not increase housing availability or reduce the number of Americans who go homeless every night. Part of the solution is before us today. The bipartisan Yes in My Backyard Act is a good step forward in understanding the local barriers that hinder our nation's housing stock. We need to look at local zoning laws. We need to look at the regulatory barriers. We need to look at the local processes and procedures that are harming our cities. There are fantastic programs like the Rental Assistance Demonstration Program that was an Obama administration initiative pushed very strongly by them. What we've seen is 120,000 units of public housing using $12.6 billion of private sector dollars to make them the best available public housing stock. Just a few remarks on the latest mandatory disclosure bills, which come to us after countless others. There's nothing new to see here. It's just more mandates on the private sector. And I get it. Some of the members of this committee need to look like they're accomplishing something of some value to their constituents. But these bills will not help families save for their first home, for their child's college education, or for their retirement. In fact, these 2 bills will do nothing but raise compliance costs for companies that are already public and deter private sector firms, non-public firms, from going public. Finally, the last 2 items we'll consider the Democrats' budget views and estimates and the committee resolution appointing Republican members to subcommittees. As I've said many times before, Republicans stand ready to work with Democrats to advance policies that promote competition, free markets, and innovation. We support policies that ensure our financial system is safe and sound and protect consumers. The policies reflected in the views and estimates before us today are once again a polar opposite. Democrats want to spend more, create more bureaucracy, nationalize more of private industry, and create more regulation. At least that's what the views and estimates say. These policies will shrink our economy, cost American jobs, hinder markets, and raise the cost of financial products and services for all consumers, ultimately failing the individuals, families, and small businesses that these policies are intended to help. And so we disagree on those items, and I think that is a disagreement that is not is representative of where we are as individuals and members of this committee. And I think that fulsome debate is a reasonable one for us to have. And so with that, Madam Chair, if I may at this time ask unanimous consent to consider the committee resolution appointing Republican members to subcommittee and task forces.
Without objection, such is the order.
And with that, I'm grateful for the newest member of the committee, Van Taylor, to have two subcommittees and be a member of the Task Force on Artificial Intelligence, for Mr. Stile to move to the Capital Markets Subcommittee, and for Mr. Posey to be a member of the Housing and Insurance Subcommittees. They're all fine members, and these are good committees commensurate with their capacities and background. So with that, I yield back.
The chair now calls up H.R. 5931, the Improving FHA Support for Small Dollar Mortgages Act of 2020. The clerk will report the bill.
H.R. 5931, a bill to require a review of the effects of FHA mortgage insurance policies, practices, and products on small dollar mortgage lending and for other purposes. Be it enacted by the Senate and House of Representatives of the United States of America in Congress assembled. Section 1, short title. This act may be cited as the Improving FHA Support.
Without objection, the first reading of H.R. 5131 is dispensed with. The gentleman from Missouri, Mr. Clay, the sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed in advance and are on the dais. The clerk will read the amendment.
Amendment in the nature of a substitute to H.R. 5931, offered by Mr. Clay of Missouri. Strike all after the enacting clause and insert the following. Section 1, short title. This act may be cited as the Improving FHA Support for Small Dollar Mortgages Act of 2020. Section 2, review of FHA small dollar mortgage practices.
Without objection, the amendment in the nature of a substitute will be considered as read and considered base text for purposes of further amendment. I now recognize the gentleman from Missouri for 5 minutes to explain the bill and his amendment.
Thank you, Madam Chair, and I want to start off by thanking my colleague, Congressman Stivers, for working with my staff and me to craft a bill that will ultimately try to help close the affordable housing gap. And I look forward to working with him on other legislation and policy going forward. The Clay-Stivers amendment in the nature of a substitute to H.R. 5931, the Improving FHA Support for Small Dollar Mortgages Act of 2020, would require the Federal Housing Administration to conduct a review of its policies to identify any barriers to supporting mortgages under $70,000 or small dollar mortgages, and submit a report to Congress within a year with a plan for removing such barriers. In a recent report, the Urban Institute found that despite having similar performance indicators, credit profiles, loan-to-value ratio, and lower debt-to-income ratio, the financing options to purchase, renovate, or refinance homes valued at or under $70,000 remain limited compared to mortgages between $70,000 and $150,000. In fact, the report found that small dollar mortgage loan applications in 2017 were denied by lenders at double the rate of denial for large mortgage loans, and that these denial rates were not explained by the credit worthiness of the applicants. The Urban Institute report further revealed that FHA is disproportionately failing to serve this market despite its mission to serve underserved borrowers. Specifically, the report found that FHA serves 24% of the overall market, but only 19% of small dollar mortgage market. Only a quarter of all 640,000 homes that were valued at $70,000 or less and sold in the U.S. in 2015 were financed through a home mortgage, while the remainder were largely cash purchases by investors. While cash-rich investors can dominate small dollar housing inventory in low-cost markets through cash purchases, individual borrowers tend to rely on traditional mortgage products, and the lack of access to such products can be a substantial barrier to home ownership. According to the Harvard Joint Center on Housing Studies, households making at least $75,000 annually who historically would have been homeowners accounted for 75% of growth in renter households between 2010 and 2018. Increasing access to small dollar mortgages could be one way to help shift these households back into home ownership. Let me add that this bill is supported by numerous groups, such as the Center for Responsible Lending, the National Consumer Law Center, the National Association of Realtors, the Asian Real Estate Association of America, the Community Home Lender Association, the National Association of Real Estate Brokers, Mortgage Bankers Association, the National Association of Federally Insured Credit Unions, the Independent Community Bankers of America, the Affordable Home Ownership Coalition, and the National Community Reinvestment Coalition. Again, I urge my colleagues to support this bipartisan study to identify any barriers to supporting these small dollar mortgages and report to Congress within a year with a plan for removing such barriers to financing for credit-worthy borrowers, and I yield back.
Is there further discussion of or amendments to H.R. 5931?
Yes, ma'am.
For what purpose does the gentleman from Ohio seek recognition?
Madam Chair, I move to strike the last word.
The gentleman is recognized for 5 minutes.
Thank you, Madam Chair, and I want to thank you for including this important bill on this markup. I want to thank Chairman Clay for his incredibly hard work to help people who are trying to live their own dream of home ownership, and we've seen a reduction in the mortgage loans for properties that are under $70,000, and we need to figure out what's going on, and we need to fix it. This bill would direct HUD to review FHA's policies, practices, and products to identify any obstacles that might be impeding the market for these small dollar mortgages. That's defined as mortgages under $70,000. The market for mortgages below $70,000 might amaze people inside the DC Beltway, but in counties in my district, in Athens County, in Clinton County, and Logan County, that is the lion's share of the loans in those rural areas, and other urban areas have the same issue. A study conducted by the Urban Institute found that the number of small dollar mortgages plummeted 38% between 2009 and 2018. It's unclear why it happened. It's likely that originators just left the market or reduced the lending in it because the loans just weren't profitable anymore. But it's important that we figure out what's going on and we get it fixed. It's important to note that this market consists of many traditionally underserved groups that could benefit greatly from building equity in a home. In fact, a study by Duke University in 2018 showed that reducing disparities in home ownership by race would narrow the racial wealth gap by 31%. I think it's worth noting that we have to address this. An FHA study on this can help move us forward. I want to thank Chairman Clay and Chairwoman Waters for including language that I requested in the bill that makes sure that anything FHA does can't make a policy change that would adversely impact their insurance fund, because if there is a severe downturn, FHA would quickly blow through their limited capital and trigger a potential taxpayer bailout. So we need to look out for that. But nobody on the committee wants that to happen, but we do want to make sure that people that require small dollar mortgages can get access to financing. And I think this review is a responsible way to move forward. I would urge all my colleagues to support it. I yield the balance of my time to the ranking member, Mr. McHenry.
Well, I thank my colleague for yielding, and I want to first commend you, Mr. Stivers, and you, Mr. Clay, for working together on what is a quite reasonable approach to an important subject. This issue does not affect every member's constituent before this committee. It affects mine, though, and it affects a lot of folks that are in lower cost areas, those with rural areas in their districts. And even in high cost areas, it does affect constituents. It just doesn't, not at the same rate. So I think it's important that this review take place because we want to know if this is a government problem, a government-initiated problem, or if this is something that is happening in the marketplace that needs to be remedied. Is there a market failure here? It could be the case that it's rules out of FHA or CFPB or laws that we've passed. And so I think this is a reasonable undertaking to understand why otherwise creditworthy borrowers are underserved in this smaller dollar mortgage space. And so, Mr. Stivers, Mr. Clay, I commend you for the good work here today and encourage the adoption of this bill, and I yield back to Mr. Stivers.
I yield back the balance of my time, Madam Chair.
Thank you. I now recognize myself for 5 minutes. As we work to improve access to home ownership, we must be cognizant of the unique challenges facing different communities across the country. In rural communities and those that are still struggling to recover from the devastating foreclosure crisis, first-time home buyers and working-class families are not able to take advantage of lower housing values because of a lack of access to small-dollar mortgage loans. Specifically, I'm talking about mortgages for $70,000 and less. These small-dollar mortgages are denied by lenders at double the rate compared to larger loans, and this trend cannot be explained away by differences in creditworthiness of applicants. And while the Federal Housing Administration was designed to serve underserved markets, the data shows that FHA is also disproportionately failing to serve the small dollar mortgage market. Mr. Clay's and Mr. Stivers' bill would address this problem by requiring FHA to identify any barriers to better serving the small dollar mortgage market and come up with a plan to reduce those barriers. So I urge my colleagues to support this bill. And I'll yield back the remainder of my time. And is there further discussion or amendments to H.R. 5931? For what purpose does the gentleman from Florida seek recognition?
Thank you, Madam Chair, and I only have a question. Does this
The gentleman is recognized for 5 minutes.
does this cover mobile homes?
Mr. Larson, to whom are you directing a question to?
The gentleman would yield.
I would yield to Mr. Representative Clay.
It is my understanding that this covers any home under the price of $70,000. So the short answer is yes, it would cover if they're under $70,000 in value. It would cover the mobile home.
If the gentleman would yield,
I would yield.
it would cover some of those loans. Some mobile home loans are done as chattel loans, as you may know, which are more expensive and more, and so it would not potentially cover every one of those loans, but it would cover some of those loans. And, you know, I think it will start to move the ball forward. I yield back.
Is there further discussion?
I yield back.
As he just gave. If not, the question now occurs on approving the amendment in the nature of a substitute. All those in favor say aye.
Aye.
Those opposed, nay. In the opinion of the chair, the ayes have it, and the amendment in the nature of a substitute is agreed to. The question now occurs on ordering H.R. 5931 as amended to be reported favorably to the House. All those in favor of approving H.R. 5931 as amendment say aye. Those opposed, nay. In the opinion of the chair, the ayes have it, and H.R. 5931 as amended is reported favorably to the House. For what?
May I
Missouri
request a recorded vote?
A recorded vote has been requested. All those in favor of a recorded vote shall raise their hand and be counted. Okay, there is a sufficient second, and a recorded vote is ordered. Pursuant to Section C5 of Rule 3 of the committee rules, the vote on this question is postponed. The chair now calls up the committee's views and estimates for fiscal year 2021. The clerk will report the committee's views and estimates.
Views and estimates of the Committee on Financial Services on matters to be set forth in the concurrent resolution on the budget of fiscal year 2021. Pursuant to applicable rules and laws, the Committee on Financial Services transmits to the Committee on the Budget the following views and estimates on matters within this jurisdiction or functions to be set forth in the concurrent resolution on the budget for fiscal year 2021. Building a fair economy for all Americans. In the first year of the 116th Congress, the committee put consumers and
Without
investors-
objection, the first reading of the committee's views and estimates is dispensed with. Without objection, the committee's views and estimates are considered as read and open for amendment at any point. I now recognize myself for 5 minutes to explain the views and estimates. Earlier this month, the President released a cruel budget that cuts critical programs within the jurisdiction of this committee. Democrats will not stand for a budget that harms families, consumers, investors, and small businesses. Instead, this committee has been and will continue to be about the business of protecting consumers, expanding and supporting safe, decent, and affordable housing, working to end homelessness, promoting diversity and inclusion across the financial services industry, and expanding opportunities for small businesses and entrepreneurship. By contrast, Republicans added $1.9 trillion to the debt in order to provide tax cuts to the ultra-rich mega banks and corporations. Republicans are also supporting Trump's reckless trade war, which has been devastating to farmers, manufacturers, and the economy as a whole. For example, bankruptcies at family farms increased by over 20% last year alone. Meanwhile, Trump's appointees have rolled back important protections put in place to protect workers, the environment, the healthcare system, consumers, and our economy. At the Consumer Financial Protection Bureau, Trump's appointees are letting bad actors escape accountability. The Trump budget would also reduce access to affordable housing, cut community development, and raise rents on the most vulnerable populations, including seniors. This committee's budget views and estimates lays out a vision for robust funding for the critical programs under our jurisdiction and the agencies that administer them. It also describes the legislation that we're advancing to accomplish these goals. For example, later in this markup, we will be considering my bill, H.R. 5187, the Housing is Infrastructure Act, which will provide over $100 billion in funding for HUD programs to sustain and create affordable homes. Committee Democrats will continue to advance legislation that supports families and communities across the country. Is there further discussion of or amendment to the committee's views and estimates?
I move to strike the last word.
The gentleman is recognized from North Carolina for 5 minutes.
So let me begin by raising this question of when the Democrat leadership will put the House budget resolution on the floor. I raise this question because it's already been publicly announced that the Democrats don't intend to do a budget. I know we're not in the Budget Committee, but they outlined that they're not even going to try to pass a budget resolution as required under the 1974 Budget Act. So I raise that as the first question. So we're doing budget views and estimates to go into a budget that won't exist. Now, I actually don't think that's altogether bad because I completely disagree with this set of views and estimates and have previously disagreed with Democrats' budget offerings. From the mere left to the hard left and everywhere in between, from the socialists to just merely liberals, and their offerings on the House floor for the budget. So that's number one. Number two, if you look at the budget views and estimates, there's not even one mention of the word China. This is one of the greatest geopolitical threats that we face as a country, the rise of China. There's not a mention of the fact that the trade negotiations have resulted in positive things now with phase one of the China trade arrangement announced by the White House just a few weeks ago. And so those two things, I think, are important things to note before we get into the contents of this. Now, obvious with this budget views and estimates, they criticize a director of an agency and her operations of the very unaccountable bureaucracy that the Democrats created under Dodd-Frank, and that's at the CFPB. They want to criticize the president and the booming economy he's created, and they want to criticize the policies that help create the booming economy that has led to wage increases for every segment of the American population. Workers have seen the strongest earnings since the Great Recession started. We see a 3.1% increase year over year, with average hourly earnings growing at a minimum of 3% each month. And over the last 3 years, the Trump administration has reduced regulatory burdens from the previous administration to the tune of $45 billion of effect in our economy. So these things are actually important to note, that the prosperity that we're feeling are a direct result of good policy. These budget views and estimates call into question all of those firm good policies that have had that firm good economic impact. And so I stand against this, not because I don't think people of goodwill are offering it, but because I disagree with the fundamentals of their argument here. We have the lowest unemployment rate in the last 50 years at 3.5%. And now we hover at about the same at 3.6%. The unemployment rate for every segment and demographic of our country is the lowest it's ever been recorded. And labor force participation rates are actually up. So there are good things that are happening in the economy. And so I think we have to foster vibrant financial markets to keep this economy rising. We need to empower families. We need to empower Main Street job creators. It means protecting our national interest. It means being tough on China in a smart and appropriate way. It means seeking housing affordability through greater choice and competition, not social fiat, not big taxpayer dollars, but regulation changes that give us greater value for the dollars that we're spending. So we have disagreements here. And I think the debate we're having here is not an unhealthy one. It's a disagreement on a vision of how to achieve prosperity. So while we may disagree on a lot of components of this, I think the debate is a healthy one. Because what we'll see here is that there is some overlap in what we care about and how we seek to affect that change. And out of this debate, I think we can be better as committee members. As an example, the issue of China. Chairwoman Waters and I have had a big debate about China and how, not that we disagree on tackling this threat of China. I don't think we disagree there, but how to do it. And I think we have a better understanding now than we did a year ago on this issue of China. And as a result of the debates that we've had and this committee have had, I think we have a better understanding. And I think on a going forward basis, we can have greater alignment on this as a result of the I think, honest and holistic debates that we've had. So with that, while I disagree with the budget views and estimates, I think we can have a healthy debate about the direction of our country. With that, yield back.
Is there further discussion of our amendment to the committee views and estimates? The gentleman from Arkansas is recognized for 5 minutes.
Thank you, Madam Chair. I have an amendment at the desk.
We will pause to allow copies of the amendment to be distributed. The clerk will report the amendment.
Amendment to the views and estimates of the Committee on Financial Services offered on matters to be set forth in the concurrent resolution on the budget.
Madam Chair, I move to suspend the reading.
Without objection, the amendment will be considered as read.
Thank you, Madam Chair. I offer this amendment to express the committee's support for the multilateral agreement to increase the capital to the International Finance Corporation, the IFC. The IFC is the private sector arm of the World Bank Group devoted to investments that help lift developing countries out of poverty. This is challenging work, and our committee has worked on a bipartisan basis to help the bank be as effective as possible. As the views and estimates indicate, the Treasury Department has agreed, along with representatives of the World Bank shareholders, to increase the IFC's capital base by $5.5 billion. Let me reiterate, this represents an international commitment that's in essentially the entire globe all the participants in the World Bank have endorsed. However, because of the IFC's rules, the United States must first authorize the capital increase through statute before it can go forward. As a part of this agreement, the Treasury Department secured substantial reforms at the World Bank that our committee has been pushing for and arguing for years. That means less assistance for China and more for the poorest countries. This means focusing the staff on the countries where tackling poverty is the hardest. And incredibly, the IFC portion of the World Bank's capital increase will cost the United States, our taxpayers, nothing. We simply have to authorize it. In last year's omnibus appropriations bill, the vehicle used to move the authorizations forward, we only included an authorization for the World Bank's main lending arm, the International Bank for Reconstruction and Development, the IBRD. The measure failed to include sign-off for this IFC funding authorization, even though the authorization has broad bipartisan support. In fact, when we had a hearing on the capital increase on November 1st last year, I asked all the witnesses that our Democratic friends invited to tell us whether they thought we should oppose the increase in the IFC, and not one of those witnesses raised their hands. Beyond our borders, this holdup has proven extremely disappointing to our friends around the world who are unable to contribute their resources to the IFC until Congress has given the green light. I want to particularly highlight the voices who would benefit most from the capital increase, those countries and peoples of sub-Saharan Africa. As my friend, the gentleman from Missouri, Mr. Cleaver, knows, we received a letter which is attached to my remarks, and I'll ask for its insertion in the record, from last November from all the World Bank's executive directors representing sub-Saharan Africa. And they detailed just how important the IFC capital increase was in order to fight poverty, create jobs on the continent. They underlined how much they valued the World Bank's private sector window, which channels private sector investments to the poorest countries of the world. They highlighted how the IFC had agreed to transparency reforms in response to constructive feedback from our chair, Chair Waters. This will make it all the more puzzling to our allies, both in Africa and around the world, if this committee defines to authorize this multilateral agreement. My amendment highlights that we value the endorsement of the Sub-Saharan African executive directors, and we commit to authorizing this capital increase from this Congress in this current final year. I would ask unanimous consent, Madam Chair, to enter the executive director's letter to Chairman Cleaver and myself into the record.
Without objection, such is the order.
Thank you, Madam Chair. In prior years, the committee has expressed bipartisan concern and even outrage that we thought the World Bank had let down the peoples of Africa. But now we have a case where the bank has worked with our African friends in designing the IFC agreement, and those friends are now asking for this committee's support. We should provide that support and vote yes on this amendment, and I thank the chair, and I yield back the balance of my time.
Are we going to be on different? I now recognize myself for 5 minutes. I am very concerned about the way that Mr. Hill has described what is happening at the IFC. I spent a considerable amount of time with the head of the IFC and members that he brought to Washington to talk with us. And as you know, my predecessor, Mr. Boynefrank, has spent an awful lot of time working on all World Bank issues, having been concerned, over the years about the World Bank's ability to provide support in any number of ways without causing those who are recipients of the support to end up trying to pay back debt instead of investing money in their own infrastructure and housing and education, et cetera. And so the IFC is one area that Mr. Boynefrank and the staff, who's still with us, paid a lot of attention to. We didn't fail to authorize the IFC capital increase. We decided to withhold the authorization until we could come up with an agreement with the Treasury and the IFC to an appropriate set of reforms. We certainly believe that reforms are needed, and I think we had a tacit agreement from the IFC, the head of the IFC, that they recognized that perhaps reforms were needed. They just wanted to move as quickly as they could to make sure that they got the support that they needed for the capital increase. And so I would basically say to the members of this committee that it is important that we accept responsibility and we act appropriately when we're dealing with these kinds of issues. It would be easy to authorize the IFC without reforms, but then we would simply be moving to areas of privatization without an understanding about how these grants would be given to private businesses. They did not have any explanation of how they would send out requests for response to proposals, et cetera, et cetera. And so I would like a consideration for what we're doing to get the kind of reforms that I think are absolutely necessary. And again, we did not fail to authorize the IFC capital increase. We decided to withhold the authorization until we can get an agreement on the reforms that we are negotiating. With that,
Would the gentlewoman yield for a question?
I yield to the gentleman.
Yeah, thank you, Madam Chair. Would you say that you're committed, though, that we get the reforms and the IFC authorization done before this Congress expires? In other words, do you believe that you could?
Yes.
Because the concerns, as I understood it, were they were making progress on meeting the suggestions that you'd made. And what's I think important to our multilateral relationships and to Africa is that Congress, as soon as possible, promptly gets this authorization done. So
I'm committed to that, to doing that. And again, I do not want you to believe that somehow we're not interested in.
No, I don't. I never would
Yeah.
think my chairwoman was not interested in this important topic. And you've led on the reforms. But I do think here it was a missed opportunity to try to use that pressure of the omnibus to get those done last year so that we could move on and have this money freed up for use in Africa. So if we could, if you've got a way to suggest a wording change, I think it would send an important signal to our friends around the world that we're committed to getting this authorization done in this Congress, perhaps by saying that we intend to finalize our reforms and have this authorization complete as a part of this, in this fiscal year, which would mean before September. I know this is a 2021 budget that doesn't exist, but I'm thinking this Congress is the important part, that we get this done in this Congress.
Appreciate the gentleman coming up with some wording that is acceptable to me.
Good.
And I don't know if that would require us to further amend your amendment, or if this can be reworked in a way that does not require an additional amendment.
Well, with the chairwoman's request, I'd be pleased to withdraw my amendment and offer it at a later time. And try
Without objection, such is ordered. I appreciate that.
Madam Chair.
For what purpose does the gentleman seek recognition?
I have an amendment at the desk. It's with regards to Cecil.
We will pause to allow copies of the amendment to be distributed. The clerk will report the amendment.
Amendment to the views and estimates of the Committee on Financial Services.
Madam
offered-
Chair, I move to suspend the reading of the amendment.
Without objection, the amendment will be considered as read. The gentleman is recognized for 5 minutes in support of the amendment.
Thank you, Madam Chair. For over a year, I have continuously expressed grave concerns regarding the Financial Accounting Standards Current Expected Credit Loss Standard, better known as CECL. This committee first held a hearing on the matter in 2018 when the Financial Institutions Subcommittee examined the potential negative effects of this ill-advised accounting standard. Since then, numerous individuals, and on a bipartisan basis, have voiced concerns in front of this committee regarding CECL. In April of 2019, Jamie Dimon lamented that CECL will disproportionately affect small banks and credit unions and that it will cause those institutions to decrease lending at exactly the wrong time. In May of last year, FDIC Chair Helena McWilliams said concern over CECL is the first thing community bankers bring to her attention when she meets with them. In October, before the Consumer Protection and Financial Institutions Subcommittee, numerous minority depository institutions discussed how CECL is going to hinder their ability to serve low-income and minority communities. And finally, in January of this year, the Subcommittee on Investor Protection, Entrepreneurship, and Capital Markets held a hearing where FASB Chairman Golden testified. Throughout the hearing, nearly every member of the subcommittee on both sides of the aisle expressed severe concerns over CECL. Specifically, members of this body were astounded at the lack of understanding displayed by FASB excuse me, as to the actions of their actions it could have on the economy. To recap that hearing for my colleagues who were not in attendance, FASB promulgated CECL, the most significant accounting change in decades, and conducted no quantitative study, no cost-benefit analysis, and did not solicit sufficient comment from stakeholders to determine how their accounting standard would affect access to credit for consumers and the economy as a whole. Outside of this committee, the groundswell of opposition to this standard has been staggering. Former FDIC Chairman William Isaac and former comptroller under President Clinton, Eugene Ludwig, wrote scathing op-eds about the potential effects of CECL. In addition, the Center for Responsible Lending raised concerns that CECL will limit access to credit for low to moderate income consumers and communities of color. Despite the numerous concerns we've heard from CEOs to consumer groups, to small credit unions and everybody in between, FASB has thumbed their nose at the financial services industry and Congress by not reconsidering a proposal. The amendment I'm offering today simply restates the views and concerns of this committee that were expressed during the committee hearing, that CECL will have negative effects on consumer access to credit, particularly in low and moderate income and minority communities, and will have a negative effect on our economy in a downturn. Those negative effects could have massive budget implications, as we've seen in the past. As members of the House Financial Services Committee, we are tasked with ensuring a safe and sound financial services industry and promoting economic freedom for everyday Americans. As the chairman expressed in her opening remarks, we need to be sure we make sure that no harm comes to consumers and taxpayers. That's our job. This responsibility includes protecting all the ability of consumers to have access to credit as well, and ensuring no harmful effects of the economy are stopped and eliminated. With the growing concern of the ramifications of CECL's implementation, the House Financial Services Committee must take action to prevent this standard from being fully implemented. With that, I urge my colleagues to support this amendment, which again simply restates the views and concerns of this committee that were expressed during the hearing in January. And with that, Madam Chair, I yield back.
Is there further debate on the amendment? I now recognize myself for 5 minutes.
Why don't they just strike the very last word?
I'm opposed to this amendment for several reasons. The committee is committed to fully understanding all the potential ramifications of CECL. That is why I, just this month, the subcommittee, rather, on investor protection and entrepreneurship and capital markets worked on this issue. In addition, I have supported legislation to require Treasury to study and report to Congress on CECL's impacts. This legislation became law last year, and as a result, Treasury will send us a report later this year. Therefore, I think it is a mistake to commit to legislation before we have this report. And so, while the committee, while the regulators are allowing for a 3-year transition period for certain financial institutions to adjust to the new standard, and this phase is in its addition to the delay FASB granted for community banks and unions until 2023. While the committee should continue to monitor the situation closely in a much more balanced way than this amendment suggests, it is also important we have strong safeguards and high-quality accounting standards that promote financial stability and transparency for investors.
Will the chairman yield for a discussion?
Yes, I will yield to the gentleman from Missouri.
I think that our staffs are discussing here a change to the amendment, which I would accept. And the change is on the second last sentence, to change the word will to may and strike the very last sentence. And if you're agreeable to those changes, I would be agreeable to those changes.
It's further up.
And I think by doing that, we still adhere to the intent of what the amendment is trying to do, which is restate, again, the concerns that everyone in this committee on a bipartisan basis had with this accounting standard. The very last sentence says we will take legislative action this year, which if we can't do that, that's fine with me to strike that.
Okay.
And the word will there, we can debate this, but the study will show that it will exacerbate. Since we don't have the study yet, I think we can say that it may exacerbate, which should be a word that I could accept. So if you're willing to take those two changes, which our staffs have kind of negotiated, I'm okay with that.
I appreciate the gentleman's wording to help resolve the concerns that you may have, and I certainly will accept that.
Okay, with that, I'm ready
Without
to go.
objection, such is the order.
Thank you, Madam Chair.
Is there further debate on the amendment? If not, the amendment modification has been accepted. So all those in favor of the amendment say aye. Aye. Those opposed, nay. In the opinion of the chair, the ayes have it. The ayes have it, and the amendment is agreed to.
Madam Chair, I have another amendment.
Is there further debate on the amendment?
Madam Chair, I have another amendment.
Gentlemen. We will pause and allow copies of the amendment to be read. Where is it? Do they have the amendment?
We want to move forward with a little bit.
Excuse me. All right. The clerk will report the amendment.
Amendment to the views and estimates of the Committee on Financial Services offered on matters to be set forth in the concurrent resolution on the budget for fiscal year 2021 offered by Mr. Luke Demeyer. Add at the end the following: risk transfer.
I move the amendment be,
Without objection, the amendment will be considered as read. The gentleman is recognized for 5 minutes in support of the amendment.
thank you, Madam Chair. In 2017, in the aftermath of Hurricane Harvey, the National Flood Insurance Program paid out $8.6 billion in claims related to losses from the disaster. These liabilities could have actually been higher, however, if the program was not allowed to reinsure a portion of its risk with private insurers. Due to this risk sharing, the taxpayer was able to avoid over $1 billion in losses. And later that year, with another hurricane that occurred, again, we were able to avoid another $1 billion in losses as a result of reinsurance that the NFIP had taken out. The effectiveness of NFIP's reinsurance program is just one of many examples of how federal insurance and loan programs can limit taxpayer liabilities. Other similar successes include the credit risk transfer activities of Fannie Mae and Freddie Mac, and the risk-sharing program at the Export-Import Bank. In fact, the most recent legislation passed by this committee to reauthorize NFIP and Ex-Im Bank each contain provisions that would improve the ability of these entities to transfer risk away from taxpayers. The idea of credit risk transfers has been a long-standing bipartisan practice in this committee. The ability for FEMA to shift flood insurance risk to the private sector was actually established in Biggert Waters' NFIP reauthorization. Despite the positive results of these efforts, other federal agencies with similar programs lack the authority to utilize credit risk transfer arrangements. According to GAO, there are as many as 148 federal programs that provide federal insurance and other activities that transfer risk or losses from adverse events to the government, i.e. the taxpayers. Having all of these 148 programs examine the risk they have on their books and look at ways to lower that risk for taxpayers is common sense, good governance. My amendment today simply says it is the view of the committee that federal agencies should explore risk transfer options and, if practical, employ that risk transfer. This will help with extraordinary economic downturns and natural catastrophes. Considering the increased overall population of the United States, particularly in high-risk coastal areas, it is only a matter of time before our next weather event occurs and forces taxpayers to foot the bill. We must look to alleviate this burden and allow the private sector to take on this risk if it makes sense to offload it. In addition, the state of our nation's balance sheet could become a significant impediment to America's future growth. It is imperative to pursue sensible strategies to reduce taxpayer liabilities. This will assist in speeding up an economic recovery and reducing the long-term impact on the economy. This committee has consistently shown bipartisan support for credit risk transfers. It is my hope that we will continue and our committee will continue to adopt this amendment on a large bipartisan basis. With that, Madam Chair, I yield back.
I now recognize myself for 5 minutes. I thank the gentleman for offering this amendment. We should certainly be exploring how we can effectively transfer risk from the federal government. However, I believe we should move forward with caution, as these risk transfer mechanisms have largely been untested in a recessionary environment. Further, we must ensure that each federal agency has sufficient discretion to determine whether risk transfers are appropriate for their operations and to what extent they are economical. So I thank the gentleman for making some changes to address these issues, and with those changes, I'm happy to support the amendment and I yield back the remainder of my time. Is there further debate on the amendment? If not, the question occurs on the amendment. All those in favor of the amendment say aye. Aye. Opposed, nay. In the opinion of the chair, the ayes have it, and the amendment is agreed to. For what purpose does the gentleman from Ohio seek recognition?
Thank you, Madam Chair. I have an amendment at the desk.
We will pause to allow copies of the amendment to be distributed.
Hey, this is the wrong amendment. This is the other amendment. Mark?
The clerk will report the amendment.
Amendment to the views and estimates of the Committee on Financial Services offered on matters to be set forth in the concurrent resolution on the budget for fiscal year 2021 offered by Mr. Stivers.
Madam Chair, move that we dispense with the reading.
Without objection, the amendment will be considered as read. The gentleman is recognized for 5 minutes in support of the amendment.
Thank you. I'll be very brief. The committee was, and the chair was generous enough to support an amendment like this last year. As you know, Madam Chair, you and I have worked together to try to solve the issue of youth homelessness. And there's still an issue of the definition of youth homelessness that is not homogeneous between the Department of Education and the Housing and Urban Development Department. This just recognizes that we need to do more to try to address youth homelessness, try to figure out how to enumerate the problem and then address the problem. It does not specify a single solution. It just says we need to focus on the issue of youth homelessness, and I am hopeful that you will support this and that the committee will support this. There are 1.5 million potentially homeless youth in the United States that are depending on us to try to help them, and I know the committee cares, and I want to try to make sure it's in our views and estimates, Madam Chair. I yield back.
Thank you. I now recognize myself for 5 minutes. I move to strike the last word. I want to thank Mr. Stivers for offering this amendment. I appreciate his passion for addressing youth homelessness. It's one that we certainly share. When I speak to families in my district who are dealing with homelessness, I see the toll this housing insecurity is taking on them, including their children, who can't concentrate in school because they are sleeping in a car at night. Every American has a right to safe, decent, and affordable housing. I'm proud of the work our committee has done this Congress to shed more light on the homelessness crisis, including passing my bill, H.R. 1856, the Ending Homelessness Act, which would provide $13 billion so that every person experiencing homelessness, including children and youth, has a roof over their heads. So we stand ready to work with members on both sides of the aisle to address this important issues. And so I'm very appreciative to Mr. Stivers for the work that he has done, his passion that he has really placed into trying to solve this problem. And I urge my colleagues to support this amendment. And I yield back the balance of my time.
Madam Chair, I want to just clarify the amendment would be added on page 2, line 36. I don't think that's clear in the amendment, and I apologize about that. But it would go on page 2, line 36, and I apologize that that wasn't clear on the amendment that we handed out.
Okay, without objection, such is understood.
Thank you,
to
Madam
be
Chair.
Cleared up.
Thank you for your support, Madam
You're
Chair.
welcome.
Yield back.
Thank you. Where are we now? Is there further debate on the amendment?
Madam Chair.
Who seeks recognition?
Move to strike the last
The
word.
gentleman from Texas, Mr. Gooden, seeks recognition. You are recognized for 5 minutes.
Thank you, Madam Chairwoman. I want to echo my praise for this amendment. In particular, our subcommittee is committed to ending homelessness among children and youths who remain a significant portion of the homeless population, and there are disturbing indications that this problem is getting worse. According to National Center for Homeless Education, 1.5 million students experienced homelessness at some point during the 2017-2018 school year, the highest number of homeless students in more than a dozen years, and a 15% increase from just 3 years ago. In identifying new strategies to end homelessness among children and youths, the committee will take a holistic approach of data produced by different federal agencies, including the Department of Education and the Department of Health and Human Services. Our committee is continuing to examine homelessness among individuals who serve their country in uniform, but because of their specific service or discharge status, don't have access to HUD, vouchers, or other sources of federally assisted housing. I want to thank the chairman of our subcommittee and also Mr. Stivers for their work on this, and I yield back.
Who seeks recognition? So what's the question? Is there further debate on the amendment? If not, the question occurs on the amendment. All those in favor of the amendment say aye. Opposed, nay. In the opinion of the chair, the ayes have it, and the amendment is agreed to.
I've got an amendment at the desk.
The gentleman
Madam Chair, I have an amendment at the
recognized
desk.
for 5.
Oh.
We'll pause while the amendment is being distributed.
Right. Sorry. Financial transactions tax. How are you?
Okay. Okay, you do have something.
No, I so in my view. No reason to.
The clerk will report the amendment.
Amendment to the views and estimates of the Committee on Financial Services offered on matters to be set forth in the concurrent resolution on the budget for fiscal year 2021 offered by Mr. McHenry. Page
Without objection, the
17.
amendment will be considered as read. Mr. McHenry is recognized for 5 minutes in support of the amendment.
Well, thank you, Madam Chair. My amendment, I think, should receive unanimous support by this committee. It's simple. It states that the committee opposes any proposal that would negatively impact our capital markets. The financial transaction tax proposal is a tax on American retirement savings. The financial transaction tax, though small for each individual transaction, the weight of such of a transaction would harm middle-class Americans in their savings for retirement, their college education savings, and even the attempt for them to buy their first home. The financial transactions tax has been proposed by a number of people in the political process, from those in the House, those in the Senate, candidates for president. But let's look at the facts on what a financial transaction tax is. This is not a tax on the 1%. It is absolutely not. It is a tax on anyone who has any savings. First, savers would be hit. One study indicates that a mutual fund investor, that's an average everyday investor, may have to work an additional 2.5 years to reach the same retirement goal. just because of the financial transaction tax as proposed. That same saver might have to save an additional $250 per year for 20 years for each child in order to have the same college savings through a 529 plan. Second, this tax would adversely affect markets. We have the most robust liquid markets in the world, where our markets are the envy of the world. The financial transaction tax would be the end of American markets as we know them, and no one wants that. Even the Europeans that have proposed this have created so many carve-outs that it has no impact on revenue to their governments, nor to the markets. Third, these taxes almost invariably fall they almost invariably fail to raise the revenue projected. This has been tried in Europe, it didn't work. And nonetheless, Democrats here in the country are proposing similar plans and also big spending proposals to go along with the financial transaction tax revenue with absolutely bad math. If this weren't enough to convince my colleagues across the aisle, why don't we hold a hearing on this topic? Why don't we have a hearing on the financial transaction tax and what that would mean for the markets, what it would mean for families, what it would mean for the American economy. So the financial transaction tax, I believe, is a terrible idea for everyday Americans. And so I want us to ensure that we don't go down this road. I know that the two parties have different views of revenue to government and tax policy and spending policy, sure. But for this particular type of tax, you're talking about 2.5 years of additional payments and additional work in order to have the same type of retirement benefit the American people expect because of one tax. That's a bad idea. And so I think we should adopt this amendment. I think it's a reasonable thing for us to debate in this committee, and I think it's appropriate, given our oversight of the financial markets, that we ensure that we maintain the most liquid, the most vibrant markets and the envy of the world in our financial markets. And with that, I urge its adoption. And happy to yield to my colleague, the ranking member of the Capital Markets Subcommittee.
Well, thank you. And you summed this up absolutely correctly. And where this has been tried, it has failed. Where this has been discussed, it has frozen markets. We have some advantages here in the United States in our business climate, and one of the most significant is the depth and liquidity of our markets. And this is something that warrants more conversation if the majority is intent on moving ahead with this idea. We absolutely need to have a hearing, but I would hope that some common sense would prevail here, and that we would look at this for what it is, a kind of an empty promise of revenue coming in to the government, and we need to make sure that we are not engaging in class warfare, but we are actually engaging in building this economy and this marketplace. So with that, I'll yield back to the gentleman.
And I yield back.
I recognize myself for 5 minutes. I would like to basically re-describe this amendment more as a political act rather than a public policy real concern. All of the discussion about the transaction tax has been a discussion that really points out that it is and could be a very modest kind of tax because high-frequency trading is the fastest growing and least productive form of Wall Street trading. This practice bears no relationship to business profits or other indicators of economic health, and it benefits only a teeny handful of Wall Street traders while creating greater risk for the rest of the financial system. Any potential losses that are incurred from slowing the pace of trading pale in comparison to the benefits of reducing market volatility. The flash crash of 2010, which is widely blamed on high-frequency trading, saw the Dow Jones Industrial Average lose 10% of its value over the course of 10 minutes for no clear reason. half of all American households would be completely unaffected by a financial transactions tax, many consumers would actually save money because the mutual funds they invest in would see reduced overhead costs. So there are several different versions of this proposal, both in this Congress and by various presidential candidates. But estimates of the revenue generated from these proposals are often disputed. There's a simple reason why revenue estimates are so uncertain. The fundamental purpose of a financial transactions tax is not to generate revenue, but to tramp down on the riskiest form of Wall Street speculation. So according to the Center for Economic and Policy Research, over 30 countries have some form of a financial transaction tax, including Australia, the UK, and Hong Kong. The Institute for Tax and Economic Policy has found that a financial transactions tax would actually make markets more efficient. That's why Republican regulators like Sheila Bair and business leaders like Warren Buffett have spoken favorably about the idea. So, with all due respect, this amendment is not meant to advocate considered policy. But again, what I just alluded to, but to make a political point against a presidential candidate. Similarly, this amendment is not related to policy under the jurisdiction of this committee. And for these reasons, I would urge my colleagues to reject the amendment. Is there further debate on the amendment?
Madam Chair,
Who seeks recognition?
gentleman from Michigan.
Gentleman from Michigan seeks recognition.
Thank you, Madam Chair. I move to strike the last word.
Gentleman is recognized for 5 minutes.
The gentleman yield.
Yes, I'm happy to. Happy to yield to that.
Well, if I may respond to the Chairwoman's assessment here, it is a serious policy concern. I think it is a nefarious tax that will harm average everyday investors, as I outlined. This is a major component of our committee jurisdiction, the regulation of capital markets. A tax like this would be enormously harmful and bad for our markets. The reason why the UK tax, financial transactions tax, is not harmful to their markets is because they have massive carve-outs, and their government revenue is very small as a result of their massive carve-outs on financial transaction taxes. It looks more like the regulation of real estate transfers in some jurisdictions than it does a major capital markets tax. Additionally, when you say this is about politics, I read the budget views and estimates and all the shots taken at President Trump as politics. And that's fair. I think Republicans and Democrats since 1975, when this budget views and estimates process, which quite frankly we didn't create but we have to live under, this sort of charade that we have to come up with these budget views and estimates is actually dumb policy, but we have to go about it, right? And so Democrats put their views in, Republicans put their views in, and later, hopefully quickly, I'll be able to offer my amendment in the nature of a substitute. We can have that debate, and we can kind of move on with our lives because I don't think anybody's even going to tweet about our budget views and estimates debate, right? And then we can get on to serious matters of public policy. But right now, this is the opportunity for us to say we have some disagreements on areas of policy. The majority gets to determine what we debate in this committee. That's the nature of being in charge. I don't think Chairwoman Waters would be interested in giving up that power, nor would any chair. But this budget views and estimates is one opportunity for the minority to have a broader conversation about our jurisdiction and our priorities on this side of the aisle. And one of our priorities is to stop harmful tax policy that would hurt average everyday
Will the
investors.
gentleman yield?
And happy to yield back to the gentleman from
it's actually my time, Madam Chair, and I've got a question for the ranking member. We heard the chair talk a lot about high-frequency trading, and that this wasn't about raising money, it was rather to slow down trading. Am I missing something in your amendment that I see no reference to high-frequency trading or the risks of that?
Correct. So what this would be, if you have a mutual fund, you have a financial transaction that puts your dollars into a mutual fund.
By the way,
so that's one tax.
To the ranking member.
Sorry. That's one tax. That mutual fund then buys perhaps 500 stocks as a component of the money you put in. That's 500 transactions. And that assumes that they're only making one purchase of that stock. So your movement into a mutual fund potentially has hundreds of different tax opportunities with one transaction from your savings account or your checking account or out of your paycheck into the financial markets. This is not a single thing. It is hundreds of transactions that occur, or thousands of transactions occur, even with small dollar contributions into the marketplace. That's why it's so nefarious. Yield back.
And reclaiming my time, and fair to say, you have nothing in here talking about slowing the speed of trading down or high-frequency trading. I mean, that, to me, seems like a completely different conversation than what we are dealing with here, which is whether we are going to subject everyone, which includes virtually everyone who is listening or watching or in this, union members, union pensions, 401ks, you name it, anyone with a retirement of any sort is suddenly going to be subject to having a tax put on that transaction. And as the old saying goes, you want less of something, tax it, make it more expensive. We will have less trading, not in speed, in volume. And that is truly what separates us from the rest of the world as we create the markets that we have. The depth and the liquidity is so important. It's based on those. And so my time is expiring, but I just want to commend the gentleman for putting this forward, and I look forward to continuing this conversation, but I hope we abandon this bad idea. And with that, I yield back.
Is there further debate on the amendment? If not, the question occurs on the amendment. All those in favor of the amendment say aye. Aye. Those opposed, nay. In the opinion of the chair, the nays have it.
I ask for a recorded vote.
Recorded vote has been requested. All in favor of a recorded vote shall raise their hand and be counted. There is a sufficient second, and a recorded vote is so ordered. Pursuant to Section C5 of Rule 3 of the committee rules, the vote on this question is postponed. So we're not on it.
Madam Chairwoman,
Is it, yes?
I have an
Who
amendment.
seeks recognition?
Thank you. Kentucky, Bar from Kentucky.
Gentleman from Kentucky seeks recognition. You're recognized for 5
I have
minutes.
an amendment at the desk.
Amendment at the desk. We will pause to allow copies of the amendment to be distributed. The clerk will report the amendment.
Amendment to the views and estimates of the Committee on Financial Services offered on matters to be set forth in the concurrent resolution on the budget for fiscal year.
Without objection, the amendment will be considered as read. The gentleman from Kentucky is recognized for 5 minutes in support of the amendment.
Thank you, Madam Chairwoman. And the current views and estimates read in part, and I quote, "Furthermore, the Consumer Bureau has continued its misguided policy to not supervise financial institutions for compliance with the Military Lending Act," unquote. My amendment would replace that language so that it would read, Furthermore, the Consumer Bureau has continued its policy to not supervise financial institutions for compliance with the Military Lending Act because the Consumer Bureau lacks the statutory authority to do so, as repeatedly stated by the Director in testimony before the committee. The committee should therefore provide the Bureau with its requested authority by passing H.R. 2904, the Financial Protection for Military Families Act, to give service members the reliable financial services they deserve. Madam Chairwoman, my amendment corrects a misinterpretation of the Bureau's supervision authority for compliance with the Military Lending Act. The views and estimates suggests that the Bureau is somehow shirking its responsibility to our service members, but that's simply not the case. The Bureau does not currently have the statutory authority to supervise financial institutions for compliance with the MLA. It has the authority to enforce violations of the MLA, but it does not have explicit statutory authority to supervise compliance. My colleagues may recall that Director Kraninger conveyed this to the committee multiple times in hearings and letters. She sent the committee a letter on January 7th, 2019, asking us to pass legislation to give her this authority. She reiterated her request during her testimony before the committee on March the 7th, 2019, on October 16th, 2019, and when she was last here a few weeks ago on February 6, 2020. And so, I introduced a bill that would give the CFPB the authority it has asked for, H.R. 2904, the Financial Protection for Our Military Families Act. This bill is narrowly targeted to achieve the desired outcome that both this committee and Director Kraninger are seeking without the inclusion of any other partisan provisions. Yet despite the simplicity of this fix and the potential positive impacts on our service members of its passage, the majority has rejected my request to consider it. The Department of Defense doesn't want supervisory authority over financial institutions, and the CFPB wants it, but the statute doesn't allow it. So, Ranking Member McHenry and I sent a letter to the chairwoman asking that this legislation be included in the October markup. She denied us. We sent another letter asking for its inclusion in the November markup. Same outcome. The reality is that the Bureau is not supervising institutions for compliance with the MLA simply because of inaction of the majority and their refusal to bring up my bill for consideration. We have a leadership team in place at the CFPB that respects its statutory authority and is unwilling to venture into areas where Congress has not authorized it. This is a welcome change from the previous administration, where Director Cordray used the statute as a mere guideline and wrote his own rules. While it might have been Director Cordray's opinion that the Bureau's MLA supervision authority exists, the statute says otherwise, and the current Bureau Director is asking Congress for help. Here's the point. Simply wishing that the Bureau has supervisory authority over MLA compliance doesn't make it so. The statutory text actually matters. I know that there are some non-originalists, like Justice Ginsburg and Justice Sotomayor, who don't particularly care what statutory text actually says when interpreting the law. But as members of Congress, we should all deeply care about the meaning of legislation as actually expressed in statutory text. I'm sure we all share a desire to protect our service members and their families, but I can't sit idly by and let the committee approve these views without correcting inaccuracies and making yet another request that the committee pass my simple, nonpartisan legislation that the CFPB says it needs to help our military. As a member of both this committee and the House Veterans Affairs Committee, I must submit that if the CFPB is not supervising institutions for compliance with the MLA, it's not because of the Bureau's unwillingness to do so, it's because of the majority's failure to give it the tools it needs. We need to amend the views to more accurately describe the problem and present a very simple solution. That's what my amendment does. I urge my colleagues, if you care about veterans, if you care about Bureau supervisory authority, we need to amend the statute. Support my amendment, and I yield back.
For what purpose does the gentleman from Washington seek recognition?
Move to strike last line.
Gentleman is recognized for 5 minutes.
Thank you, Madam Chair. This amendment is unnecessary and in fact harmful and is therefore ill-advised, and I strongly urge my colleagues to reject it. not as represented here does this correct a misinterpretation. In fact, it affirms a misinterpretation, that of the current director of the Consumer Financial Protection Bureau, that she needs this clarification. She does not. And unlike that which was previously asserted, indeed, the current statutory text does provide them with the authority to do this, and they should do this. I actually read the relevant section of the statute when we last debated this bill. And furthermore, the author of that passage has since clearly indicated that that was what it did. So if you needed any other evidence, just from a practical standpoint, let us all recall that the Consumer Financial Protection Bureau did in fact provide this protection to members of the military for years and years under Director Cordray with great success, and to the incredible benefit of the men and women who put on uniform to defend us all. During that period of time, not only was their action lauded, people did not object, and absolutely unlike just about every other aspect of the Consumer Financial Protection Bureau, it was not a point that was litigated. So it occurred for years, it was broadly lauded, nobody litigated, and yet, under the new regime, they have unilaterally decided to discontinue it in, I think, clear contravention of the actual text of the underlying law. It would therefore be harmful for us to pass this and suggest to the Bureau that they don't have the authority to do what they actually do. It gives them an excuse not to do it. If they want to do it, they can do it. They have done it, and again, to great success. So therefore, I urge my colleagues to please vote no on this unnecessary and in fact harmful and in fact ill-advised amendment. With that, I yield back, Madam Chair.
For what purpose does the gentleman from North Carolina
We're
seek
to strike the last
recognition?
word.
The gentleman is recognized for 5 minutes.
Well, first, I want to commend Mr. Barr for offering this and his long-term commitment to this very issue, as members of this committee know. The intention of Mr. Barr is not to get a vote, but to get the result. And I think that's what our men and women in the military need and deserve. This is needed statutory authority. It has to go somewhere. And when a Republican is proposing that that somewhere be the Bureau that my Democrat colleagues are so deeply in love with, I think even if it's offered by a Republican, it's probably a reasonable thing to maybe think about accepting. And just because it's Mr. Barr offering it, I don't think you should discount the value of what he is proposing here, both in legislation, previous amendment, and now with the amendment to the views and estimates. Have no fear, we're trying to improve what we think is a bad document on views and estimates, but it's not going to change the overall assumption that we have between the two parties of budget views and estimates. So why not have just a couple things that seem maybe bipartisan reasonable in your offering of budget views and estimates? With that, I'd yield to my colleague from Kentucky.
I thank the ranking member for his comments, and I don't doubt the sincerity of my friend, the gentleman from Washington, and his reading of the statute. I don't even doubt that his statement about the views of the author of the passage of the statute. But the fact of the matter is there is a debate and there's ambiguity about the meaning of the statute, and the text is not clear. It's not clear. We know it's not clear because there's competing interpretations of the statute. Even if you hold the position that Mr. Heck holds, that the statute does confer supervisory authority to the Bureau, that is not a uniformly held position. There is ambiguity, there is a debate, there is a conflict in the interpretation of that statutory language, and I would submit, far from being clear and unambiguous, there is a major ambiguity in whether or not the text confers that. So we all want to get to the same place. I know Mr. Heck's position is the Bureau should have supervisory authority. That's my position as well. Let's clear up the ambiguity. It's a simple amendment. It's a simple amendment. If there's a debate about what the statute means, let's clarify it once and for all. Director Kraninger wants the authority. She wants it. The Bureau wants it. And the fact that Director Cordray misinterpreted the statute for several years doesn't make it so. They may want to have supervisory authority, but at least this director, this Bureau, has a contrary interpretation of the statute. So let's clarify the ambiguity. And if you still disagree, let me submit this to you. Whether it has been litigated yet or not, we know what the outcome would be under the Chevron precedent. Chevron is very clear that if there is an ambiguity in the statute, if there is competing interpretations of a statute, if there's an interpretation from one administration that changes to the other administration, what do federal courts do in that case, applying the Chevron precedent? They defer to the interpretation of the regulator. If it's a reasonable interpretation of an ambiguous statute, guess who wins? The Bureau. And in this case, this Bureau, like them or not, they would prevail under their interpretation of the statute. So if you really care about veterans, if you really care about protecting veterans from predatory lenders, if you actually care, what you would do is clarify the ambiguity, which is what my bill would do, which is what Director Kraninger is asking for, which is what service members deserve, and the only people that are blocking protection of our veterans are the majority in this committee. So let's stop the political games. Let's clarify the statute. Let's give the veterans the protection they need. Let's give the Bureau the statutory authority that they have requested. And with that, I urge all of my colleagues on both sides of the aisle to stop the political games and give the Bureau the authority they have requested. I yield back.
I now recognize myself for 5 minutes. The Military Lending Act became law in 2006 with bipartisan support and provides critical protections that active duty service members and their families count on to protect them from predatory loans and credit gouging. It is well established that the CFPB has supervisory authority over the Military Lending Act. Committee Democrats, led by Representative Hecht, and I sent a letter to Director Kraninger explaining this, while service member advocates, veterans' rights groups, members of Congress, and state attorneys general have all voiced concern over the CFPB's decision to cripple its MLA enforcement program. Consumer Bureau leadership incorrectly maintains that under federal law, the Consumer Bureau may not cover MLA compliance. It is in its supervisory exams. I continue to be disappointed by Director Kraninger and her illogical stance that she does not have the authority to conduct supervisory examinations for violations of the Military Lending Act. Congress granted the Consumer Bureau broad supervisory authority to oversee a wide range of regulated entities, including amending the Military Lending Act to give the Consumer Bureau, along with other federal agencies that oversee other financial institutions, the authority to enforce the MLA. As Representative Heck explained to Director Kraninger in a recent hearing, legislation is not needed, and the Consumer Bureau should immediately resume MLA exams so they are not leaving service members and their families open to the wide ranges of abuses that necessitated the Military Lending Act in the first place. Our brave servicemen and women deserve better than this. Thus, I would urge my colleagues to oppose adding this amendment to the Budget Views and Estimates document, and I yield back the balance of my time. Is there further discussion, further debate on the amendment? If there's no further debate on the amendment, the question occurs on the amendment. All those in favor of the amendment say aye. Those who oppose, nay. Nay. In the opinion of the chair, the nays have it.
I request a recorded vote.
A recorded vote has been requested. All in favor of a recorded vote shall raise their hand and be counted. There is sufficient second, and a recorded vote is so ordered. Pursuant to Section C5 of Rule 3 of the committee rules, the vote on this question is postponed. Are there further amendments?
Madam Chairwoman,
Who seeks recognition?
Barr from Kentucky.
The gentleman from Kentucky, Mr. Barr.
I have another amendment at the desk.
We will pause to allow copies of the amendment to be distributed. The clerk will report the amendment.
Amendment to the views and estimates of the Committee on Financial Services offered on matters to be set forth in the concurrent resolution on the budget for fiscal year.
Without objection, the amendment will be considered as read. The gentleman from Kentucky is recognized for 5 minutes in support of the amendment.
Thank you, Madam Chairwoman. This amendment is designed to address the environmental and social governance section of the views and estimates on page 6. This exercise by my Democrat colleagues is nothing more than a desire to name and shame companies, and will do a very little to provide material information to the investing public who are making important investment choices. The Securities and Exchange Commission Chairman, Mr. Clayton, when asked about ESG investing in an interview at a financial conference last year, noted that, quote, lumping E, S, and G together is difficult because they are quite different, unquote. Commissioner Hester Peirce described ESG as, quote, scarlet letters that stand for enabling shareholder graft. She has repeatedly stated that forcing companies to disclose so-called ESG metrics would not provide any additional material information to investors that is not already required to be disclosed, and would be incredibly difficult to quantify because there is not a way to measure ESG in a way that would consistently apply to all public reporting companies. There continues to be a troubling trend of large money managers or other financial institutions giving in to the demands of environmental extremists and the far left. This has significant downstream implications on the investing public. By arbitrarily limiting the availability of investment options, these institutions are compromising returns and therefore their customers' financial security. I think of hardworking middle-income savers in central and eastern Kentucky struggling to save for a retirement, struggling to save for college for their kids, and having public companies or asset managers pressured and bullied into misallocating resources to the detriment of shareholders, to the detriment of middle-class savers because of some political correctness at the Davos conference. That, to me, is unconscionable. It is very dangerous if we start to politicize access to capital, if we politicize the allocation of capital based on someone's politically correct views on Wall Street. What I care about is Main Street savers. And when we go down this road, we are opening the door to a massive misallocation of resource that will compromise and undermine maximum investor returns. The point that my colleagues seem to miss with their barrage of disclosure bills is that companies are already required to report information that is material for investors and potential investors to make informed decisions. If information is material, it is already in the disclosure. My colleagues think that by forcing multiple new onerous and costly disclosures on companies will somehow solve the underlying issues, will somehow deal with climate change. In reality, it'll make no meaningful difference and will only increase costs, regulatory burdens, and risk of litigation for the reporting companies. The companies can't just eat those costs. The costs will trickle down to their customers, employees, and investors. And when public companies make bad decisions like denying access to capital to fossil energy companies, all that does is it diminishes research and development, diminishes investment in clean coal technology, diminish innovation in the way that fossil energy companies conduct their operations, and actually undermine the ability of fossil energy companies to innovate in a way that will actually solve the problem of climate. So this is a terribly bad idea. Irresponsible calls for excessive disclosure burdens and politicizing the access to capital more broadly can and will have meaningful negative impacts on retail investors and retirement savers. And unwittingly, what this will do is diminish innovation, research and development, and the ability of fossil energy companies to actually find solutions, real solutions, market-based solutions to the issue of climate. This will hurt the environment. It will not help the environment. It will hurt the environment because no longer will these companies be able to deploy capital in innovative ways that encourage emissions control and other innovative ways to develop through technology, better ways to solve these issues. So let's advocate for middle-class savers. Let's not encourage the misallocation of capital, and let's not diminish the access to capital for companies that can actually invest in technology and innovation in ways that will actually advance environmental stewardship. And so I encourage all my colleagues to support this amendment and yield back.
I recognize myself for 5 minutes. I strongly oppose this amendment, which would strike the views of the committee on environmental, social, and governance issues. These issues include climate change, political spending, human capital management, and human rights and shareholder rights, all crucial issues to investors in our public companies. For example, the impacts of climate change pose an enormous risk to our nation's economy and financial markets. The U.S. Fourth National Climate Assessment found that in the worst-case scenario, the negative impacts of climate change could cost the U.S. economy as much as 10 to 14% of its GDP by the end of the century. Yet, currently, only a small percentage of companies report the exposure to climate risk, leaving investors without the critical information they need to make the best long-term financial investment decisions. According to a recent study, market prices for public company shares fail to factor in the potential costs of climate change and environmental exposure to the tune of trillions of dollars, exposing millions of hardworking families and retirees to enormous financial risk. At a hearing before the Investor Protection, Entrepreneurship, and Capital Markets Subcommittee last year, a representative for CalPERS highlighted the need of required disclosure by stating that, quote, investors need companies to provide a detailed explanation of how each significant climate-related risk affects the company, as well as disclosure of exactly how the company plans to address and manage the risk, end quote. By requiring companies to disclose information relating to the financial and business risks associated with climate change, the market can better access the risk that global warming poses on public companies, help protect the financial futures of hardworking families, and incentivize companies to make critical changes to address climate change. So I would urge my colleagues to join me in supporting our efforts to provide investors and the market with critical information to protect their savings and help address climate change. Who seeks recognition?
Gentleman from Ohio.
Okay. For what purpose does the gentleman from Ohio seek recognition?
I move to strike the last word.
The gentleman is recognized for 5 minutes.
Thank you, Madam Chairwoman. I want to commend Mr. Barr for this amendment and highlighting the need to protect shareholder values. Shareholders are, in fact, the owners of corporations. While stakeholders clearly have a stake, thus the name, the shareholders decide the purpose to operate the firm. So when you look at the goals of the majority highlighted in these budget priorities, frankly, it says we're going to undermine the ownership rights of the shareholders. And who are the shareholders? Let's look at CalPERS, for example. Their pension's underfunded by about $1 trillion. And why is it underfunded by this? Well, partially because the state hasn't reserved enough or had adequate reforms. But the other part is they've pursued environmental social goals, all kinds of agenda items other than their fiduciary duty to deliver returns for the owners of these shares, i.e. their members. So it has big consequences, what we're talking about here, and it undermines the whole principle behind the great capital markets that our nation has built. It is ground zero for this this battle between capitalism and socialism, the idea that we're going to do these name and shame games to try to, frankly, harm the owners of the capital. And the owners of the capital aren't billionaires like Michael Bloomberg or Donald Trump, though I'm sure they own some shares of things. They're regular workers, teachers, public workers, union members, factory workers with 401ks and IRAs. And it's not to try to look out for their interests. It's in spite of their interests. It's to destroy their capital by having firms pursue an agenda that is set by the Democratic Party or further left members like Democratic Socialists. It is not to pursue the interests of the firm or the owners of that capital. And so I think it's a vital argument that Mr. Barr's made, and I'd like to yield the balance of time to him if he'd like it.
I think my friend, and I think he said it well, the only other thing that I can add to the discussion is, again, what we're talking about here is restoring the idea that the shareholder is the owner of the company and that a firm has a fiduciary obligation. The directors and the officers of public companies have a fiduciary duty to maximize shareholder returns. We're talking about middle-class savers who are at risk when the company's purpose is politicized and when their scarce resources and savings are diverted to politically correct causes that do not advance their interests, that in fact sometimes run counter to their interests and result in a massive misallocation of these individuals' investment and compromise and undermine their returns. We can't afford that at this time in this country when we have a massive personal savings crisis in this country. The job of a public corporation is to maximize returns for those middle-class savers. And if because of ESG requirements, companies go on a wild goose chase and go down a political rabbit hole and misallocate those resources to some politically correct cause, guess who that hurts? That hurts the middle-class savers of this country. So instead of politicizing these companies, let's focus on the owners of the companies, the middle-class Americans who need to maximize returns when they invest in these companies. And as I said before, the intention of focusing on climate change is maybe a very worthwhile cause, and it's something that Congress should be dealing with, and we should be focused on that. But we should not be forcing corporations to be enlisted on a compulsory basis into some political agenda. That's not their job, and that's not in their area of competency in many cases. And in the cases where it is in their area of competency, particularly energy companies, what we ought to be doing is we ought to be unleashing access to capital to those companies so that they can actually invest in technologies that will actually improve the emission standards and the way in which they produce energy. Depriving these companies of access to capital is the last thing you want to do if you really care about climate change. What you want to do is you want to unleash capital availability to these companies so that they can actually innovate. But instead, what we want to do is we want to just feel good. And we want to punish middle-class savers by misallocating or forcing companies to misallocate their resources and starve fossil energy companies the capital that they need to innovate and become cleaner companies. That makes no sense whatsoever. Everyone's a loser in that case, and that's why I urge everybody to support my amendment. Yield back.
There further debate on the amendment? If not, the question occurs on the amendment. All those in favor of the amendment say aye. Aye. Those opposed, nay. Nay. The nays have it. The amendment is not agreed to.
Recorded vote, please.
A recorded vote has been requested. All in favor of a recorded vote shall raise their hand and be counted. There is sufficient second, and a recorded vote is so ordered. Pursuant to Section C5 of Rule 3 of the committee rules, the vote on this question is postponed. Are there further amendments?
Madam Chair, I have an amendment at the desk.
The gentleman from North Carolina is recognized for 5 minutes. We'll pause while the amendment is being distributed.
They have it?
The clerk will report the amendment.
Amendment to the views and estimates of the Committee on Financial Services offered on matters to be set forth in the concurrent resolution on the budget for fiscal year 2021, offered by Mr. McHenry.
Without objection, the amendment will be considered as read. The gentleman is recognized for 5 minutes to support the amendment.
Well, thank you, Madam Chair. As I outlined in my opening statement, I think there's bipartisan concern about the nature of the Chinese regime and what they seek to do economically and militarily, globally. The harmful impacts they've had on human rights for their own people and for their neighbors. And so this amendment is about Chinese investment. And the language is simple. It really directly goes to U.S. sanctions policy and the CFIUS process, the Committee on Foreign Investment in the United States, reforms to that important law that we made through this committee. That was bipartisan in the last Congress and has had I think, positive impact on our foreign policy and our economic policy. And so what this amendment does is to say that should be the focus of our policy, is that CFIUS process and sanctions. And then when we get beyond that, much of the debate about investment in China or Chinese investment in the United States becomes quite difficult for us to have the proper nuance to affect good policy here in the legislative branch. We have set up a process in a bipartisan way. And so, for instance, our sanctions policy, we have a very solid process to sanction bad actors, whether they be Russian, Chinese, or a number of regimes around the globe, or individual actors that are seeking to do us harm. We also have export controls. We have really important pieces of law that we have honed. And what this amendment is saying is we should direct our attention to those processes so that we actually can have better policy in communicating to the marketplace. And we have the tools necessary to take on bad actors. So instead of the issue of export control, for instance, we have technology transfers that we limit to regimes that seek to do us harm. And we have that process in place, and we've had, I think, a thoughtful approach and thoughtful policy now. So this is also directed not just at the CFIUS process, the export control and sanction policy, but today we're also hearing new calls for expansive prohibitions on Americans' outbound investment in other countries, especially China, regardless of what the Chinese company does. Such a prohibition is even broader and far broader than the CFIUS ideas our committee rejected last year. And like those ideas, an investment ban ignores the fact that the U.S. government already has specialized authorities to go after Chinese entities aggressively. For example, if we don't want to export sensitive technologies, we can block a Chinese company through export controls, as I said. And if we don't want outbound investment from a firm, if we don't want inbound investment here in the United States from a firm, we can prevent it through the CFIUS process. And if we want to prohibit all business dealings with a Chinese entity, the Treasury Department has sanction authority. So we've dealt with this, I think, adeptly in smart policy. This amendment is directed to say that, yes, our view on China is that we should use those three sets of policy areas and get at it. Now, I also think it's important that whether it's for Democrat views and estimates or Republican views and estimates, that we should both include language that says that we have concern about China. We may disagree on how to do that, but what this amendment is trying to strike at is that we already have those laws that we've passed in a bipartisan way, and we should adhere to those laws in taking on bad actors, whether they be in China, Russia, other European or Asian folks, or anywhere in the globe in particular. So I would ask support of this amendment, and happy to talk with a majority in further detail. And with that, I yield back.
I yield to myself 5 minutes. I think that Mr. McHenry accurately described that this subject matter is bipartisan, and that we have worked for some time on trying to make sure that we have policies that are adequate. And I too am concerned about broad brush restrictions on outbound investment, and I tend to agree that they fail to prevent foreign capital flows to bad actors. I'm just wondering, if we take a look at this amendment, in the sentence that refers to broad brush restrictions, could we add the word also to the language that I think would make it even more comprehensive and stronger?
Will the gentlelady yield?
I yield to the gentleman from.
So the notes that we got, that staff shared, it would say, with respect to the People's Republic of China, the committee believes that flexible targeted sanctions are generally more appropriate, that is our language, generally more appropriate tools to change the behavior of Chinese entities than broad brush restrictions on outbound investment. What you all are proposing, what the majority is proposing, is it would say the committee believes that flexible targeted sanctions are also appropriate tools. That means it's additive. What we're trying to say is that it is more appropriate for us to use sanctions than it is broad brush restrictions. What you're saying it is also, I think it diminishes completely our intention and makes this a non-statement. And so I'm happy to work on other language if this is not. But I would reject the word also because it eliminates more appropriate. So that's my quick reading of it. It's something I'm happy for us to talk through at the staff level if there are other options here.
Reclaiming my time, would the gentleman agree that your reference to broad brush restrictions is what you are describing as not enough? That
yes.
There should be more.
More, yes.
And so the addition of the word also, with respect to the People's Republic of China, the committee believes that flexible target sanctions are also generally more appropriate tools to change behavior. So I don't think that diminishes it at all.
I'm sorry, then if the gentlelady would yield.
Yes.
If you just want to add are also generally more appropriate, the note we got back was striking generally more. So I don't know if this is a miscommunication.
I believe that adding also is what was intended.
Okay. So if generally would yield. So in your reading, the committee believes that flexible targeted sanctions are also generally more appropriate. I'm happy to accept the addition are between are and generally of the word also.
Yes.
Yes, and I'm happy to accept that language. I think that is more. I think it's quite acceptable. Additional, and happy to accept that language as a friendly amendment.
Reclaiming my time. I'm okay. I want to move on. I appreciate the gentleman's acceptance of the suggestion, and I think that it maintains your intent. And I would ask the committee members to support the amendment.
And if the gentlelady will yield.
I yield to the gentleman.
I thank you for, I think, what is a thoughtful amendment and a substantive of conversation on this. And so I thank the gentlelady, and I think it's a nice statement that we can both agree that we were unified to a certain degree about previous committee policy and our foregoing view of China, and I think that's a healthy thing. And I thank the chairwoman.
Is there further debate on the amendment? If not, the question occurs on the amendment. All those in favor of the amendment say aye. Aye. In the opinion of the chair, the ayes have it, and the amendment is agreed to. Is there further? Are there further?
Request, no.
Oh.
She accepted it.
Are there further amendments?
Move to strike the last word, Madam Chair.
Who seeks recognition?
Hill of Arkansas.
Gentleman from Arkansas. We will pause to allow copies of the amendment to be distributed. What is it? Strike the last word of either. The clerk will report the amendment.
Amendment to the views and estimates of the Committee on Financial Services offered on matters to be set forth in the concurrent resolution on the budget for fiscal year 2021 offered by Mr. Hill, page 14, line 14.
Madam Chair, I move dispensing the reading of the
Without
amendment.
objection, the amendment will be considered as read. Gentleman is recognized for 5 minutes in support of the amendment.
Thank you, Madam Chair, and I want to thank the good work of the bipartisan staff on this subject of the concern I have about making sure that the authorization of this Congress is completed for the International Finance Corporation. And in the ensuing few minutes, this amendment reflects some of the concerns that the chairwoman reflected. The initial amendment now says the committee supports the authorization of this multilateral agreement during this Congress, which is something that the chairwoman and I share as an important objective to meet the needs of our multilateral partners and the reputation of the United States in not holding up the IFC authorization. But I changed the amendment, Madam Chair, to include with appropriate reforms, and is encouraged by the progress that the committee is making with the Department of Treasury to mutually agree to such reforms. So I hope that's the kind of direction that the chairwoman was interested in order to recognize that she's working hard to, first of all, get this IFC authorization complete so that our international partners can fund the International Finance Corporation here sooner rather than later, but recognize the hard work and diligence that she's had in working with the World Bank and with the Treasury Department on the reforms necessary for the IFC.
Will the gentleman yield?
I would yield to the chair.
I'd like to thank the gentleman for his concern and his work in this area, and I do appreciate the fact that you offered wording would accommodate my concerns about continuing the ability to negotiate with the IFC for these reforms, and I'm appreciative. And this is the new language. If the gentleman would continue to yield time to me, the staff has reviewed the language, and the committee also notes the concerns of Oxfam International, which testified at a November hearing on these authorization requests, that reforms related to transparency and for-profit schools. And what is being suggested here is that, yes, we're accepting of the language that you propose, but we should also include this concern. And so if we could solicit your patience while we make sure that the language, your language and our language, is put together so that the concerns are recognized by both of us, I would appreciate it very much. And I yield back.
Well, I thank the chairwoman, and I would consider this language and look forward to seeing it in detail for your unanimous consent request to make that modification, but I would like to see it before I agree to it.
I think that is a fair request of the gentleman.
No, we're...
Come on. Is this all up?
He wants you to say this.
Then we said this.
Madam Chair, I've had an opportunity to review the language, and I accept these amendments to my amendment.
Thank you very much. I appreciate that. The gentleman has accepted the amendments to the amendments, and I suppose that we have to have it redrafted. Is that correct? Does it have? It does not have to be redrafted. Thank you very much.
So reclaiming my time, I would recommend the committee adopt my amendment to page 14, line 14, as with the changes suggested by Chair Waters.
Thank you very much. Is there further debate on the amendment?
And I yield back the balance of my time.
If not, the question occurs on the amendment. All those in favor of the amendment say aye. Those opposed? The ayes have it. The amendment is agreed to. Are there further amendments?
Madam Chair, I have an amendment at the desk. And I might add, the final
We will
amendment.
pause to allow copies of the amendment to be distributed. This is a big one. The clerk will report the amendment.
Substitution amendment to views and estimates for the fiscal year 2021 budget resolution offered by Mr. Patrick McHenry of North Carolina. Strike everything on line 1 and all that follows and insert the following.
Without objection, the amendment will be considered as read. Gentleman is recognized for 5 minutes in support of the amendment.
Well, thank you, Madam Chair. What we have before us is just the top line of what House Republicans would like to prioritize. As I said at the beginning, prioritize for our budget views and estimates. What you see here is a pretty straightforward set of language. We have disagreements on a number of issues between Republicans and Democrats on this committee. But as I outlined at the beginning in my opening statement, Democrat leadership here in the House of Representatives has already said we're not going to do a House budget resolution, failing to comply with the 1974 Budget Act. And that failure to offer a budget resolution makes this markup of budget views and estimates really a moot point. So rather than to put together a massive document to say that we have different views on budget views and estimates, I realize that since the budget is going nowhere because there will be no budget offered on the House floor, that we should just do the top line and we can have a discussion about some of these issues. We start by outlining economic growth. As I outlined in my opening statement, we've had a quite robust set of economic circumstances as a result of regulatory relief and tax relief that we passed last Congress, and the American people are benefiting from that. We believe that protecting our consumers is highly important, but we also need to ensure that we're fostering innovation so that financial products are commensurate and right with the needs of the people. We highlight that the committee believes that the CECL accounting standards will have an adverse effect on the cost and availability of credit, will have negative consequences. We further outline that we need to protect student borrowers. We've had that debate here in the committee, but I think it's important that student borrowers get protected as well from the adverse effects of bad federal policy that is foisting a generation further into debt in an unsustainable way. We also believe that we have to have accountability to the Consumer Financial Protection Bureau, and we need to strengthen our national security. And that means we need to ensure that not just what Mr. Hill outlined with international institutions, but also additionally with language on China and a more robust set of circumstances to combat terrorist financing. We need to make sure that our public markets remain the envy of the world, but we also need to ensure that the private markets that we can get folks out of the private markets and into the public markets. That means we need to have regulatory right-sizing so that we have more public offerings for average everyday investors to participate in. And that means we need better investment opportunities for average everyday investors so they can get the upside that is happening in our market over the last couple of years and more readily link labor with capital. That is the major debate we're having economically, on the debate between capitalism and socialism, as our colleague Roger Williams outlines in every hearing. But that larger debate about linking up average everyday people with the upside of our market, the upside of our economic growth, I think is a vital one. And then there are a number of other provisions we outline here, including protecting the nature of insurance markets and how they are regulated at the state level, that is a far healthier way to go about insurance regulation than having a one-size-fits-all approach at the national level. And highlighting the issues where I think we have some agreement, which is how we address homelessness in this country. The need to address homelessness is real, but how we do that, we have a debate between members of our committee and actually disagreements between the two parties. And how we further strengthen the housing market. The need for GSE reform is real. That is a great work left undone from the financial crisis, and we should be about it in this committee. So, outlined broadly the points that we would like to make in this budget and views debate that we've had here today. And while I know that the majority won't accept it, I think we can just outline broadly that we do have some disagreements on the approach here, and that is okay. I think we've had a healthy debate this morning on this, and I do appreciate the areas where we have found agreement through Mr. Hill's amendment, my amendment, Mr. Hill's amendment on an important international institution, and my amendment when it comes to China. And so there are areas of agreement overlap, but we want to highlight a few differences that we have on this side of the aisle. With that, urge adoption and yield back.
Further debate on the amendment? If not, the question occurs on the amendment. All those in favor of the amendment say aye. Aye. Those opposed, nay. Nay. In the opinion of the chair, the nays have it. The nays have it, and the amendment is not agreed to.
Ask for a recorded vote.
A recorded vote has been requested. All in favor, recorded vote shall raise their hand and be counted. There is a sufficient second, and a recorded vote is so ordered pursuant to Section C5 of Rule 3 of the Committee Rules. The vote on this question is postponed. If there are no further amendments, without objection, the previous question is ordered on the committee's views and estimates, and further proceedings on recorded votes are postponed. The chair now calls up H.R. 4351, the Yes in My Backyard Act of 2019. The clerk will report the bill.
H.R. 4351, a bill to require certain grantees under Title I of the Housing and Community Development Act of 1974 to submit a plan to track discriminatory...
Without objection, the first reading of H.R. 4351 is dispensed with. The gentleman from Washington, Mr. Heck, the sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed in advance or on the dais. The clerk will read the amendment.
Amendment in the nature of a substitute to H.R. 4351, offered by Mr. Heck of Washington. Strike all after the enacting clause and insert the following. Section 1, short title. This act may be cited as the Yes in My Backyard Act. Section 2, purpose.
Without objection, the amendment in the nature of a substitute will be considered as read and considered base text for the purposes of further amendment. I now recognize the gentleman from Washington for 5 minutes to explain the bill and his amendment.
Thank you, Madam Chair, and thank you again very much for scheduling markup on this important legislation. I want to preface my remarks by reiterating that which you've heard from me so many, many times in this committee. This nation is suffering from a severe housing crisis, a severe housing shortage, which particularly impacts people, frankly, of lesser income. The truth of the matter is that we're probably somewhere between 7 and 10 million units short in this country. The truth of the matter is that this shortage is what is behind driving up rents, which is causing more people to be rent burden. In fact, I believe it's accurate to say that at this point in time, there is literally not a single county in the entire United States of America where if someone were working full-time at a minimum wage job, could they afford a two-bedroom apartment? This also contributes, obviously, to increase homelessness. So above and beyond all else, what we need to do is increase the supply of housing in this country, and in particular, affordable housing. One of the ways in which we can do that is, frankly, to request of local municipalities that at the time they submit for a community development block grant, they must also submit their plan to track and report on the implementation of certain land use policies that, in fact, promote housing production. 7 to 10 million short. And obviously, solving the housing crisis is not going to be one of those endeavors that is going to be undertaken by just one of the levels of government. This is going to require local, state, and federal government to weigh in on multiple fronts, as a matter of fact. Local governments can and do regulate the housing, the zoning, and the land use policies. We should not do that at the federal level, but we should, I think, enable them to spotlight or highlight what it is they're doing in order to move forward. Let me be very clear. I don't want the federal government to engage in land use planning. Let me be equally clear that there is literally nothing in this bill that would result in a municipality being denied a CDBG grant on the basis of their reporting. It's merely a matter of transparency. And as I like to say and have for decades, sunlight is the best disinfectant. This is a bipartisan bill. I want to, in particular, thank my colleague from Indiana for joining me in sponsorship, but the rest as well. I want to make sure you all know that this enjoys very considerable support among a large group of organizations externally. These include the American Planning Association, the Congress for New Urbanism, Council for Affordable and Rural Housing, Habitat for Humanity International, Housing Advisory Group, Leading Builders of America, Manufactured Housing Institute, Mortgage Bankers, National Apartment Association, the Realtors, National Leased Housing Association, National Community Stabilization Trust, National Multifamily Housing Council, Prosperity Now, Real Estate Roundtable, Smart Growth America, YIMBY Action, and Up for Growth. That is an unusual coalition of interest which don't always agree on a lot else, but they understand fundamentally we have to increase the supply of housing if we are going to do anything, especially for those who are struggling to make their rent payments, and that this is one important, albeit incremental step in enabling us to do that. If you want to increase the supply of affordable housing, this must be a part of that strategy. So let me conclude by once again thanking the chair very much for her putting this up for executive action today, and extend my gratitude to all those on the other side of the aisle who joined so many of us on this side of the aisle in taking this important step. And with that, Madam Chair, I yield back the balance of my time.
Thank you. For what purpose does the gentleman from Ohio seek recognition?
Thank you, Madam Chair. I move to strike the last word.
The gentleman is recognized for 5 minutes.
Thank you, Madam Chair. I'll be very brief. I will not use 5 minutes. I want to thank Representative Heck for a very thoughtful bill and Representative Hollingsworth. This bill makes a lot of sense. You know, in Columbus, Ohio, Franklin County, Ohio, where I represent one of my 12 counties, we are already 54,000 units short of affordable housing. And I think we all know that, unfortunately, sometimes local policies can impact that. And I think this is going to do a great job of modifying the existing CDBG grant program to add more transparencies to what communities are doing to address the barriers to constructing affordable housing. I think Representative Heck has done a great job. I would urge our committee members to vote yes on this, and I thank the gentleman and Mr. Hollingsworth, who could not be here right now, for a very thoughtful approach. I yield back the balance of my time, Madam Chair.
Thank you. I recognize myself for 5 minutes. The United States is in the midst of an affordable housing crisis. According to the National Low-Income Housing Coalition, the U.S. has a shortage of 7 million rental homes affordable and available to extremely low-income renters. In my state, California, there's a shortage of 3.5 million homes to accommodate current and projected housing demand. The research organization Up for Growth estimates that from 2000 to 2015, the country underproduced housing by 7.3 million units. This underproduction is in many ways driven by land use policies that create artificial barriers to much-needed housing. H.R. 4351 is a step in the right direction as we seek to address the affordable housing challenges that our country faces. This bill would encourage localities to responsibly reduce barriers to housing development by requiring community development block grant recipients to track and report on the implementation of certain land use policies and promote housing development. This bill will also help shine a light on potentially discriminatory land use policies that unnecessarily prevent affordable housing development in certain neighborhoods. It is clear, based on the broad base of industry and advocate support for this bill, as well as the bipartisan support, that there is substantial agreement on the need to facilitate more affordable housing production across the country, as well as the need to responsibly reduce barriers to affordable housing production. I want to thank Mr. Heck and Mr. Stivers. This debate is a long time in coming, but I think there is recognition, not only by our advocates, by those who never engaged in the discussion about land use planning and what could be done to help to create more affordable housing. This is an important bill. This is an important discussion. And I think in the final analysis, everyone is going to be appreciative for the fact that we can begin to look at policies that have prevented us from producing the kind of housing that would eliminate homelessness and eliminate the problem of people who work every day but cannot afford to rent and cannot afford to own. I'm so appreciative for this work, and I certainly would ask all of my colleagues to support this legislation, this amendment, and I yield back the balance of my time. For what purpose does the gentleman from Tennessee seek recognition?
Madam Chair, I have an amendment at the desk.
We will pause to allow copies of the amendment to be distributed. We'll recess until. Okay, will do. We'll report the amendment.
Amendment to the amendment in the nature of a substitute to H.R. 4351, offered by Mr. John W. Rose of Tennessee. At the end of the amendment,
Without objection, the amendment will be considered as read. The gentleman will be recognized, from Tennessee, will be recognized for 5 minutes in support of the amendment.
Thank you, Chairwoman Waters. Let me start off by saying I support H.R. 4351 and thank my colleagues from Washington and Indiana for their work on this legislation. As we look for solutions here at the federal level to our affordable housing crisis, I believe it is important to look at policies across the board that may hinder the taxpayer dollars we allocate from going further and being used in a better way. One thing I have learned during my time here in Congress is that sometimes we can enact good policy on the one hand, but we can forget to remove some policies already in place that may prevent us from achieving our goals. H.R. 4351 seeks to do that. This bill is a strong step toward fixing some of the local zoning and regulatory issues that are slowing down the supply of housing and driving up costs, so that when community development block grant funds are dispersed, discriminatory land use policies and barriers don't stand in the way of achieving the goals of the CDBG program. And these are the ideas and the policies we should be able to encourage and seek on a bipartisan basis, regardless of whose name is on them. My amendment today would add a sense of Congress that affirms our support for the President's White House Council on eliminating regulatory barriers to affordable housing. It is absolutely worth recognizing that it was President Trump who took the first step in this area, and we should be able to give credit where credit is due. In June 2019, more than 2 months before H.R. 4351 was introduced, and recognizing that access to affordable housing has become far too difficult for many Americans, the President signed an executive order establishing the Council. To quote a few lines from the executive order on rising housing costs, open quote, "Hardworking American families struggle to live in markets where there is an insufficient supply of housing, even in markets generating a significant number of jobs. Low and middle-income Americans are often hit the hardest by regulatory barriers to housing development. High housing costs place strains on household budgets, limit educational opportunities, impair workforce development, slow job creation, and increase financial risks. To improve housing affordability in a truly sustainable manner, we need innovative solutions," close quote. The executive order goes on to establish that it will be the policy of the Trump administration to work with leaders across the spectrum to reduce regulatory barriers that artificially raise the cost of housing development and help cause the lack of housing supply. That is almost exactly what H.R. 4351 seeks to do as well. I know from the number of hearings we have had on affordable housing that there is broad bipartisan support for this policy. We've all been sent here by our constituents to work together to find solutions to the problems we face. I know my constituents in the 6th District of Tennessee are thankful for the leadership that President Trump and Secretary Carson have shown in this area, and I am too. I hope we are still able as lawmakers to support and encourage good policy regardless of who generates it. Whether you support the president politically or not, if you support the policies of this executive order, I urge you to vote yes on my amendment, and I yield back the balance of my time.
What is this? For what purpose does the gentleman from Washington seek recognition?
Move to strike last line.
The gentleman is recognized for 5 minutes.
I thank the chair. I also thank the gentleman from Tennessee on several levels, actually. I thank him for affirming the problem statement. As I've often said, the most important first step in our journey here legislatively is to share a sense of what the problem statement is. I as well thank him for affirming the intent and the language of the underlying bill. And I thank him for the spirit in which he offers this as continuing to make efforts to try to solve the very, very serious problem of housing affordability. That said, however, I am going to ask my colleagues to vote no. And I do so not in meaningful part because, frankly, I would have appreciated as somebody who's been working on this bill for more than a year, a little more advance notice to begin to incorporate the ideas of this amendment. The very first time I saw this language was literally a matter of seconds ago. But put that aside, because this isn't about personal considerations. It is, however, about what is in the best interest of the legislation. And as I indicated in my opening remarks, H.R. 4351 enjoys an unusual coalition of groups in support of it. I didn't use the word delicate, but the fact of the matter is this was a difficult conclusion to get to among so many groups that historically don't always agree on right approaches. And so the truth of the matter is that adoption of this amendment would not be in the best interest of 4351. And I'm a little hard-pressed to understand from a substantive standpoint what it would add to what 4351 would accomplish. And indeed, notwithstanding how characterized, in some quarters, the executive order reference, for example, was controversial. We've got agreement on 4351 among external stakeholders, and I think that there is substantial agreement, as indicated by the author of this amendment, internally on this. So my request is that you vote no in the best interest of the bill, which is in the best interest of us advancing the policy objective of creating more affordable housing in this way. I do so that with respect to the gentleman from Tennessee, but nonetheless ask you to vote no. And with that, Madam Chair, I yield back.
Is there further discussion of our amendments to H.R. 4351? If not, I recognize myself for 5 minutes. Members, we have a perfectly good bipartisan bill, and this amendment would undermine the bipartisan nature of this bill. And so I don't need to take up 5 minutes to just urge you to oppose this amendment so that we can pass this bill in a bipartisan fashion. Is there further debate on the amendment? If not, the question occurs on the amendment. All those in favor of the amendment say aye. Aye. Those opposed, nay. The nays have it. In the opinion of the chair, the nays have it.
Madam Chairman, I ask for a recorded vote.
A recorded vote has been requested. All in favor of a recorded vote should raise their hand and be counted. There is a sufficient second, and a recorded vote is so ordered pursuant to Section C5 of Rule 3 of the Committee Rules. The vote on this question is postponed. If there are no further amendments without objection, the previous question is ordered on H.R. 4351, and further proceedings on recorded votes are postponed.
Madam Chair, inquiry of the chair on today's schedule for members' knowledge.
Gentleman is recognized.
Well, if the chair would yield for a question about today's schedule, I think members were interested in when bills will be offered, as well as our expectations when we'll be in. I know we have floor votes in an hour or so on the House floor, and what is our expectation for the afternoon?
The committee will recess at about 12:30 and reconvene following the conclusion of the first series of floor votes to complete the markup of the bills that are left.
And with the chair will further yield. So the expectation is we're going to recess during the business day, but have to come back through the evening in order to deal with these votes. Is that the case?
Right after the floor votes. As I indicated, following the conclusion of the first series of four votes, we will be coming back to complete what amounts to 1, 2, 3, 4, 5 bills, 4 bills, 5. Thank you very much. The chair now calls up H.R. 149. H.R. 149, the Housing Fairness Act of 2020. The clerk will report the bill.
H.R. 149, a bill to authorize funds to prevent
Madam
housing.
Chair, I ask that the bill be considered as read.
Without objection, the first reading of H.R. 149 is dispensed with. The gentleman from Texas, Mr. Green, the sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed in advance or on the dais. The clerk will read the amendment.
Amendment in the nature of a substitute to H.R. 149, offered
Madam Chair, I
by...
ask that the amendment be
Without
considered as
objection, the
read.
amendment in the nature of a substitute will be considered as read and considered base text for purposes of further amendment. I now recognize the gentleman from Texas for 5 minutes to explain the bill and his amendment.
Thank you, Madam Chair. I thank you for your lifetime of commitment to ending invidious discrimination. I'd like to thank the ranking member for indicating at the genesis of this hearing that persons among us, all of whom I believe to be in the circumstance that he mentioned, are opposed to housing discrimination. I want to thank the staff and the many co-sponsors that we have for the legislation. This bill addresses a portion of the unfinished business of the civil rights, human rights movement. And on yesterday, we had a bill that dealt with lynching. And I was very pleased to see that the overwhelming majority of persons in this House voted to make lynching a federal offense. There were some who didn't, but the overwhelming majority did. Well, we need a predicate for what we're about to do. And that predicate is the fact that Newsweek did a testing investigation on November 17, 2019. It took about 3.5 years to complete, 240 hours of secretly recorded meetings. And here's what they concluded: that there is a 19% rate of discrimination against Asian Americans, 39% rate of discrimination against Latinos, 49% rate of discrimination against African Americans, and that the tool that can best be used to end this discrimination or deal with it was testing. They found that persons of color were refused service, that borrowers of color had fewer homes shown to them than their white counterparts, that inappropriate statements were made based on race, and that higher requirements on borrowers of color were placed on them as opposed to their white counterparts. All of this testing dealt with discrimination in housing. It was styled the Long Island Divide, the name of the report. This bill, Madam Chair and Mr. Ranking Member, amends Section 561 of the Housing and Community Development Act of 1987, which established the Fair Housing Initiative program that we call FIP at HUD. Interestingly enough, FIP was created by the Reagan administration to help families access free from discrimination and other forms of invidious behavior in housing, and to better understand the responsibilities under the Housing Fairness Act. This bill expands the nationwide testing program to detect and document differences in the treatment of persons seeking to rent or purchase housing or obtain or refinance a home or mortgage loan. It seeks to measure patterns of adverse treatment because of the race, color, religion, sex, familial status, disability status, or national origin of a renter, home buyer, or a borrower. It seeks to measure the prevalence and the nature of discriminatory practices across housing and mortgage lending markets. The bill designates this testing program as an eligible FIP activity. It is a bill that carries with it a $700 million price tag. I say that candidly, but I don't think that that is too much to deal with the type of invidious discrimination that we find in our housing market, $735 million to fund it over 11 years. I believe this bill will make a difference in the lives of people. It is a continuation of the unfinished business of the human rights, civil rights movement. The question that we confront today is not whether there is a way to deal with invidious discrimination. The question that we confront is whether we have the will to deal with invidious discrimination. My hope is that this bill will receive the same bipartisan support that the bill that we had on the floor yesterday received. I was very much buoyed by what I saw yesterday, and my hope is that yesterday's momentum will carry over to today. Again, It's not a question of whether we have the way to deal with this level of discrimination. The question is, do we have the will to deal with this level of invidious discrimination? With this, Madam Chair, I would like to announce that I have several documents that I'd like to place in the record. I have the report that I referenced, the Long Island Divide. I have a letter signed by more than 50 national and local organizations. I have a summary of support from more than 50 organizations. I have the National Association of Realtors letter. I have a letter from George Washington University Department of Sociology, and I have a letter from the Appraisal Institute, all of whom are in support of this piece of legislation. Time has come.
Without objection.
It is a bill whose time has come. I yield back.
I move to strike.
For what purpose does the gentleman from North Carolina seek
I
recognition?
move to strike the last word.
Gentleman is recognized for 5 minutes.
I believe this is a good faith effort put forward by Mr. Green to increase funding for HUD programs to uncover cases of housing discrimination. I'm concerned that simply increasing funding is not enough to dissuade bad actors or punishing localities that allow discrimination to transpire. I think that's what we should focus on. More importantly, it does nothing to compensate the actual victims of discrimination. In fact, the nonprofits that would get the funds would be the beneficiaries of the recovery of those funds. I think it should be the individuals that were harmed that should directly benefit as a result of the discovery of those discriminatory acts. So this legislation authorizes plenty of taxpayer funding to nonprofits, to advocacy groups, but absolutely fails to consider the victims, in my view. Instead of lining the pockets of nonprofits, Congress should be looking at real punishment for communities that do not enforce existing state or federal fair housing laws. Committee Republicans believe any type of discrimination should be uncovered and punished. Instead of asking for a blank check so organizations can uncover cases of discrimination, we need to look at the federal government's proper role in making sure that these crimes do not reoccur. And I think that is the direction we should be about. And I think there's an opportunity for us to have a bipartisan bill here, but what is being offered and the nature of how these monies will be distributed, I think that is an area that we have some disagreement. And so while we agree with the intent, I think we should go further and ensure that these monies recovered go right back to the very people that suffered the harm, the direct harm of these discriminatory acts, which has also been my longstanding view across the board for the recovery of funds, that it should go back to the people harmed directly rather than go to nonprofits who are trying to act in their stead, but to go to the actual individuals that suffered and were victimized through no fault of their own. And I think it's really important that we have proper enforcement of these very important laws that are groundbreaking, that took decades and decades and decades of work to ensure that are on the books. And we should have proper, tough, real enforcement, and then the recovery of those funds and the payment of those funds for those that did the harm, that did the wrong, should go directly to the people that they wronged, that they harmed. And so I think if we had a bill that did that before us today, I think you would see a unanimous vote, or I would hope it would be a unanimous vote. And so I agree with the intent. I do not agree with the structure created and outlined within this bill and the use of these monies. And so with that, I oppose it, and I know that committee Republicans will have amendments when we get to those, and would encourage members to consider those amendments so that we can actually have a bipartisan piece of legislation before us. And so with that, I yield back.
The committee
Madam
stands
Chair.
in recess.
Madam
So are you ready?
David. Sorry.
Are you ready? Prepare to offer your amendment. You're first up.
The committee will come to order. And let me just advise the members that we're going to move our bills and our amendments a little bit faster than we normally do. We have been waiting quite some time to get started, and our members on the opposite side of the aisle have voiced some concern about getting the committee started on time, both in the beginning of our meetings and when we come back from recess. And so they've been very patient, and so we're going to move them a little bit faster. I just wanted to warn you. So where are we starting here? For what purpose does the gentleman from Tennessee seek recognition?
Madam Chairwoman, I have an amendment at the desk.
We will pause to allow copies of the amendment to be distributed.
Brian, have you?
Thank you.
The clerk will report the amendment.
Amendment to the amendment in the nature of a substitute to H.R. 149 offered by Mr.
Without
Kosoff.
objection, the amendment will be considered as read. The gentleman from Tennessee is recognized for 5 minutes in support of the amendment.
Thank you, Madam Chair. And let me, if I can, start by thanking the sponsor of this bill, Congressman Green from Texas, for his work on this important issue. And I know that it's long been a priority for him. I think we all agree, frankly, that no one should be denied housing or access to a mortgage because of race, color, disability, et cetera. The bill as written increases funding by $735 million for the Fair Housing Initiatives program. My primary concern is that we're increasing funding to incentivize fair housing policies without any reforms to existing programs at HUD to address potential violations of the Fair Housing Act. This amendment will require HUD to suspend for at least 1 year any CDBG grants going to a locality or state that is determined via testing to have neglected enforcement of fair housing laws. As with any legislation, it's certainly our job to ensure the taxpayers' dollars are used appropriately and the localities are properly enforcing our federal and local housing laws. We can't expect localities to adequately carry out their responsibilities without proper incentives, but also consequences for neglecting their duty to enforce fair and equal housing. Currently, this bill contains no provisions to punish localities or states that allow discriminations to occur. Now, I think that most members of this committee would agree that additional funding should be tied to provisions and enforcement against local governments who fail in their oversight responsibilities. I don't believe that anybody on the committee believes that federal dollars should be used to further discriminatory practices at the local level, and that's why this provision is necessary. We'll hold localities accountable to ensure that fair housing laws are properly enforced. I do think this is a common sense amendment that will only strengthen the bill and give HUD the tools to better enforce its mission under the Office of Fair Housing and Equal Opportunity. I urge all my colleagues to support this important amendment. And Madam Chair, with that, I yield back the balance of my time.
Is there further debate on the amendment?
Green from
Gentleman
Texas.
from Texas seeks recognition.
I move to strike the last word. Madam
Gentleman
Chair.
is recognized for 5 minutes.
Thank you, Madam Chair. Madam Chair and members, this amendment would punish people who have had nothing to do with the activity that is found to be offensive. If the member is amenable to allowing the amendment to apply only to persons who participated in the activity, I would be amenable to having that discussion with him. But rather not have this discussion about everybody in a given city not being able to apply for grants.
Does the gentleman wish to enter into a colloquy for
I
the
do,
rest
Madam
of his
Chair. I would ask that I would yield to the gentleman for his response.
Thank you. I appreciate the gentleman for yielding. And I understand his argument, and frankly, I appreciate his argument. I do think rather than talking about punishing people, though, we're talking about holding these local entities and these municipalities accountable for, frankly, doing the right thing. And I do understand the gentleman's argument, but at this time, I don't think I can amend it in the way or manner that he's suggesting.
Let me ask, why would you want to hold people responsible who are not responsible?
I don't think it's, if I can, I don't think it's an issue of holding people responsible.
If I may, those were your words.
Well, I think it's holding the municipalities and the local governments and others responsible for making sure that they adhere to what they need to adhere to.
So you would hold the local government responsible for the invidious discrimination perpetrated by some real estate agent?
I think it's a question of holding those local entities responsible for enforcing their own laws and certainly federal laws.
Madam
Not
Chair.
to punish the individuals, but to make sure that these governments are accountable. And I think we've got an obligation
I'm going to
make sure that they
reclaim
do.
my time, Madam Chair. Madam Chair, I'm honestly, my patience is wearing thin. So I'll just simply say that I absolutely oppose this amendment. It makes no sense to hold responsible a municipality because of something that an agent who purveys real estate has done. That just makes no sense. So I will oppose the amendment.
Is there further debate?
And Madam Chair, if
on
I
the
may,
amendment?
since I have a little bit more time, let me do this. This is a Ronald Reagan bill for all practical purposes. Ronald Reagan gave us FIP, and the arguments that we're hearing now did not prevail then, and they should not prevail now. This program has been successful. This program has benefited many people. The entities that are working in the area, the not-for-profits, they're not making a profit. This is all about helping people who are being discriminated against. The victims are always made whole. Ronald Reagan thought that this was necessary because if not but for this program, we would have to have tax dollars going to HUD to implement a program of this type. And it just seems to me that we can strengthen the Ronald Reagan program. This is really about Ronald Reagan and his sense of fairness, and my hope is that my colleagues will at least acknowledge that it was a good program when Ronald Reagan proposed it. It has been good through the years, and we can strengthen it because the discrimination is not going away, has not gone away, and the report that I cited earlier from Newsday is a clear indication that it's needed. I will yield back the balance of the time.
Is there further debate on the amendment?
Oh, no, sorry.
I yield to myself 5 minutes. The HUD Secretary already has authority to withhold federal funding for jurisdiction that violate fair housing and otherwise enforce the Fair Housing Act. So this amendment is unnecessary. I yield back the balance of my time. Is there any further debate on the amendment? If not, the question occurs on the amendment. All those in favor of the amendment say aye.
Aye.
Those opposed, nay.
Nay.
In the opinion of the chair, the nays have it. The nays have it, and the amendment is not agreed to.
Madam Chair, I ask for a recorded
A
vote.
recorded vote has been requested. All in favor of a recorded vote should raise their hand and be counted. There is a sufficient second, and a recorded vote is so ordered pursuant to Section C5 of Rule 3 of the committee rules. The vote on this question is postponed.
Madam Chair.
Who seeks recognition?
Madam Chair,
For
Stivers.
what purpose does the gentleman from Ohio seek recognition?
Madam Chair, I have an amendment at the desk.
We will pause to allow copies of the amendment to be distributed. The clerk will report the amendment.
Amendment to the amendment in the nature of a substitute to H.R. 149.
Madam Chair, I move we dispense with the
Without
reading.
objection, the amendment will be considered as read. The gentleman from Ohio is recognized for 5 minutes in support of the amendment.
Thank you, Madam Chair, and I'll try to be brief. I appreciate the markup on this bill. I'd like to thank the gentleman from Texas, Mr. Green, for his offering of this bill. I think ending discrimination is a laudable goal, and I actually do believe that the program works. This amendment is pretty simple. It aims to add more transparency. This bill greatly expands the funding for the Fair Housing Initiatives Program, or FIP, under HUD. All this amendment does is require a little transparency. It requires the agencies that receive those grants to file a financial statement with HUD about how the money was spent. Transparency is good public policy, and it's important in our oversight role to have that kind of transparency. I don't think Congress would be doing its job if we had agencies spend money without any transparency. Again, this bill does not change any of the funding, does not take away funding, does not restrict funding. It simply adds a requirement for transparency about what the funds are doing. And I would hope the gentleman from Texas would be okay with it. I would hope the majority would be okay with it. I believe it's a common sense amendment, and I am open to, if there are concerns people have, I'm open to discussing it, but this simply just requires a report of transparency of how the money was spent. I yield back the balance of my time. I'd ask for support and yield back the balance of my time.
I'll yield to myself 5 minutes, and I will designate the time for Mr. Green to respond to.
Thank you, Madam Chair. May I ask my colleague kindly If I agree to this, would you support the bill?
Yes, sir. I will.
And if I agree to it only in circumstances wherein there has been found some discrepancy with the way the money has been spent, so that we would have reason to look into it and given entities books, as it were.
Does the gentleman yield?
Yes.
I would, so the problem with that is if you don't have the transparency, you don't know if the discrepancies exist. So I would prefer that the requirement for transparency exist either direction. And again, I'm prepared to support the bill if you would agree to that.
If I may reclaim, you're
may.
talking about more than transparency. You're talking about an intrusion into every aspect of the NGO's activities. And that in and of itself can create problems for the NGO. So why not have some probable cause, some reason to look into it?
Well, because these are taxpayer dollars and we want transparency around taxpayer dollars. And I'd be open to, I thought the amendment, and let me relook at it, I think it's just about the transparency of the taxpayer dollars. Is there something else in, oh, it's an audited financial,
Yeah,
got it.
It does. Let me reclaim my time.
Yes, sir.
I'm going to oppose the amendment because it seems that you're trying to get to things beyond which the dollars are intended to be utilized. So I will oppose the amendment.
Reclaiming my time. Is there further debate on the amendment? I yield back the balance of my time.
Can some,
Madam Chair, I move to strike the last word.
Gentleman is recognized for 5 minutes.
Thank
Mr.
you.
Huizinga.
And I will, I'll recognize my colleague from Ohio to respond to that.
thank you. I'm disappointed. I would have been open to a change, but I understand the concern of the gentleman. It's just that transparency is really important, and if we don't figure out how the money's being spent, I don't know how we can find the discrepancies. So, and this is taxpayer dollars, but I certainly, I'm disappointed, but I understand the gentleman is not going to agree. I was prepared to support the bill with this amendment. I just want to make that clear. I was trying to operate under good intentions. I yield back to the gentleman from Michigan.
Yeah, reclaiming my time, I guess I'm a little confused as to how my colleagues believe that we should have ongoing intrusive actions by government if it's a private entity, but if it's a nonprofit, then we have no business. A nonprofit that is receiving federal taxpayer dollars, then somehow we have no business in auditing that or making sure that these funds are being used properly. So, unless the gentleman has anything more from Ohio.
Would the gentleman yield?
I yield to the gentleman from Ohio.
I would ask everybody to look on page 3, because I think there might be some misunderstanding. Subsection 4 under line 3, the audited financial statement only pertains to the dollars used under this section. So it does not pertain to any other dollars of the organization. So I'm not trying to open up a bigger, I thought that's the way it was, but then the gentleman got me confused for a second. It does not pertain to anything other than the dollars used under this section. So I'm not trying to open up a view into the entire organization. It's literally only the taxpayer dollars that need to have some financial transparency under this proposed amendment. I yield back to the gentleman from Michigan.
Reclaiming my time, I'll
Yes.
recognize
Thank
my
you,
colleague.
because HUD already has a requirement that these dollars be spent for the intended purpose, and there are reports that are submitted to HUD. So this is going beyond what's required, in that you also provide for the dollars to go to victims of the housing discrimination and segregation, which already takes place. They have to be made whole. I don't see a reason for this. I will still oppose it.
Reclaiming my time, I'll give the gentleman from Ohio one last opportunity.
Well, I just don't understand why we'd oppose more transparency. I will try to work with the gentleman from Texas later and figure out if there's something we can do to provide more transparency that he does not think is onerous. But I will tell you, these are taxpayer dollars, and a little bit of transparency is the least we can ask for, in my opinion. And I do think that asking for an audited financial of those taxpayer dollars is an acceptable amount of transparency. I understand we may just disagree, but that's it's unfortunate. And I was prepared to support the bill if this amendment had been agreed to, but without this, I'm going to have a real trouble supporting the bill. I yield back to the gentleman from Michigan.
Reclaiming my time, and I yield back.
Is there further debate on the amendment? If not, the question occurs on the amendment. All those in favor of the amendment say aye. Aye. Those opposed, nay. In the opinion of the chair, the nays have it.
I'd like to request a recorded vote, Madam Chair.
The nays have it, and the amendment is not agreed to. For what
Request
purpose
recorded
does the
vote.
gentleman seek recognition?
Request recorded vote.
A recorded vote has been requested. All in favor of a recorded vote shall raise their hand and be counted. There is a sufficient second, and a recorded vote is so ordered. Pursuant to C5 of Rule 3 of the committee rules, the vote on this question is postponed. For what purpose does the gentleman from New York seek recognition?
Madam Chair, I have an amendment at the desk.
We will pause to allow copies of the amendment to be distributed. The clerk will report the amendment.
Amendment to the amendment in the nature of a substitute to H.R. 149, offered by Mr. Zeldin of New York. Page 4 of the amendment, strike lines 7 through 13, and redesignate the succeeding paragraphs accordingly.
Madam Chair, I move to dispense with the reading.
Without objection, the amendment will be considered as read. The gentleman is recognized for 5 minutes.
Well, thank you, Madam Chair. I have the honor of representing the 1st Congressional District of New York on the east end of Long Island. In addition to our magnificent beaches and vineyards and rich history, what makes our communities so unique is our wide breadth of diversity. But recently, our local hometown paper, Newsday, published an alarming report which documented widespread evidence that minority potential homeowners received disparate treatment and were steered towards certain neighborhoods on Long Island as they shopped for housing. There is no doubt that discrimination in any form is unacceptable, which is why Congress has worked hard to create programs like the Fair Housing Initiatives program at HUD, which funds local organizations through competitive grants in order to enforce the Fair Housing Act, educate the public and stakeholders on fair housing, and build capacity at fair housing organizations across the country. That's why we're here today, to build on that progress, but we must ensure we're doing it in a way that works for victims. Unfortunately, this bill is not yet there in carrying out this important mission. For example, this bill gives the compensation from a fair housing violation lawsuit to the lawyer and advocacy group more so than providing it to victims. That's why I'm offering an amendment to set up a victims' compensation fund to ensure that the victims of discrimination are the ones compensated, not advocacy groups or trial lawyers. Everyone on this dais should agree that discrimination in any form is wrong, and violations of the Fair Housing Act should be taken extremely seriously. The victims deserve direct compensation for violations, and I hope my friends on the other side of the aisle will agree. I urge a yes vote, and I yield back.
Madam Chair,
What purpose does the gentleman seek recognition?
to strike the last word.
The gentleman is recognized for 5 minutes.
Thank you, Madam Chair. Madam Chair, this amendment is very broad, and it requires that all proceeds be awarded to the victims. The process is such that these not-for-profits engage in litigation. The victims are made whole. There are attorney's fees, but these fees go to lawyers who actually earn them in court. I do believe this is appropriate. Otherwise, we would have HUD doing this, and they would have to have a battery of lawyers all over the country. The funds are going to the victims. I don't understand how this myth has been developed such that someone would believe that the victims are not made whole. This is a part of the litigation. The judges do this. The victims are made whole. So I would have to oppose the amendment.
Is there further debate on the amendment?
Madam Chair, move to strike the last word,
Gentleman is recognized for 5 minutes.
and I yield to my colleague from New York.
I thank the gentleman for yielding, and in response to the point that was just made by Mr. Green, I just want to point out that the purpose of creating the Victim Compensation Fund is to ensure that the awards are going to the victims, as opposed to going to the trial lawyers and those bringing the actions. If you go through the entire process and it's determined that the victim should be compensated, I would hope that it would be a strong, overwhelming bipartisan majority on this committee wanting to work together to ensure that that money gets to the victims and not the people who bring the suit. And it's just important to point out that the grant money that's being used to bring the action is already compensating them in this process. So that entity that brings the action on behalf of the victim is already receiving the funding needed to bring that action.
Would the gentleman yield?
Sure.
The grant money also...
Reclaiming my time, I'll recognize the
Ms.
gentleman.
Rising this time.
The grant money goes to the investigation. It goes to education so that persons will be aware of what their rights are, and so that those who engage in this process in an invidious way will be able to curtail their behavior. The money doesn't simply go to lawyers. If we've declined to allow lawyers to be compensated, you will kill the program. You won't have lawyers to litigate, and if you don't have lawyers to litigate, you don't get cases brought to court. This is the way the program has functioned since Ronald Reagan signed it into law, and it has been effective. I will yield back to the gentleman.
Reclaiming my time, I'm thrilled to hear my colleague so enamored with Ronald Reagan these days, but I'll yield to my colleague from New York.
Thank you to both of the gentlemen. I just want to point out in the underlying bill that we are here debating, there's a flaw that needs to be addressed, and it would make the bill better to ensure that money gets to victims. So the actual language of the underlying bill says, and if you look at page 4, lines 7 through 13, it says in subsection C, by adding at the end the following, quote, program earned income. No restrictions on the use of program earned income received by qualified fair housing enforcement organizations shall apply after the grant period for such organization ends, end quote. And the concern is with the way that the bill is currently drafted, that the money stays with the groups to use for whatever they want. It doesn't direct the group to provide the money to the victims. So I think that's just, it's something that we're concerned about as far as the current language of the bill, and I think it's something that we need to address to ensure that money actually, in fact, gets to the victims. And it's just not there yet, and I'd love to be able to work with the sponsor to get it there, but that's problematic language. I yield back.
Reclaiming my time, and with that, I yield back.
I yield to myself 5 minutes. The point of fair housing enforcement is to hold bad actors accountable for their actions. That is exactly what the Fair Housing Initiative program does. Through testing and investigations, The Fair Housing Initiative Program organizations work to uncover discrimination that is often hidden to the average home seeker, and then they work to obtain justice directly for victims of housing discrimination, both in terms of monetary relief and changes in policy and behavior of housing providers to prevent future discrimination. FHIP organizations are on the front lines of enforcing the Fair Housing Act, and without them, much more of the housing discrimination that occurs in America would go undetected altogether, and many more fair housing complaints will go uninvestigated and unresolved. Just last year, FHIP organization in Indiana obtained a settlement against a company over allegations that they targeted predatory rent-to-own products to Latino home seekers. This resulted in $395,000 paid directly to the plaintiffs. The very mission of FHIP is to make victims whole. By funding FHIP organizations, we are not only helping to uncover discrimination in the first place, we're providing direct monetary relief for the victims, and we're also preventing future discrimination. FHIP is a proven effective way to provide relief for victims of housing discrimination. I yield back the balance of my time. Is there further debate on the amendment? If not, the question occurs on the amendment. All those in favor of the amendment say aye.
Aye.
Those opposed, no.
No.
In the opinion of the chairs, the nays have it. The nays have it, and the amendment
Madam
is
Chair,
not
request a
agreed
recorded
to.
vote. Request a recorded vote.
The gentleman requested a recorded vote. A recorded vote has been requested. All in favor of a recorded vote shall raise their hand and be counted. There is a sufficient second, and a recorded vote is so ordered pursuant to Section C5 of the Rule 3 of the committee rules. The vote on this question is postponed. If there are no further amendments without objection, the previous question is ordered on H.R. 149, and further proceedings on recorded votes are postponed. The chair now calls up H.R. 5929, the Shareholder Political Transparency Act of 2020. The clerk will report the bill.
H.R. 5929, a bill to amend the Securities Exchange Act of 1934 to require reporting of certain expenditures for political
Without
activities.
objection, the first reading of H.R. 5929 is dispensed with. The gentleman from Illinois, Mr. Foster, the sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed in advance and are on the dais. The clerk will read the amendment.
Amendment in the nature of a substitute to H.R. 5929, offered by Mr. Foster of Illinois. Strike all after the enacting clause and insert the following. Section 1, short title. This act may be cited as the Shareholder Political Transparency Act of 2020.
Without objection, the amendment in the nature of a substitute will be considered as read and considered base text for the purpose of further amendment. I now recognize the gentleman from Illinois for 5 minutes to explain the bill and his amendment.
Thank you, Chairwoman Waters. Since the Supreme Court's decision in Citizens United in 2010, corporations have been allowed to spend unlimited amounts of money to influence American elections and affect policy outcomes. That decision rests on an assumption that there would be robust disclosures by companies so that shareholders could assess if those expenditures truly advance the corporation's interest or if they posed a risk to short or long-term shareholder value. Unfortunately, under current law, corporations are not required to disclose these political expenditures to shareholders. The Shareholder Political Transparency Act would try to restore a sensible balance to that equation by requiring public companies to submit quarterly reports to investors detailing the amount, date, and nature of the company's expenditures for political activities. If the political expenditure was made in support or in opposition to a particular candidate, or was made to a 501c4 or C6 organization, which does, then the company must also disclose the candidate and or organization. The bill also requires public companies to disclose in their annual reports any political spending over $10,000 in the previous year, as well as the nature and amount of any political spending the company plans to make in the upcoming year. This level of transparency has been supported by a wide range of investment industry professionals, by former chairmen of the SEC appointed by both Republicans and Democrats, and by a wide range of industry observers. These include John C. Bogle, the founder of Vanguard, former SEC Chairman William Donaldson and Arthur Levitt, and Leo Stein Jr., the recently retired Chief Justice of the Delaware Supreme Court, all of who have written in favor of the disclosure of political expenditures. I'm proud that my bill is also supported by groups such as the Council for Institutional Investors, CalPERS, Public Citizen, Common Cause, and End Citizens United Action Fund. This is a common sense bill that should not be controversial. In fact, prior to in the run-up to the decision on Citizens United, in the Supreme Court, those who advocated for unlimited corporate spending on politics said that that was fine as long as it was transparent. Then after the Citizens United decision came down, they immediately pivoted and said no, transparency was not even desirable. But transparency empowers investors' oversight of potentially risking spending and allows them to make sure that their money is not used to support candidates or causes that conflict with their beliefs or the beliefs of their customers, which can put shareholders' equity at risk. Companies that use political spending to benefit their bottom line should not oppose the disclosure of that spending. If the activity is truly beneficial to corporate value, then publicizing it should attract investors who agree with the strategy. But if that disclosure reveals political spending at cross purposes to the interest of shareholders or presents significant reputational risk, maybe not so much. And it is also clear that the market has been moving in the direction of more transparency. For example, shareholder proposals calling on companies to be honest about their political activity are one of the most frequently filed proposals every year, with 93 filed at the start of the 2019 proxy season. Not only that, shareholders are increasingly expressing an interest in investing in companies that meet certain ESG criteria, and their political behavior is at the heart of that analysis. Sustainable funds, which invest based on environmental, social, or governance themes, pulled in $20.6 billion in new money in 2019, according to Morningstar. That's almost 4 times the amount in 2018, which held the previous record. Furthermore, around 85% of investors are interested in ESG investing, which is up from 71% in 2015, according to a Morgan Stanley survey. And as ESG funds proliferate, investors and asset managers need to have a clear view as to the criteria by which companies are included or excluded from these funds, and this information will be critical to their analysis. Clearly, these metrics are influencing investors' decisions about whether or not to invest. As a result, many companies have recently become more transparent in their political spending disclosures. As of 2019, 316 companies in the S&P 500 reported to the Center for Public Accountability's Zicklin Index that they disclose some or all of their election-related spending, or that they simply just prohibit all political spending. 73 of these S&P 500 companies receive scores of 90% or higher, earning the designation as trendsetters. This number is up from 57 in 2017 and only 28 in 2015. All right, well, I hope we continue this discussion and urge my colleagues to support this.
I rise in support of H.R. 5929 and the amendment in the nature of a substitute thereof.
The gentleman moves to strike the last.
And I want to strike the requisite number of words.
The gentleman is recognized for 5 minutes.
Thank you. I applaud my colleague from Illinois, Mr. Foster, for his leadership that he has shown in introducing the Shareholder Political Transparency Act, and strongly support his amendment in the nature of a substitute and the ultimate passage of the legislation. As chairman of the Investor Protection, Entrepreneurship, and Capital Markets Subcommittee, I feel it's a responsibility to make sure that shareholders have adequate information about the public companies they invest in. This bill makes an important step in that direction by requiring quarterly reports to shareholders detailing the company's political spending activities. We know that this is interesting information. That's why people are opposing its disclosure. If a corporation spends tens of thousands or even millions of dollars on political activity, its shareholders deserve to know how their money is being spent. The current lack of information deprives shareholders of ability to adequately assess if these expenditures truly advance the corporation's interests or to adequately assess the risks that these political expenditures pose. They need to be able to decide whether these expenditures are being made in their interest or in the interests of some pet cause of management or the directors. I will add that this legislation is supported by many large shareholders, including CalPERS and the Council of Institutional Investors. I strongly urge my colleagues to support H.R. 5929 and this amendment in nature of substitute so we can deliver critical information to shareholders. Seeing that I have substantial time remaining, I would want to also comment on the next bill that we will be dealing with, H.R. 5930, and the amendment in the nature of a substitute to the Workforce Investment Disclosure Act put forward by our colleague from Iowa, Ms. Axney, and I commend her for introducing this legislation. The lifeblood of any organization is its workforce, but currently for shareholders, there's a serious lack of information on that workforce regarding the public companies they may invest in. The Workforce Investment Disclosure Act will work to solve this problem by requiring public companies to provide important new disclosures on their human capital. These disclosures would include the total number of employees, employee turnover rate, internal hire and promotion rates, and very importantly, information on workforce diversity. Also workforce skills and training metrics, workforce productivity, and several other important metrics. As chairman of the Investor Protection, Entrepreneurship, and Capital Markets Subcommittee, I take seriously the responsibility of this committee to provide investors with the information they need to make investment decisions. Studies have shown that organizations that have diversity at the top make better decisions and produce better profits for shareholders. Since 1998, firms in the European Union have been required to report their human capital investments in relation to salaries, bonuses, and other benefits. And I'll point out that while they're not required in the United States, 15% of the S&P 500 firms likewise provide that information. So we know it's practical, we know it can be done, we know if the Europeans can do it, we can do it, and we know that if 15% of the S&P 500 do it, then 100% of the S&P 500 can do it. I will note that this legislation is endorsed by Public Citizen and the Council for Institutional Investors and the AFL-CIO. I encourage all my colleagues to vote yes on the Workforce Investment Disclosure Act and the related amendment in the nature of a substitute. I once again commend our colleague, Ms. Axney, and I'll yield the last minute to anybody who wants it. Seeing none, I yield back to the chair.
The gentleman yields back. For what purpose does the gentleman from Washington seek recognition? Mr. Heck?
Thank you, Madam Chair. I yield to the gentleman from Illinois.
Thank you. I appreciate that. You know, as I mentioned previously, a majority of S&P 500 companies already disclose some or all of their election-related spending, or that they simply prohibit all such spending. 73 of those S&P companies receive scores of 90% or higher, earning a designation as trendsetters. This number is up from 57 in 2017 and only 28 in 2015. And I'm pleased to say that a number of those designated trendsetters include some of the largest banks, insurance companies, and financial institutions. But there's more that can be done to make sure there is a uniform, consistent, and comparable standard that applies equally to all public companies, and that's what my bill seeks to do. We want all companies to be on the same level playing field. And from a practical perspective, this information will not be costly or burdensome for public companies to produce. It's the type of information that is internally tracked by accounting and finance departments that keep track of these along with other expense items. And I will also note that for those who might say that the SEC could accomplish this by just completing a rulemaking if they thought this was important and material, the reality is that the SEC cannot. In 2011, a group of legal academics filed a petition asking the SEC to require corporations to disclose their political spending activities. The petition received 1.2 million comments in favor of such a rulemaking, the most in SEC history, but there has not been any rulemaking. In part, this is because there is a rider that was inserted in an appropriations bill a couple of Congresses ago, which has prevented the SEC from completing such a rulemaking. And that's why this bill is so important, and I'm proud to support it because I believe it will strengthen the ability of investors to make informed decisions and provide clarity and consistency to these disclosures. And as such, I strongly urge my workers to vote yes on the final passage of H.R. 5929, the Shareholder Political Transparency Act of 2020. And yield back my time.
I yield back.
For what purpose does the gentleman from Minnesota seek recognition?
I move to strike the last word.
The gentleman is recognized for 5 minutes.
Thank you, Madam Chair, and thank you, Mr. Foster, for introducing this important bill to shed light on what I consider to be one of the great threats facing our democracy, and that is money in politics. Like most members here today, I've been in the room where it all happens, a country club, a boardroom, or a conference room, where big political donors line up for cocktails and hors d'oeuvres. As a business person, I was invited to countless functions like these over the past 20 years, and with each invitation, my frustration and my disgust grew. That's why I came to Congress to fight corruption, put power back in the hands of people, and work for the common interests, not special interests. The Shareholder Political Transparency Act would take steps to these ends by requiring publicly traded companies to disclose their corporate political spending on a quarterly and annual basis. It would give investors the necessary information to adequately assess if a company's political investments truly advance the corporation's interests or, conversely, if they pose a risk. I submit to you that corporations conducting business in the public marketplace are not just accountable to the interests of their owners and shareholders, but have a moral imperative to consider the best interests of their employees, their customers, the environment, and the American public. Both shareholders and the public have a right to know how public corporations are influencing our elections and elected leaders. I believe influence should be earned by the size of our ideas and not by the size of our wallets. The Shareholder Political Transparency Act is one step in a long path to leveling the playing field and having Congress actually address the issues we should be focused on. I'm a proud co-sponsor of H.R. 5929, and I urge all my colleagues to join me in supporting this important legislation. With that, I yield back.
Mr. Chair, I have an amendment at the desk.
The gentleman seeks recognition for the amendment. We will pause to allow the copies of the amendment to be distributed. The clerk will report the amendment.
Amendment to the amendment in the nature of a substitute to
Mr.
H.R.
Chair,
5929.
I request that we suspense and move forward. Dispense with the reading of the bill.
Without objection, the amendment will be considered as read. The gentleman is recognized for 5 minutes in support of the amendment.
Thank you, Mr. Chair. H.R. 5929, the Shareholder Political Transparency Act, would require public companies to submit quarterly reports to both the SEC and investors detailing the amount, date, and nature of the company's expenditures for political activities. We know what the SEC is. We're not quite sure how they would do this with the investors, but if the political expenditure was made in support or in opposition to a particular candidate or was made to a trade association, then the company must disclose the candidate or trade association. The bill also requires public companies to disclose in their annual reports any political expenditures over $10,000 in the previous year, as well as the nature and amount of any political expenditures the company plans to make in the upcoming year. let's just call this bill for what it is. It's another way for my friends on the other side of the aisle to name and attempt to shame what they perceive as corporate villains, which seems to be the trend these days, and this bill is just one more example of political gadflies hijacking our securities laws in order to push non-material social and political policies. My amendment today is very simple and is intended to ensure that my Democrat colleagues provide a level playing field for political spending disclosures. My amendment simply states that this bill, 5929, will not become effective until my bill, H.R. 5959, the Union Member Protection Act, which I introduced this week, similarly becomes enacted. The Union Member Protection Act has similar findings to the findings of Mr. Foster's bill. That is, that labor unions make significant political contributions that affect elections, and that decisions to make these contributions are made by union leadership rather than the rank-and-file union members that they actually represent. It also says, and I think we all agree, that unions should work in the best interests of their membership. It also notes that union members who have not had to know, it also notes that union members have not had a way to know or influence the political activities of their leadership. In fact, we saw in Michigan recently, the UAW has seen a significant scandal that underscores the point that far too often leadership is not acting in the members' best interests. My bill would make union leaders more accountable to union members by requiring a secret ballot of union members to ensure that a majority of the union supports making planned political expenditures, which is a reasonable step that I would hope all of my colleagues support. Additionally, the Union Member Protection Act would put union disclosures on the same level playing field as the proposed disclosures in Mr. Foster's bill. That is, they would have to include in their reporting a description of the specific nature of any, quote, expenditures for political activities, close quote, that the union intends to engage in, and that the planned total amount of these expenditures. To be clear, this would level the playing field for the Democrats' proposed corporate disclosures under 5929 and the unions under my Union Member Protection Act, 5959. And we've heard very eloquently Mr. Foster talk about that things have been moving in the direction of more transparency. My chairman of my committee, Mr. Sherman, said that it's interesting info indeed. That's why people are opposed to the bill. We'll see if they're same-minded with my bill. Mr. Phillips just talked about common interests, not special interests. We'll find out whether this is really about common interests or special interests. So my bill would allow union members to assess whether they agree with the planned priorities of their leadership and allow them the opportunity to object if any intended spending is problematic or does not represent the interests of the union members. This is the exact same rationale for the Democrats' claim that we need these disclosure requirements for corporations. But union members are even more tied to the union than shareholders are to a corporation. So if anything, the rationale applies even more strongly in the union context. Given that, it seems that everyone, but particularly my Democrat colleagues, should support my amendment, which would ensure that the mandatory disclosures for both unions and corporations go into effect at the same time. It simply states that the effective date is the latter of either the enactment of Mr. Foster's bill or the enactment of my Union Member Protection Act, once both have been signed into law. The only reason I can see that any of our members would vote against this proposed change is if he or she fears union leadership is working in their interests and not in the interests of everyday union members. So I urge my colleagues to support this amendment, and I yield back the balance of my time.
For what purpose does the gentleman from Illinois seek recognition?
Wish to speak on the amendment?
The gentleman is recognized for 5 minutes.
Yeah, well, the first observation is that 5959 is actually outside the jurisdiction of this committee, but with that put to the side, unions are actually already subject to more stringent disclosure obligations than corporations. It's just that they are required to make those disclosures to the Department of Labor. Both unions and corporations have to report to the FEC any direct political expenditures made to finance independent expenditures and electioneering communications. In addition, federal law requires unions to disclose to the Department of Labor direct and indirect disbursements to all entities and individuals associated with political disbursements or contributions of money. These reports are available on the Department of Labor's website. Unions are required to report the money that they spend, not just in federal candidate elections, but also for state and local office, including judicial races. They are explicitly required to be transparent about spending to support or oppose ballot referenda or to influence legislation. In addition, they are required to report get out the vote campaigns, voter education campaigns, fundraising, and any politically related litigation expenses. And crucially, their donations to 501c4 groups, unlike similar donations by corporations, must be disclosed. So the field is already far from level, and my bill, without this amendment, would simply level the playing field. And yield back. So I oppose the amendment and yield back.
Gentleman yields back. Is there further debate on the amendment? If not, the question occurs on the amendment. All of those in favor of the amendment, say aye.
Aye.
Those opposed, nay. No. In the opinion of the chair, the nays have it. The nays have it, and
Mr.
the
Chair, I
amendment is not
request the
agreed
yeas
to.
and nays.
A recorded vote has been requested. All in favor of a recorded vote? Gentleman shall state his point of order. One-fifth of the members to the committee. A recorded vote has been requested. Again, all in favor of a recorded vote shall raise their hand and be counted. There is a sufficient second, and the recorded vote is so ordered.
Because we've been sitting around for 4 hours, waiting for you guys to get a majority.
Committee will come to order. Pursuant to Section C5 of Rule 3 of the committee rules, the vote on this question is postponed. For what purpose does the gentleman from Wisconsin seek recognition?
Mr. Chair, I have an amendment at the desk.
We shall pause to allow copies of the amendment to be distributed. The clerk will report the amendment.
Amendment to the amendment in the nature of a substitute to H.R. 5929, offered by Minister Style of Wisconsin. Page
Without
6.
objection, the amendment will be considered as read. The gentleman is recognized for 5 minutes in support of his amendment.
Mr. Chairman, investors should have the information they need to make informed decisions with confidence. Materiality is an essential aspect of the reporting regime that underpins our confidence. My amendment simply ensures that this bill is consistent with this touchstone security law principle. As Ranking Member McHenry said earlier, this bill does not seem like it is intended to better inform shareholders or those considering investing in a public company. My amendment will ensure that the disclosures required under this bill are useful for investors and aren't just a tool to name and shame disfavored businesses. To me, it's a common sense amendment that right-sizes the disclosures to the appropriate bounds of established securities law. My amendment will get the Securities and Exchange Commission back squarely into the appropriate zone that is assessments of materiality, instead of going outside its expertise by forcing SEC bureaucrats to make political judgments for all political companies. Under my amendment, a public company will be required to make a disclosure if that information is material to the average investor. I urge my colleagues to support this simplistic amendment, and I yield back.
The gentleman yields back. For what purpose does the gentleman from Illinois seek recognition?
To speak on the amendment.
Gentleman will strike the last word and is recognized for 5 minutes.
Let's see. Yeah, move to strike the last word.
Gentleman is recognized for 5 minutes.
All right. So this is my understanding what this amendment would do. It would put the SEC in the position of deciding what the response, the political response of the customers of a company would be to the discovery of a political spending. You know, there are many instances where the political actions of individuals and companies trigger a very strong response of customers. And depending on the nature of that, that could really affect the shareholders' equity. And so that someone in this, either you're going to simply say that any political spending is material, or someone like the SEC is now going to have to decide how offended the customers might be to some political spending by the company. It seems like you're putting a tremendous new burden of psychoanalyzing the whole customer base of any company onto the SEC when they are the ones that have to decide how violent the customer response might be to this. And you're really putting an enormous burden on the SEC that I think is unwise and doesn't really contribute anything to the functioning of our democracy. So I urge my colleagues to vote against this and yield back the remainder of my time.
Is there further debate on the amendment? The gentleman, Mr. Taylor, is recognized.
Thank you, Mr. Chairman. I'll just say, as a consumer of investor information, materiality is really important. I mean, if you're reading a stack of reports that's big and tall and cumbersome, knowing that a bunch of data in there is not material is sort of upsetting to me. But that's just me, because I read those. I take the time to read those. I think that what we're trying to do here is make sure the information that goes to investors is indeed material. And by asking for information that's not material, it's extraneous. And extraneous material is necessarily wasteful and I think injurious to the investors. Investors deserve to have material that they know is relevant. And I think that standard that Mr. Stile was recently referring to is very germane. I yield my time to my colleague from Wisconsin.
I appreciate my colleague from Texas, and I would reiterate that the current legal standard at the SEC is materiality. So what this does is continues the current analysis and current legal framework that we have at the Securities and Exchange Commission. The company, any company, will always make a determination as to what is and what is not material, what should and should not be reported by the guidelines of the SEC. That would continue as it does today. So it's not a change or a different standard of materiality than we have currently in our SEC language. I think it would just remove extraneous and additional reporting requirements that I don't view as helpful for investors to have the information they need to make informed decisions with confidence. I yield back to my colleague from Texas.
Mr. Chairman, I yield back.
Gentleman yields. Is there further debate on the amendment? If not, the question occurs on the amendment. All of those in favor of the amendment, say aye.
Aye.
Those opposed, nay. In the opinion of the chair, the nays have it. The nays have it, and the amendment is not agreed to.
Request a recorded vote, the yeas and nays.
A recorded vote has been requested. All in favor of a recorded vote, raise their hand and be counted. There's a sufficient second, and a recorded vote is ordered. Pursuant to Section C5 of Rule 3 of the committee rules, the vote on this question is postponed.
Mr. Chair, I do have a move to insert into the record a couple of letters of opposition.
The gentleman is recognized.
Thank you. First is a letter from the National Association of Manufacturers in opposition, a letter of opposition from the U.S. Chamber of Commerce to 5929, as well as a letter of opposition from the American Securities Association.
Without objection, they are received. If there are no further amendments, without objection, the previous question is ordered.
Chairman, strike last word.
The gentleman is recognized for 5 minutes.
Thank you, Mr. Chair. So let me be clear that this is nothing short of an attack on the Supreme Court's 2010 decision in Citizens United versus the FEC. It's a blatant attempt to silence the business community's voices in political and public policy debates using excessive disclosure requirements to shame them. Don't be fooled. This vote is not about protecting consumers. It's merely another attempt to use federal securities laws to glean information in an attempt to advance other interests through name and shame tactics. This bill is a solution in search of a problem. From 2010 to 2019, of the 510 political and lobbying spending disclosure proposals submitted to Fortune 250 companies, only 2 have ultimately received majority support, and that's less than 0.5%. Additionally, in 2019, support for these types of proposals only averaged about 32%. It's only grown increasingly clear that the vast majority of shareholders are not in favor of these types of disclosures. And if given a chance, they would oppose them. The irony of all this is that companies are already required to disclose when they make political contributions. Any additional disclosure mandates would add additional cost to public companies, which is contrary to our goals of increasing the total number of public companies and IPOs. Congress needs to be helping everyday investors, and the best way to help them is by making our public markets healthier and more competitive. More robust U.S. capital markets will encourage growth, which will lead to more investment opportunities and more choices for everyday investors to grow their savings. Instead, we're focusing on legislation that will increase barriers to capital formation and discourage companies from joining or remaining in our public markets, ultimately hurting the Main Street investor every single day. Something we should ponder for a moment is who really is asking for these disclosures and who really is the beneficiary of these burdensome and intrusive requirements. It certainly is not the majority of shareholders. I yield back.
There are no further amendments. Without objection, the previous question is ordered on H.R. 5929, and further proceedings on recorded votes are postponed. The chair now calls up H.R. 5930, the Workforce Investment Disclosure Act of 2020. The clerk will report the bill.
H.R. 5930, a bill to amend the Securities Exchange Act of 1934 to require issuers to disclose information about human capital management in annual reports and for other purposes.
Without objection, the bill, first reading of H.R. 5930, is dispensed with. The gentlewoman from Iowa, Ms. Axney, the sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed in advance and are on the dais. The clerk will read the amendment.
Amendment in the nature of a substitute to H.R. 5930, offered by Mrs. Axney of Iowa. Strike all after the enacting clause and insert the
Without
following.
objection, the amendment in the nature of a substitute will be considered as read and considered base text for purposes of further amendment. I now recognize the gentleman from Iowa who offered the amendment.
Thank you, Chairman. 45 years ago, more than 80% of the S&P's 500 market value was
Does the
accounted.
gentlelady have an amendment at the desk?
Yes.
We will pause to allow copies of the amendment to be distributed.
He handed them out. What? He just said he handed them out. Okay.
The clerk will report the amendment.
Amendment to the amendment in the nature of a substitute to H.R. 5930, offered by Mrs. Axney of Iowa. Page 2, line 14.
Without objection, the amendment will be considered as read. The gentlewoman from Iowa is recognized for 5 minutes in support of her amendments and the bill.
Thank you, Chairman. 45 years ago, more than 80% of the S&P 500's market value was accounted for in the company's tangible assets like factories and machinery. Times have changed, and now, however, that's been reversed. Less than 20% of the market value is tangible assets, and last year, companies' intangible assets were valued at more than 5 times the tangible assets. And that fits because virtually every company I meet with, and I'm sure most folks in here, tell them that their people are their greatest asset. However, investors have extremely limited information about a company's workforce, even though it is their greatest asset. The value of this information is very clear to investors, which is why they're consistently asking for more information about how a company is thinking about their workforce, the skills they need today, and how they'll be better prepared for tomorrow. My bill, the Workforce Investment Disclosure Act, would require that public companies disclose information about their human capital management in their annual report. That disclosure would include information about workforce stability, like employee retention and promotion rates, skills training and employee development programs, so that investors can assess if companies are preparing their people for the future, workforce health and safety, workforce culture, including information about employee engagement, and workforce compensation, including how that is aligned with performance. Investment in a company's workforce has shown to improve long-term performance. In fact, SEC Chairman Clayton said just last year that human capital and intellectual property often represent an essential resource and driver of performance for many companies. Further, research from the Embankment Project on Inclusive Capitalism, a partnership between asset managers directing $30 trillion and several large corporations, found that U.S. companies that disclose their total human capital costs outperform those who don't. And this is an area where, unfortunately, the U.S. lags far behind Europe. European companies have been required to disclose their total costs for more than 20 years and are moving quickly to adopt more robust disclosures. Investors like BlackRock and State Street are making it clear they want more information, and I don't think anyone here wants a world where investors are choosing to invest in European companies over American ones. Now, I'm sure some of my colleagues will say this is just another requirement on public companies and that this is going to be a burden for making them public. Well, I simply don't see that. I don't see where this is nearly as big a burden as my colleagues may, and maybe that's because of my background. For those of you who don't know, I spent my career doing exactly this kind of work, helping both the state of Iowa and Fortune 1000 companies think about organizational development and strategic planning. It's something that companies are already doing, they're already working on it, and really the very best companies are the ones who are doing the most on this. Companies are already working with information like what we're asking for in my bill because they know the value that it brings to them. And that's why MBA programs like the one I went to at Northwestern focus on this. And it's why major investors like BlackRock and State Street are looking for this information because they know it's absolutely a critical driver of company performance. Let's look at a recent example of the importance of disclosure. The required disclosures before WeWork went public not too long ago saved investors $40 billion. These disclosures matter because they protect investors. I've heard so many people here talk about how to make sure companies are thinking about long-term success rather than short-term profits, and I completely agree. And that's why these investors want that information. We've got a chance here to make the U.S. a leader in helping investors understand the long-term prospects of the companies they're investing in, and by the way, helping companies perform at higher levels. I want to take this opportunity to bring some transparency to our markets about how companies think about what they view as their very most important asset. I urge a yes vote, and I yield back the balance of my time.
Is there further debate on the amendment?
Mr. Chair, I move to strike the last word.
The gentleman is recognized for 5 minutes to strike the last word.
Thank you, Mr. Chair. This bill deals with two important aspects of being a public company: human capital management and annual public disclosures for investors. Human capital investment is important to the success of any business, and in order to be successful, a company must continually invest in its workforce. Likewise, digestible and comparable public company disclosures are important for providing clear and helpful information impervious to wild misinterpretations to everyday investors considering investing in that company. Well, this bill unfortunately achieves neither one of those. In fact, it does the exact opposite. It will require companies to spend their capital on regulatory attorneys and accountants instead of reinvesting in their workforces. And the bill will produce disclosures that not only provide confusing and misleading information to everyday investors. Allow me to give you just a few examples of problematic aspects of the bill. This bill requires companies to disclose information on their workforce diversity, such as race, gender, and ethnicity. However, the bill does not explain how companies will be required to collect this information from employees, or if it's to be provided by employees on a voluntary basis. This lack of clarity and concern of potential violating employee privacy and anti-discrimination laws will certainly lead companies to hire attorneys to navigate this disclosure piece. This bill also requires companies to disclose information on policies and practices related to how sustainability is considered for decisions on compensation and promotions. I honestly don't know what this bill means by, quote, sustainability, or what it has to do with a company's compensation and promotion policies. Chances are everyday retail investors will be just as confused as I am. And I know I don't have my MBA, I just run a small family business, third generation, and have started a couple of businesses. So I don't think it's referring to retention, because that's a separate requirement in the bill, but I'm not sure. It does mean, does it mean that an employee's carbon footprint should be a factor in their compensation structure? A bunch of lawyers and accountants will get paid a lot of money to figure that one out. Another curious and misleading disclosure item under the bill relates to data on the amount of fines and actions brought against the company under the Occupational Safety and Health Act, the OSHA Act. This disclosure piece is concerning because it discriminates against those companies with predominantly U.S.-based employees subject to OSHA over those companies with mostly overseas workforces not subject to OSHA. The number of OSHA fines and actions will be higher for those companies with more workers located in the United States versus companies with very few workers in the United States. Why? Because we're subject to OSHA and they're not. This will open the door to unfair mischaracterization that companies reporting a high number of OSHA fines and actions aren't maintaining safe working environments for their employees. On top of diverting capital and resources away from the company's actual workers in order to pay compliance attorneys and accountants, this bill's disclosures won't provide meaningful or helpful information to everyday investors. Instead, everyday investors hoping to find useful information for evaluating companies to invest in will be left with incomplete and misleading information. If you want to foster a workforce investment, you don't achieve that by making companies hire more attorneys and accountants. That is, unless there's a workforce you actually care about investing in. My colleague from Iowa had said it'd be a shame if we had these institutional investors deciding to invest in companies outside of the United States and in Europe. Well, first of all, those massive, sometimes in the amounts of trillions of dollars of investments, they already are. And by the way, what they're actually basing their investments on are quarterly and year-end returns. That's going to dictate where and in which companies they're going to actually invest. So I oppose this legislation, and I yield back the balance of my time.
For what purpose does the gentlewoman from Massachusetts seek recognition?
Thank you, Mr. Chair. First, I want to thank my good
Does the
friend.
gentlelady's desire to strike the last word?
I'm sorry, yes, move to strike the last word.
The gentlewoman is recognized for 5 minutes.
Thank you, Mr. Chair. First, I want to thank my good friend from Iowa for lending her lived experience and expertise to this committee every day. Thank you for your continued leadership on issues of workforce development and investment. And I thank Chairwoman Waters for creating our diversity and inclusion in a subcommittee, a first, a historic first, and Chairwoman Beatty for her leadership and chairing that subcommittee. And on that subcommittee, our own reporting demonstrated how much work our nation's banks still have to do when it comes to D&I. And I appreciate the opportunity on this committee every day and through this proposal to raise our expectations when it comes to issues of D&I. Now, to be clear, this is not about simply checking boxes or reaching an acceptable ratio. It's about recognizing the value of diverse talent and extends to companies' bottom line as well. A recent Boston Consulting Group study found that greater diversity in leadership teams leads to more and better innovation and improved financial performance. Companies which reported above average diversity on their management teams had innovation revenue that was almost 20% higher than companies with less diverse management teams. This is a question of ROI, of return on investments. If we know that greater diversity in leadership produces greater returns, then what companies are doing to ensure a steady pipeline of that talent is material information. And might I add, it also lets us know if we're making progress in addressing income inequality and the racial and gender wealth gap, wage and wealth gap. That is why it is so important for this data to be disaggregated on racial, gender, and ethnic lines. Representation matters, but promotions matter even more. Promotion rates are only valuable to the extent that we know who is most likely to be hired, provided opportunities to move up, and rewarded and compensated for their work. What are companies doing to build and maintain talent pipelines? What are they doing to ensure continued opportunities once people are hired? Representative Acme's Workforce Investment and Development Act helps investors answer those questions and protects their investments, and I urge all of my colleagues to support this legislation, and I yield the balance of my time to Rep. Axne.
Thank you, Ms. Presley. And Representative Huizenga, I appreciate what you have to say, but basically most of what you said really is incorrect when it comes to addressing the issues of human capital within businesses. I, too, am a small business owner. My husband and I own a business. I also had another one previously. So not only have I worked in Fortune 1000, I've consulted with small business, I've ran workforce planning for the state of Iowa, and did this in several large companies as well. The information is being gathered. It really doesn't matter how the information is gathered. It's a matter of measuring the metrics at the end and being able to look at those over a series of years to see how a company's moving in the right direction or in the wrong direction to improve their revenue and, of course, in the opportunity for their investors to do better. So the information is already being gathered. It's being used in the best of companies, and it's for their investors to access. So this is not a burden. It's not something that's difficult for companies to wrap their arms around. The best of companies are doing it. The issue is really just measuring year to year. And the fact that we have moved into a service economy and a talent economy where our intangible assets literally are the most important aspects of measuring a business's opportunity, the fact that you don't want to measure those strikes me as quite odd, given the fact that I know you're a capitalist, as I am, and we want to support business growth. This is what will help our businesses be more successful. It's why we are talking about and why we have programs within the best business schools in the country across the board that deal with this. It's why folks in the capacities that I ran, organizational development and strategic planning, are at the helm of almost every major corporation involved in all of their operations and their revenue-generating sales processes. So that's why it's so important that we have this included.
Will the gentlelady yield for a question?
Yes.
So if it's that valuable and important, why must the federal government compel companies to do this rather than them doing it voluntarily?
Because there are companies who aren't doing this because they don't understand possibly the value. They haven't been informed about it. And they need the information from other companies who have said, yes, this is value added. So I don't think it's a matter of the fact that the government's pushing something down on them. I think it's a matter of fact that I understand how businesses work. I get you do too. And certainly in small businesses, folks are very busy.
Gentlelady's time has expired.
And in large businesses, they are as well. In many cases, they haven't gotten to this point yet.
Gentlelady's time has expired. For what purpose does the gentleman from Arkansas seek recognition?
Mr. Chair, I move to strike the last word.
The gentleman is recognized for 5 minutes.
Thank you, Chairman. I want to thank the gentlewoman for her work on this legislation. I've been an employer and a CEO of businesses, and I've also run for a public company, human resources and compensation for that business for many years. So I understand the value of designing programs and plans for human capital and strategic planning around that, and also having competitive recognition for having good human relations in a business. That's certainly all very, very important. But I'm concerned about several aspects of this proposal. The bill proposed to require public companies to disclose risks related to this list of human capital management issues that are proposed. And as I've said many times in this hearing room, if these risks are material to the operation of that business, then they're already legally required to be disclosed. If the board members of a company who have a fiduciary responsibility to all the investors don't believe these risks are material to the company, then the Congress should not mandate that this information suddenly is material. We continue in this committee to mark up and pass legislation that creates public disclosure mandates that are costly and burdensome for companies. Just recently in this committee, we've already passed 6 bills that create new disclosure mandates for public companies: a Climate Risk Disclosure Act, an ESG Simplification Act, Outsourcing Accountability Act, Ensuring Diverse Leadership Act, Improving Corporate Governance Through Diversity, and Corporate Management Accountability Act. All these put new reporting requirements on public companies. As policymakers, we need to create an environment where we encourage companies to be public. Many members on this committee on both sides of the aisle have lamented the decline in public companies. There are fewer than half the public companies in this country than in 1980. And these types of bills are only doing the opposite, and they are inhibiting our companies and hurting retail investors. This legislation has an extraordinarily long list of requirements that a company must disclose related to human capital. And I asked my colleagues, I hope you've all read this list of items in this bill. I hope you have not simply abdicated reading this list that would be required of every public company to publish statistics on year after year, and balance that with an investor's need versus simply what an HR department should be doing to have a competitive environment for recruiting employees, training employees, motivating employees, enhancing employees' opportunities to move up the ladder, and having a sustained relationship with the company. These are many internal great best practices, but they don't merit materiality standards of coming into a public disclosure. Many of these requirements are qualitative and don't have clear definitions and could be difficult for a company to report in a consistent way in a public document. Some of the more difficult challenges include work-life balance initiatives, information related to employee engagement and psychological well-being, information related to how performance, productivity, and sustainability are considered when setting pay and making promotions, information related to the quality, quote unquote, of new hires, information related to the frequency, severity, and lost time due to injuries, illnesses, and fatalities. When I might note that in already public companies report to the Department of Labor OSHA injury reporting requirements, annual refiling surveys, unemployment reporting, all affirmative action plans, and annual requirements. States already require new hire monthly reporting. The Department of Homeland Security requires all validation of employees are eligible to work in the United States. The Equal Opportunity Employment Commission requires an annual reporting requirements and reporting on Veterans and Americans with Disability Act compliance. So in my view, Mr. Chair, this legislation will hurt capital formation, forces Congress to determine important business decisions that should be left up to management teams and boards of directors, and increases compliance costs. And I think it's bad public policy, and I urge my colleagues to vote against it, and I yield back the balance of my time.
Is there further debate on the amendment?
Mr. Chairman.
The gentleman from Pennsylvania, does he just? The gentlewoman from Pennsylvania, do you desire to strike the last word?
Yes, Mr. Chair. Move to strike the last word.
You're recognized for 5 minutes.
Thank you very much. I rise in support of this smart legislation. As I was reading it in preparation for this hearing, I kept thinking of the smart companies that welcome the assessment of the information that is asked for in here and the disclosure of it, because they know that their human capital is their greatest asset. I sit on the Diversity Inclusion Subcommittee, chaired ably by Representative Beatty, and we heard in recent hearings how behind financial institutions and other enterprises are in actually assessing their own diversity and inclusion, even though smart companies recognize the economic engine that is diversity within the workforce. So this bill, which requires disclosure of the human capital, is not only good for business, it's also good for the investor, who wants to know how businesses are operating, what are they doing in terms of workforce demographic information, stability, diversity, skills and capabilities, culture empowerment. I think it's really smart legislation. I look forward to voting yes on it. And with that, I yield the remainder of my time to the gentlelady, the author of the bill from Iowa.
I yield the balance of my time. Thank you.
Is there further debate on the amendment? If not, the question occurs on the amendment. All of those in favor of the amendment say aye. Those opposed, nay. In the opinion of the chair, the ayes have it. The ayes have it, and the amendment is agreed to.
I have an amendment.
For what purpose does the gentleman from Wisconsin seek recognition?
Mr. Chairman, I have an amendment at the desk.
We will pause to allow copies of the amendment to be distributed. The clerk will report the amendment.
Amendment to the amendment in the nature of a substitute to H.R. 5930, offered by Mr. Style of Wisconsin. Page 5, line 16, strike the quotation marks.
I move to dispense with the reading.
Without objection, the amendment is considered as read. The gentleman from Wisconsin is recognized for 5 minutes in support of the amendment.
Thank you, Mr. Chairman. At the beginning of this, my colleague from Iowa mentioned that some might have an objection that this is just another burden on public companies. I couldn't agree more. I think my colleague, Mr. Hill from Arkansas, pointed out quite well how that could be the case. I think then we dove into a debate as to whether or not it was a good idea or a bad idea to require reporting on things such as work-life balance initiatives, fostering a sense of purpose in the workplace, trust in management, etc. I would offer that we go back and determine whether or not these are material, the cornerstone of our disclosure reporting requirement under the SEC. Prior to coming to Congress, I spent a decade working in manufacturing, including at publicly traded companies. I understand and appreciate the role that human capital plays in a company's success. One of the greatest benefits of the economic boom caused by the Tax Cuts and Job Acts of the administration's regulatory reform is that more and more businesses have the resources to invest in their workforce. This is a positive development for our economy, and we should continue to support pro-opportunity economic policies. That said, workforce data, especially some of the demographic data called for in this legislation, is not always, wait for it, material to the average investor. We all agree that investors should have the information they need to make informed decisions with confidence. As we've discussed previously, materiality is an essential aspect of the reporting regime that underpins this confidence. This has been a foundational piece of our securities law for decades. If information helps investors, such as work-life balance initiatives, well, then doggone it, it's material and an essential aspect of the reporting regime that underpins this confidence. If information is not, it does not need to be reported. That's the law. My amendment to this bill is similar to what I offered for Mr. Foster's bill. It clarifies that public companies must only make the disclosures specified by this bill if those disclosures are actually material to the average investor of the issuer. As my colleagues have discussed, the information sought under this bill is not measurable in a meaningful and consistent way, reportable in a concise and comparable manner, applicable to all public companies across the board. This suggests that any mandatory disclosures coming out of this legislation will be confusing, unhelpful to investors who want to compare companies and make informed investment decisions. Even the SEC seems to agree with my thinking, as their own proposed rulemaking for the disclosures of certain human capital information clarifies that disclosures should only be required if the information is material to the company and its investors. Our securities laws should be focused on investor protection, facilitating capital formation, and maintaining fair, orderly, and efficient capital markets. Let's reduce the risk of confusing or misleading investors. Let's stick with tried and true securities law principles of materiality to ensure we're only requiring companies to disclose information that's actually helpful to investors. To be clear, this amendment doesn't prohibit the disclosure of workforce demographics or reporting on work-life balance initiatives. Under my amendment, companies will still be required to disclose this information if it is material. We should stay true to this touchstone principles of securities law, which is materiality. If workforce metrics are actually material, companies should disclose them. If not, they should not have to deal with another burden on publicly traded companies. I urge my colleagues to support this amendment, and I yield back the balance of my time.
Gentleman yields back. Does the gentleman, is there another person who desires to speak on the amendment? The gentlewoman from Ms. Axney is recognized for 5 minutes.
So, Mr. Stile, I appreciate what you have to say, and one of the reasons why I said that I'm sure my colleagues will say this is a burden, because that's all I ever hear out of this side of the dais, so I was expecting that. You know, I don't understand how anybody can say this isn't material when you brought up the SEC, where the chair of the SEC, let me go back to this, just said last year, human capital and intellectual property often represent an essential resource and driver of performance for many companies. Secondly, we previously had in our economy more than 80% of the S&P 500's market value accounted for intangible assets. That has completely reversed itself in a short period of time, and now we have more intangible assets at our companies. That's why this is so important. The problem with the materiality standard that has been offered in the amendment is that it leaves whether to disclose this information up to the company, and that's the problem. That's exactly where we're at right now, with companies, not investors, getting to make the decisions about what they disclose. And all too often, they're not choosing to disclose the things that investors absolutely do care about.
Will the gentlewoman yield?
Meanwhile, I hear consistently from companies who are upset about regulation by enforcement, this is the risk you get with materiality and a principles-based approach. If we don't have clear standards but leave everything up to the companies, that's the only outcome that we're going to get, is what they want to disclose.
Will the gentlewoman yield?
Yes.
The companies will report what's material. So your opinion that it's material, so if you're the company, then you would report you'd report that information. If it's not material, you wouldn't report it. And if you're an investor in the company and the company fails to report a material disclosure, you would have a course of action under current securities law. So I'm fine. This amendment doesn't alter what is or is not material. If this is a material information, the company would then be required to disclose it.
Reclaiming my time. Listen, there's no validity to that. We need the clear standards. We're going to get more situations like we recently had with Pacific Gas and Electric. They had a company that had risks related to climate change. Somebody brought that up earlier, that we asked to have a little bit of regulation over, telling us about how they're impacted by climate change. Here's a perfect example. Pacific Gas and Electric had risks related to climate change and natural disasters. They've clearly transpired in a terrible way, and now the investors are suing. So the investors are suing a company because they didn't disclose something that you guys said was a burden, just like you're saying about this. They were misled about risks within their company, and that's what investors need. Unfortunately, now PG&E is in bankruptcy. No, I'd like to finish. They're in bankruptcy, which means they're going to be competing with homeowners, the state of California. Yeah. Oh, there we go. That's better. So, relying on the fact that enforcement like this is no way to design a transparent system. I understand what you're saying, but quite honestly, You know, we can have a transparency in the system. This can be very easy for the companies. They're absolutely already gathering that. It is quantitative. I'm not asking for something that's qualitative, and I'm not asking in the cases, you know, to compare one company against another. This is for those investors to know what's going on. And so they can disclose the information that they have related to things like they're doing for work-life balance, which is really important for young people working today, if they've got that happening in their business. If they don't have it, they don't disclose it. But, you know, that's what people are looking for, and that's why it's important to ensure that we pass this amendment and get this bill put into place. I disagree with your materiality amendment, and I urge a yes vote on this, because I think it's the most impactful way we're going to get to a society that's moved to intangible assets to best understand how we can help companies help their investors get the information that they need to be successful.
Mr. Chair.
Is there further debate on the amendment?
Mr. Chair, I move to strike the last word.
The gentleman is recognized for 5 minutes.
Thank you, and before I yield to my colleague and friend from Wisconsin, I just hope people are hearing what's going on. Government knows best. We know best. Congress knows best of what must be disclosed, rather than the marketplace, rather than the regulators, rather than investors making those decisions. So with that, I'd like to recognize the gentleman from Wisconsin.
I thank my colleague from Michigan. I don't have the details in front of me of the case that was recently referenced by my colleague from Iowa, but it sure sounds like they failed to report a material risk. The materiality is the threshold. So if you fail to report a material risk, heck yeah, there's a whole regime of securities law that addresses that and gives people a right of action. What I'm noting is in the proposed amendment offered by my colleague from Iowa, there is no materiality threshold of the reporting requirement. So to the extent that these things are good or bad, I'm not even commenting on that in this amendment. This amendment simply states that those would only be required to be reported if they're material. I think that hopefully clarifies that a bit, and I yield back to my colleague from Michigan.
So I think the gentleman is entirely right, and I just point out that the remedy that is happening is in the courts, and the system is working for these investors to then go make the case of that they were not in possession of material information. So with that, Mr. Chair, I yield back.
Is there further debate on the amendment? If not, the question occurs on the amendment. All those in favor of the amendment say aye.
Aye.
Those opposed, nay. No. In the opinion of the chair, the nays have it. The nays have it, and the amendment is not agreed to. In the opinion of the chair,
I request a recorded vote.
a recorded vote has been requested. All in favor of a recorded vote shall raise their hand and be counted. There's a sufficient second, and a recorded vote is ordered. Pursuant to Section C5 of Rule 3 of the committee rules, the vote on this question is postponed.
Mr. Chairman, I have an amendment at the desk.
The gentleman is recognized, and the amendment will be circulated. The clerk will report the amendment.
Amendment to the amendment in the
Mr.
nature
Chairman,
of-
I ask unanimous consent to dispense with the reading.
Without objection, the amendment will be considered as read. The gentleman will be recognized for 5 minutes.
I thank the chairman, and I want to explain my amendment. Frankly, our colleague continues to insist that her bill doesn't create a big burden. And this amendment allows documentation, primary source evidence for each company required to make these disclosures as to whether or not there really is a burden. It'll put in real dollars, how much does it cost to comply with the bill, including the hours of labor, the number of regulatory lawyers and accountants hired to manage the disclosures, perhaps even the diversity of the firms hired to comply with the diversity disclosures required by the bill. All this has a cost, and it essentially creates project accounting every time the reporting period is required. But for my colleagues' background and experience, business schools around America equip people to be board members or to lead and grow businesses, and I have no doubt our colleague would be a great value-added board member for many companies and many businesses. But the dialogue here is really all about what an individual firm should do. And it's taking that up and saying, hey, we want to celebrate these things that we believe are competitive or comparative advantages for a specific firm, and saying, now we want to run all of America's economy that way, and we're going to require all these disclosures and reports for every publicly traded business in America. And it's these kinds of schemes that are, frankly, pushing fewer companies to stay public. Many of them are simply opting out of the market, and it adds to the arbitrage opportunities for private equity firms, hedge funds, and private holders to simply take the companies private, to get them out of our public markets. It diminishes the options, and it's frankly inflating too few good companies in the market. It's inflating the value of them because a lot of the real valuable companies are held elsewhere. So if this bill's enacted, it will certainly impose compliance costs on publicly traded companies, as they will certainly need a team of specialists and attorneys to comply. The other thing is the lack of clarity in the bill. So here are some of the convoluted, ill-defined data points the bill seeks to capture. For instance, the bill requires data on a company's workforce diversity, including racial, gender, and ethnic composition. The bill doesn't elaborate on how companies are supposed to collect this data and whether or not employees are required to answer when asked about their race, gender, or ethnicity for this disclosure. How often should they report? How many genders should they define? With no guidance from the bill, companies will be forced to consult with a team of lawyers on how to navigate this requirement, and so as not to run afoul of privacy and anti-discrimination laws. Inherently, they will push it out to subject matter experts, and we might see the market dominated by two small firms, two dominant firms like we are in the proxy advisories. You'll see people that develop expertise and specialty all around complying with this onerous regulation. For workforce demographic information, the bill requires disclosure of the number of temporary and contract workers and any, quote, policies or practices relating to subcontracting. So does this mean that companies will have to report on any instance they hired, say, a plumber or an electrician for basic repairs to facilities, the total number of plumbers, electricians, or janitors, their ethnic, racial, gender, background? Do we get into religion? Contracted each and every year, every reporting period? Does it go on which form? This is a recipe for stacking up lots of billable hours for accountants and attorneys and specialists, given the vast amount of paperwork and documentation that will be needed to comply with the bill. Nevertheless, even with all that, this bill doesn't undo any of these bad ideas. It simply says, we want you to disclose how much it costs to do it. So that's why this amendment is important. If the underlying bill is truly intended to promote workforce investment, let's see a breakdown of the financial resource, time, and labor that companies redirect in order to comply with the bill. That information will tell us and investors which workforce is actually getting the investment. Is it the regulatory lawyers and accountants being paid in order to make sure the company is in compliance with the bill, or is it the company and the shareholders instead who are receiving the value of this investment? It can't be both, and that's not how this business would work. Importantly, these disclosures won't actually help investors make better informed decisions about a company. It will create more confusion and, frankly, will create fewer high-quality publicly traded companies. I urge my colleagues to support my straightforward amendment that simply tracks the cost of complying with the bill, and I yield back my time.
Gentleman yields back. For what purpose does the gentlewoman from Iowa seek recognition?
I seek to strike the last word.
Gentlewoman is recognized for 5 minutes.
Well, there's a heck of a lot to unpack in that, but it's not worth any of our time to go down all those roads. What I find amusing, that if you say this is so cost burdensome, why are you adding another requirement then? There's nothing in my bill that prohibits anyone from disclosing the cost. If they'd like to do it, they absolutely can do it. So I urge my colleagues to vote no on that amendment.
Will the gentlelady yield?
I'm yield. I'm done.
Is there further debate on the amendment?
I believe the gentlelady yielded her time to me. No? Yes?
Does the gentlelady yield to the gentleman?
I just yielded. I'm done. I'm not yielding my time.
Okay.
Gentlelady yields back.
Then I would like some time on my own.
The gentleman from California is recognized for 5 minutes to strike the last word.
Okay. This amendment is absurd because there's no way to quantify the benefits to our economy for shareholders understanding what the workforce is, what the nature of the workforce is. But if this just improves the decision-making of investors by 0.1%, it will more than pay for itself.
Will the gentleman yield?
No. If this disclosure encourages companies to invest more in their workforce so that they can show their shareholders that they are making that investment, this will more than pay for itself many times over. If this amendment causes companies to focus on the need for diversity in their decision-making ranks, this bill will pay for itself many times over. Also addressing, and obviously this amendment is just an attempt to derail and kill the bill. I was not here earlier for the discussion of on this bill because we had a hearing on the coronavirus in my other committee. But I know that it was argued that somehow this bill would disproportionately impact U.S. companies versus American companies. That's absolutely absurd. Yes, it does require that you disclose OSHA violations. But when you disclose OSHA violations, you would do so, and could under this bill do so, by disclosing how many American employees you have and how many OSHA violations. So if a company only has 1,000 U.S. employees and has 10 OSHA violations, that's a very high percentage. To say that disclosing OSHA violations is discriminatory in favor of companies with few American employees is absurd. Shareholders know how to do math, and they can certainly realize that a company with 100,000 employees is going to have more OSHA response concerns than others. So again, we see smoke and mirrors used to try to derail what is an excellent bill. And the fact is that if this bill allows American investors to focus on companies whose OSHA violations as a percentage of total U.S. employees and industry, and I'm sure analysts will take a look at the different industries involved, and focus on those companies that have the fewest OSHA violations per employee engaged in hazardous or semi-hazardous activities, that's going to save lives as companies realize that their access to capital is dependent upon convincing their shareholders that they are indeed adhering to OSHA regulations. So this is an outstanding bill. It will help the allocation of capital in our society. It will encourage companies to keep their workers safe. It will encourage diversity. It will encourage investment in our workforce, which is the one thing that allows us to compete with other countries that otherwise have lower wage costs. And With that, I yield back.
What purpose does the gentleman from Ohio seek recognition?
Move to strike the last word.
The gentleman is recognized for 5 minutes.
I yield to the gentleman from Ohio.
I thank the gentleman, and I just wanted to highlight that our colleague from California is a CPA. He's certainly familiar with the concept of billable hours and probably has billed quite a few of them over the years. And the bill doesn't require companies to discern what is the ROI of the bill for all of America or even for all of their firm. It simply requires them to disclose how many hours it took them to gather the information, i.e. to monetize the cost. How much did it cost to comply with the reporting requirements under Ms. Axney's bill? So it doesn't, it's up to the investors to see whether it's a great ROI or not. It doesn't kill the bill, nor send it beyond the committee or any of the other eloquent things that Congress chants from time to time. It simply says, go, by all means, go forward and decide from Congress what every company in America ought to do, what's best way to govern every company in America. Go ahead and implement that, harm our economy with a bad idea, but just put a cost on it so we can know how much it's costing our economy and each firm to comply with the bill. Because clearly the statement and the argument is that it's not a heavy burden. So what's the shame in making it public how much it cost? I yield back to the gentleman.
I yield back the balance of my time.
Gentlewoman from Ohio seek recognition.
Thank you. Move to strike the last word.
Gentlewoman is recognized for 5 minutes.
I certainly find this very interesting. Let me say to my colleague from Ohio regarding how companies are supposed to collect gender and race and ethnicity from their employees. It's quite simple. I'm sure that my colleagues are aware that under the current law, employers with more than 100 employees already are required to collect the diversity of their workforce, and they already report it. And as I'm sure my colleagues know, they report it to the EEOC. That would be the Equal Employment Opportunity Commission. So if the gentleman wants to know the cost of disclosing this information to investors, I'll tell you, there's no cost for them to report it because this information is already collected. And this bill would simply seek to disclose that very information that they have. Why do we want it disclosed? Certainly, as my colleagues here know, Madam Chairwoman, we have a diversity and inclusion subcommittee. We have talked about the issues in a very bipartisan understanding. We have brought people in to testify. We have actually seen this nation start to move the needle. We have companies who are now coming in openly disclosing more than they have ever thought about disclosing, in part because they understand the value of doing it. Thank you, and I yield back.
Will the gentlelady yield to me?
Yes, I'll yield.
I'll just point out that that businesses are free to disclose the amount of time or effort that they put into complying with this bill. So they're free to do it if they want to, and I can't think of anything more unnecessarily burdensome and anti-business than to require them to report what they're otherwise allowed to report in the name of reducing or quantifying their costs of complying when you impose additional compliance costs on them. So the companies can disclose their cost of compliance should they want to, and to add more compliance costs on them in the name of quantifying compliance costs is truly Orwellian, and I yield back.
Is there further debate on the amendment? If not, the question occurs on the amendment. All those in favor of the amendment say aye.
Aye.
If no, those opposed, nay. In the opinion of the chair, the nays have it. In the
Madam
opinion-
Chairwoman, I ask for a recorded vote.
A recorded vote has been requested. All in favor of a recorded vote shall raise their hand and be counted. There is a sufficient second, and a recorded vote is so ordered. Pursuant to Section C5 of Rule 3 of the committee rules, the vote on this question is postponed.
I'm ready. Get me one.
We got to send that to me, so.
There are no further amendments. Without objection, the previous question is ordered on H.R. 5930, and further proceedings on recorded votes are postponed. The chair now calls up H.R. 5187, the Housing is Infrastructure Act. The clerk will report the bill.
H.R. 5187, a bill to facilitate the development of affordable housing and for other purposes. Be it enacted by the Senate and House of Representatives of the United States of America in Congress assembled. Section 1, short title. This act may be cited as the Housing is Infrastructure Act of 2019.
Without objection, the first reading of H.R. 5187 is dispensed with. The chair offers an amendment in the nature of a substitute, copies of which have been distributed in advance or on the dais. The clerk will read the amendment.
Amendment in the nature of a substitute to H.R. 5187, offered by Ms. Waters of California. Strike all after the enacting clause and insert the following. Section 1, short title. This act may be cited
Without
as...
objection, the amendment in the nature of a substitute will be considered as read and considered base text for purposes of further amendment. I now recognize myself for 5 minutes to explain the bill and the amendment. I'm pleased that the House is moving forward on a robust infrastructure package that will increase our nation's investment in its roads, bridges, water systems, and broadband. This is a bold proposal that is a long time coming. I'm even more pleased that increasing and improving our nation's affordable housing will be a part of this effort. While we need stronger and better roads and bridges, they mean nothing for families that don't have a roof over their head. Unfortunately, that is the reality for far too many families in our country. As I've said time and time again, this country is in the midst of an affordable housing crisis. It is a crisis of tragic proportions that has resulted in over 550,000 people experiencing homelessness, and nearly 38 million renter households are paying unaffordable rents. But simply, we cannot expect to tackle this crisis without taking bold actions. At a hearing on this topic last year, there was substantial agreement on the need for new federal investment to preserve and expand our affordable housing infrastructure in order to address this crisis. There was also substantial bipartisan agreement on the need to provide incentives for states and localities to reduce artificial barriers to housing development. H.R. 5187 provides a bold plan of action that has a broad coalition of industry and advocate support. Specifically, this bill would provide $100 billion in federal investment for affordable housing infrastructure. This includes a $10 billion set-aside in community development block grant funding that would be used to incentivize local and state governments to responsibly reduce barriers to housing development. This bill also includes funding to comprehensively address the $70 billion backlog of capital needs for public housing and U.S. Department of Agriculture-backed rural rental housing. It includes full funding for the Native American Housing Block Grant and substantial new investments to ensure that our housing infrastructure is more accessible for persons with disabilities and more resilient in the face of future flooding. This bill will not only preserve and create millions of affordable homes, but it will also help stimulate the economy. For example, according to the National Association of Home Builders, building 100 affordable rental homes generates 300 jobs, $28 million in wages and business income, and $11 million in taxes and revenue for state, local, and federal governments. The affordable housing crisis may look a little different from one community to the next, but no community is immune, and Congress has a responsibility to act. These units are sorely needed and will begin the process of addressing the affordable housing needs of our low-income families. Today, this committee continues its work on expanding the nation's supply of affordable housing. According to our estimates, the Housing is Infrastructure Act will create or preserve 1.8 million homes. Make no mistake, this investment will cost money, as all investments do. This bill, as well as the entire infrastructure package, will be paid for, and discussions are ongoing with the administration and our friends on the Ways and Means Committee on the best ways to do that. When it comes to solving our nation's problems, we need to think bold and not be afraid of bold solutions. This bill is bold, and it will make a difference in the lives of millions of Americans living on the edge. I urge all members to support this bill, which is critical to so many of our fellow Americans. I yield back the balance of my time. Is there further discussion of or amendments to H.R. 5187?
Madam Chair.
For what purpose does the gentleman from Ohio seek recognition?
Madam Chair, I have an amendment at the desk.
The gentleman is recognized for 5 minutes. We will
You want to wait to
pause
pass it out?
allow for copies of the amendment to be distributed.
Yes, ma'am.
Green from Texas, Madam Chair, would like to be recognized. I'd like to reserve a point of order.
A point of order has been reserved. The clerk will report the amendment.
Amendment to the amendment in the nature of a substitute to H.R. 5187, offered by Mr. Cybers of Ohio. Page 2, strike lines 10 through 17.
Madam Chair, I move that we dispense with the reading.
Without objection, the amendment will be considered as read. The gentleman is recognized for 5 minutes in support of the amendment.
Thank you, Madam Chair. The Housing is Infrastructure Act is a bill that looks at one way to add additional capital to the housing crisis and the public housing. And my bill does not remove that option. It does not limit that option. It adds an extra option. We recently had a hearing in the Housing and Insurance Subcommittee where we had testimony from multiple public housing officials about the Rental Assistance Demonstration Program, which started under the Obama administration. By the way, welcome to 2020, where Mr. Green quotes and talks about a Ronald Reagan program, and Steve Stivers talks about an Obama program. But this rental assistance demonstration program works, and it's another method in addition to investing directly in public housing, and this just lifts the cap on those. It does insert on page 2 a quote from Sean Donovan, who was the Housing and Urban Development Secretary under President Obama, that just talks about how the Rental Assistance Demonstration Program is another tool and another way to do this. So again, this does not limit the investment in public housing, does not reduce the amount of authorization under the bill. It simply adds the Rental Assistance Demonstration Program as another option under the bill. That's what the amendment does. I would urge support of the amendment, and I yield back the balance of my time in order to keep us moving, Madam Chair. Talk too fast.
I recognize myself for 5 minutes. Mr. Stivers, I know that you have spent time and energy on dealing with these housing issues. And I know of the work that you've done in trying to eliminate homelessness on the youth, and we talked about that earlier today. But what I think you're doing, as I look at your amendment, and that is lines 1 through 5, where it says, many of the nation's public housing apartments are already buckling under capital needs backlog, allowing public housing agencies to convert their currently available public housing subsidies to long-term Section 8 rental assistance contracts will enable them to raise millions of dollars of necessary debt and equity investments. And I have the staff taking a look, but it appears to me that what you're doing is making sure that they're in a position to deal with RAD. Is that true?
That's just a quote from Sean Donovan. It's not, I don't believe that anything in that, I think that's just a statement. I don't believe it limits anything and I'm willing to strike that if it's not the most important part of the bill, that limits the second part, ma'am.
Reclaiming my time, that seems to be the essence of your amendment here. Let's remember that RAD has still not been fully evaluated to determine its impact on residents and the long-term affordability of public housing. Specifically, a 2008 GAO report found the strength of protections intended to preserve the long-term affordability of properties post-RAD conversion is unknown and untested, and HUD does not have procedures to address preservation risk. Advocates have echoed these concerns and have also been critical of the lack of HUD oversight and PHA's failing to comply with the program's tenant protections and rights. Further, past practice shows that RAD doesn't work for public housing developments with severe capital needs. In fact, most RAD conversions don't involve significant rehabilitation. So this amendment assumes that RAD can somehow eliminate the need for capital funding, but we know that this is untrue. RAD cannot and does not work for all PHAs and all public housing developments, especially smaller rural PHAs. And let me just say that we have been in discussions about RAD for quite some time now, and we know that there are some RAD projects that are in process at this time. But the questions that I'm raising about what is missing with these RAD contracts related to, everything from tenant involvement and related to ensuring that my long-term concern about RAD is whether or not we're creating debt that will not be able to pay back and that the risks are too great, and what happens to these properties when they're indebted to the point that we cannot repay that debt. Who then owns the investors? Will it be, hedge funds? Will it be banks and other financial institutions? I'm concerned about that, but we are watching very closely what is going on with some of these RAD contracts. My staff is looking at ways that perhaps we may be able to work out something that will ensure us that RAD is in compliance with what it says it's all about and what it's going to do, and that my concerns can be alleviated by who the final ownership of these Section 8 properties will belong to. So with that, yes, I will yield.
Thank you. I appreciate the gentlewoman yielding. And that did come up at our hearing, and there are requirements in the RAD program, and in fact, in every RAD deal, it says even if it's defaulted on, it has to stay in public housing. And I'll quote U.S. Code 42-1437F, provided further that tenants under these properties with assistance converted from assistance under Section 9 shall at a minimum maintain the same rights under the conversions as those provided under Section 6. So there are still tenant protections, and even if the deals were to default, they have to remain public housing. Another thing I'd quickly quote is from Mr. Collins from the Shreveport thing. He says that RAD's an excellent tool in the toolbox. They're glad to have it. That's all this does. It doesn't take away the 100 $100 billion that would be used for recapitalization. It just allows this to be the tool in the toolbox that Mr. Collins talked about at our hearing. I yield back.
Thank you very much. Let me just
Madam
say,
Chair.
someone seeking recognition. Expired. So what purpose does the gentlewoman from New York seek recognition?
I would like to speak in opposition of the amendment.
The gentlewoman strikes the last word and is recognized for 5 minutes.
So, I also would like to raise the issue that this lifting the RAT cap relies on Section 8 voucher. How do you explain when the president's budget submission specifically cut Section 8 voucher? So what kind of leverage then they will have when the money is not provided and Section 8 vouchers will not be there to be part of any financing of RAT? And then it is clear based on the GAO report that RAT has not been tested. It says in this report that as a result, HUD's ability to accurately assess private sector leveraging is limited. HUD does not systematically use its data system to track effects of RAT conversions on resident households, such as changes in rent and income or relocation, or monitor use of all resident safeguards. Even more, RAT authorizing legislation and the program's use agreement contracts with property owners contain provisions intended to help ensure the long-term availability of affordable units. But the provisions have not been tested in situations such as foreclosure. So, Madam Chair, we should oppose lifting the cap. We have not tested the effect of RAT. We haven't had any opportunity to assess whether or not there are tenants protection or whether or not those affordable units will continue to be affordable if those property owners file for foreclosure. And on those factors, I will oppose this amendment. I yield back.
The gentlelady yields back. Is there further debate on the amendment?
Madam Chair, I move
Madam
to
Chair.
the last word.
Mr. Huizenga is recognized for 5 minutes.
Thank you, and I'd like to recognize my friend from...
I'd like to thank the gentleman from Michigan for yielding just a couple quick points that need to be made to clarify. So if somebody does a RAD conversion, it is not a voucher. It's a project-based funding, so it's not under Section 8. And second, I think we should be proud that 100,000 housing units have been converted under the RAD program in the Obama and Trump administrations, and we've had 0 foreclosures. So the fact that it's not tested, we've done converted 100,000 units, and there have been 0 foreclosures. I will yield, yes.
Yeah, I hear...
Hold on, reclaiming my time.
Oh, sorry.
Actually.
Gentleman?
So I just want to make sure the gentleman is through making his point.
I am.
Okay,
So,
with that, I recognize the
I know
gentleman
that
from New
you
York.
have raised Obama quite a bit, but let me make it clear. I oppose this from the start. There is no mechanism in place to make sure that tenants will be protected and that what will happen in terms of the financial health of those developments once foreclosure takes place. What will that happen? Furthermore, what type of... This is a one-shot deal, and how do they have the necessary financing to keep updating and modernizing 20 years from now when those contracts are up?
Reclaiming my time, I recognize the gentleman from Ohio.
Thank you. And with regard to tenant rights, I think, I understand, and the gentlewoman from California has brought up at the hearing, there are some transitional issues as the transition happens. That is a fair point. It's something we have to look at in the RAD program. But as far as longer term there is a guarantee that the tenants receive the same protection as they had in public housing. And with 100,000 units that have been completed through the RAD conversions, we have not seen problems with that. We've seen 0 foreclosures, and there is a requirement that they have to remain public housing. So even if somebody were left in a foreclosure holding the bag, that would not last because the units have to go back to public housing. So nobody's going to want to foreclose on these deals. And we're 100,000 units in and had 0 foreclosures. And second, I think the key other point here is that while I know there have been some issues with transition as they do the RAD conversions, I think there is an effort to make that better. And so I recognize the no program's perfect. The RAD program is not perfect, but there were 3 public housing officials on the witness list. They all 3 said that the RAD program, and I'm going to not quote them but paraphrase them, was a good tool to have in the toolbox. All this amendment does is says keep that tool in the toolbox as well as invest in public housing. So this is not a forced issue where we're trying to substitute RAD for the gentleman from California's proposal. It's an additional tool in the toolbox, and every public housing official that testified, 3 of them at the hearing, said they wanted that tool, when I'm finished, they wanted that tool in the toolbox, and I don't know why we would want to walk away from a tool that has resulted in 100,000 public housing units being upgraded, becoming better, becoming project-based, not vouchers. I want to be clear, it's project-based, not vouchers. And it's a program that works. It might not work or be appropriate for everywhere. I've not said it's appropriate for everywhere. It's a tool in the toolbox. And this amendment just tries to recognize that tool in the toolbox. I yield back to the gentleman from Michigan.
Reclaiming my time, I got a question for the gentleman from Ohio. So refresh our memory how these 100,000 units have been chosen to be put into this program.
So public housing authorities make the choice each time, just like they could choose anything else. There is, the gentleman from California is right about diagnosing the problem. There's a great deficit of funding for public housing and units that have aged over time, that have become not as good place to live for people. And these RAD conversions have resulted in massive recapitalization of 100,000 units across this country.
And
it's a public-private partnership that works.
I was just going to say, and this is private dollars that are coming into this. Correct?
That is correct.
So,
and in addition to, again, nothing in this amendment takes away the public investment that the gentleman from California has in her baseline bill.
And in fact, it actually adds to it because there is this public-private partnership that is happening. Correct. Okay. I just wanted to make sure, and with that, I yield back.
Is there further debate on the amendment?
Madam Chair.
Who seeks recognition? For what purpose
North Carolina.
does the gentlewoman from North Carolina seek recognition?
I move to strike the last word, Madam
The
Chair.
gentlewoman is recognized for 5 minutes.
Thank you, Madam Chair. First of all, I want to commend you for your dedication and tenacity and longstanding commitment to addressing housing and homelessness issues. For more than 3 decades, you've led the fight, sounded the alarm about the need for Congress to invest more strategically and strongly in housing. Now, as chair, you've had the opportunity to give housing the platform and the focus that it truly deserves. Too many people in this very committee do not seem to understand what it's like to not make the ends meet, not have enough money to pay for your rent. And because you don't understand how difficult it can be to afford a home doesn't mean that the problem does not exist. But every issue cannot simply be fixed by the private sector or a market-based solution. Sometimes when the government has to step in, make adjustments to ensure that our citizens have a basic, decent standard of living. And that's why I'm proud to be a co-sponsor of the Housing is Infrastructure Act. The bill would make a historic authorization of funding for the National Housing Trust Fund, several housing infrastructure projects, including in public housing. Housing is a fundamental need, and shelter is a basic human right. And so, as we know in this committee, the lack of affordable housing has reached crisis proportions in the United States. It certainly has in my district. This is not just an urban issue, it's impacting rural communities too. We're facing a shortage of more than 8 million affordable and available rental homes for America's 11.4 million extremely low income households, those with incomes less than 30% of their area median income or the poverty guideline. These households include seniors and people with disabilities and veterans and families with children. In my district in Charlotte, nearly half of all of the renters are cost burdened, spending more than 30% of their income on housing. So I know the housing crisis seems insurmountable, but it's not. There's some real-world solutions and next steps that we can take, and we can do that right now. So like the chairwoman's bill, it makes investments in the Public Housing Capital Fund, which has a $26 billion backlog. For future natural disasters are predicted to be more devastating and costly, so this bill authorizes $5 billion for the pre-disaster hazard mitigation program to help communities increase resiliency and improve housing stock to withstand the elements. The bill also invests $5 billion into the Housing Trust Fund to support our state and local governments with building hundreds of thousands of new units of affordable housing. All of the cities and counties love the CDBG program, which provides flexible funding for each community's needs and their priorities. The bill authorizes $10 billion for a CDBG set-aside that would incentivize grantees to eliminate impact fees and responsibly streamline the process for development of affordable housing. For these common sense reasons and more, I support the Housing is Infrastructure Act, and I urge my colleagues to support this bold, long overdue vision. And Madam Chair, I yield back.
For what purpose does the gentleman from Illinois seek recognition?
Madam Chairman, I move to strike the last
The
word.
gentleman is recognized for 5 minutes.
Thank you. I would like to commend and thank Chairwoman Waters for her leadership in introducing the Housing is Infrastructure Act and for tackling the housing affordability crisis in this country. This bill invests urgently needed funds in our country's housing infrastructure, including public housing, affordable housing, supportive housing for seniors and people with disabilities, and more. I represent families on the northwest and southwest sides of Chicago who are being priced out of their communities. Skyrocketing rents and mortgages across Chicago neighborhoods are causing rapid gentrification and displacement, especially for communities of color and immigrant communities. Over the past decade alone, 20,000 Latino residents and 10,000 African American residents have left the Logan Square neighborhood in my district, and the changes are only accelerating. While new luxury units are built and marketed to attract higher income tenants, our nation's public housing stock is crumbling with over $70 billion worth of maintenance and repairs needed. As a member serving on both this committee and the Transportation and Infrastructure Committee, I now know desperately we need to invest in building thriving, connected neighborhoods and communities, and affordable housing is an essential part of that. I urge members of this committee to support this bill and to continue efforts to ensure affordable housing is a cornerstone of our infrastructure investments. Madam Chair, I yield back the balance of my time to the gentlelady from Texas, my good neighbor, Representative Garcia.
Madam Chair, I too rise to support your bill. I think this is great work, and we can't talk about infrastructure in this country without looking at infrastructure for housing. And whether it's Section 8 rental assistance contracts or public housing or scattered site housing, we really need to do more to make sure that people in all our districts across America have affordable housing that they need. I do not agree with the amendment proposed, and I wanted to also point out, Chairwoman Waters, how great it is that you included $1 billion to support mitigation efforts that protect communities from future disasters and reduce post-disaster federal spending coming from an area in Houston that has had more than its share of hurricanes and storms and rain events. I know that it causes great dire stress on so many communities trying to rebuild and to protect themselves to mitigate for future disasters. According to the CBO, every dollar of pre-disaster mitigation spending saves an average of $3 in future losses. That's a great investment. Anything that we can do to spend $1 and save $3 is a win-win for everybody and a real bargain for our country. So again, I oppose the underlying amendment and strongly urge all my colleagues to vote for your bill. I yield back.
Does the gentleman from Texas withdraw his reservation?
Yes, Madam Chair, I
Point
do
of order.
withdraw the point of order.
Is there further debate on the amendment? If not, the question occurs on the amendment. All those in favor of the amendment say aye. Aye. Those opposed, nay. In the opinion of the chair, the nays have it. The nays have it, and the amendment is not agreed to.
Madam Chair, a recorded vote is requested.
A recorded vote has been requested. All in favor of a recorded vote shall raise their hand and
Raise
be
your hands.
counted. There is a sufficient second, and a recorded vote is so ordered pursuant to Section C5 of Rule 3 of the committee rules. The vote on this question is postponed. For what purpose does the gentleman from Michigan seek recognition?
Madam Chair, I have an amendment at the desk.
We will pause to allow copies of the amendment to be distributed. The clerk will report the amendment.
Amendment to the amendment in the nature of a substitute to
Madam Chair, I
HR.
move that we dispense with the reading of the amendment.
Without objection, the amendment will be considered as read. The gentleman is recognized for 5 minutes in support of the amendment.
Thank you, Madam Chair. The Housing is Infrastructure Act authorizes over $100 billion in new funding. It is Congress's job to make sure that any funding increase, especially massive funding increases like this, will be well spent by the public housing agencies we entrust with these funds, with any entity that is entrusted with these funds. If this legislation passes, the worst-case scenario would be Congress looking back at how this money has been spent 5 years from now, only to then find out whether these funds have been wasted or misappropriated or abused. This amendment would stop those funds from going to any PHA that has committed outright fraud with federal funds or has used federal funding to violate fair housing laws. New York City Housing Authority is the worst example of this. After admitting that they lied to federal authorities and covered up the health risks in their properties, the federal monitor put in place to oversee this agency reported that, quote, "These first few months of our work have revealed that the New York City Housing Authority as an organization fraught with serious problems in structure, culture, and direction, and perhaps even worse," close quote. Even more troubling are the reports that estimate that NYCHA alone needs $40 billion to address the physical issues with their properties. Funding is not the problem with this agency. Management is the problem. This organization is fundamentally broken. I'm concerned that any funds granted to this organization would be squandered on bureaucracy, competing union contracts, or outright theft, and the lives of the residents there would not improve in any measurable way. In another troubling case from Los Angeles, the city's redevelopment agency recently settled with HUD and the Department of Justice over allegations that they knowingly discriminated against people with disabilities using taxpayer money. Is this the type of agency that we should be giving billions of dollars to in new funding? When these agencies accept federal funding, they make a promise to the American people and their residents that they will use it to provide, quote, decent, safe, and sanitary housing to low-income Americans. If agencies have broken this promise, wasted these funds, or used them to discriminate against the very people they're supposed to help, then they should be disqualified from receiving new funding until those problems are fixed. I urge a yes vote on my amendment and yield back the balance of my time.
I recognize myself for 5 minutes. This amendment would limit funds to jurisdictions that have entered into a voluntary compliance agreement with HUD in the previous 5 years, but a voluntary compliance agreement indicates that a jurisdiction is taking steps to correct the violation, so it would be nonsensical to continue to penalize them. In fact, the threat of withholding funds is a main incentive for jurisdictions to enter into these voluntary compliance agreements. So that this would take away a key leverage that HUD currently has to encourage jurisdictions to enter into these agreements in the first place. Why would a jurisdiction enter into a VCA if they knew it would be held against them in this very punitive way? So I oppose this amendment as it is counterproductive towards the purported goal of fair housing compliance. Is there further debate on? The gentleman from Colorado seeks recognition.
Yes, if I do. I move to strike the last word. Or am I using your time? If the gentlelady would yield to me.
I yield to the gentleman from Colorado.
Yes, and I think I stand in opposition to this amendment as well. I think it is very counterproductive. The purpose here is to provide much-needed housing and have housing affordability across the country and not limit it to some state or limit it from states that may have had a problem 5 years ago or the like. So this is a huge effort, and I applaud the chairwoman for bringing this bill to our committee. The needs in Colorado for housing affordability can't be overstated. And any limitation, as the gentleman from Michigan is trying to provide here, I think really hurts the whole program. I mean, as the stock market's getting rocked, I mean, we need to be prepared with an infrastructure package, all of us do, so that our economy will remain strong. I think the timing of this is perfect. The needs are there. We all know that. Investment in housing across the board from homelessness all the way to first-time home buyers, and the things that the gentlewoman has in this bill are definitely needed. They're certainly needed in Colorado. Limiting elements, as the gentleman from Michigan has proposed, just really make this package much tougher, and I think we're going to want this thing in probably the next few months. So I would yield back. I oppose the gentleman's amendment. I thank the gentlelady for bringing this bill. This is much needed, and I yield back to the chair.
Thank you very much. And
Madam Chair.
who seeks recognition? I yield to the gentlelady.
I move to strike the last word.
The gentlelady is recognized to move to strike. I yield back, and the gentlelady is recognized for 5 minutes.
Madam Chair, I want to thank you for introducing this bill, and it's important for working families in this country, and that is one of the main reasons why I am a co-sponsor of this bill. And let me just say to the other side of the aisle, NYCHA does have problems, but limiting these funds will harm tenants. An amendment of this nature is heartless. It is heartless because we know that for so many years.
Point of order, Madam Chair.
What is the gentleman's point? State your point of order.
Rule 17, trying to characterize my amendment as heartless when I am looking out and stated in my statement that this is about trying to protect residents.
and those that are accessing it.
Well, reclaiming
In
my
addition,
time.
there's no reclaiming the time, it's a point of order. And then putting forward that I'm trying to protect those very people that you are reportedly talking about, reporting them. And it's not my fault that NACHA in your hometown
Yes.
is completely screwing the
Will the
people they're supposed to be
gentleman, will the
serving.
gentleman state his point of order?
My point of order is that it is inappropriate to characterize my amendment in the way that the
Okay,
gentlelady has
so
for me.
I'll take it down. And
The
I
time belongs to the chair. The gentleman has stated his point of order. The chair will rule that the point of order is heard. However, the gentlelady has not been in violation of the rule that you identified in terms of the way that she characterized what is going on at this time. So now, the gentlelady.
Madam Chair,
Thank
if I could just interject and just request.
Point of order.
That we have people be careful and measured with their tone and tenor and words today.
Point of parliamentary inquiry, Madam Chair.
The gentleman state your point of order.
Is there any material difference between characterizing this amendment as heartless than one of his colleagues previous in this hearing characterizing our opposition to his amendment as meaning that we don't care about military members or veterans? Is there any material difference, Madam Chair?
The gentleman has stated his point of order.
What's good for the goose is good for the gander.
And has raised the question. Mr. Huizenga has indicated that he thought it was inappropriate, but he has gone on to have the discussion continued. So the gentlelady is recognized.
Thank you,
to
Madam
continue.
Chair. The Trump administration's action in the budget that he submitted to Congress is heartless. When you take money away that will provide the resources to make the repairs of leaking roof, to make the repairs of windows that are broken, that is heartless. When you have a secretary of the Department of Housing and Urban Development to come before our committee time and again and got to the Senate and said that as a doctor, one of the main concerns that he has was the health of the children who lives in public housing. Really? So today, public housing in New York City and around the country faces a national emergency. We see the stories of our friends and neighbors suffering every day, whether it's leaking radiators, drafty windows, elevator outages, or children being exposed to lead and toxic mold. The evidence of this repair is everywhere, from hot water and heat outages to rodent infestation. Our neighbors are being deprived of a basic human right, a safe, livable place to raise their families. As policymakers, we need to start with the simple premise that making repairs and maintaining public and affordable housing buildings requires resources. Yes, there might be issues with management, but we need to understand that we have a lot of blame to go around, and that includes the fact that every time that a budget is submitted, we don't fund the capital fund that provides the money to make the repairs. So please, don't come here and say about fiscal responsibility that is why we need to cut all these very programs that are so important for the health of the people that work in public housing. And yet, you don't care when we pass a $1.9 trillion tax cut for corporate America. President Trump and his administration certainly have not helped matters. Earlier this week, I sent a letter to Secretary Carson and OMB Director Mulvaney condemning the administration budget request for HUD for FY 2021 and its potential impact on affordable housing in New York City. And I want to thank Representative Maloney, Mix, and Ocasio-Cortez, and the rest of my colleagues from New York City for joining me in this effort. For the third year in a row, the President's budget request completely eliminates funding for the Public Housing Capital Fund, which is the primary source of funding public housing authorities rely on to address necessary infrastructure upgrades. The elimination of this funding will cost the New York City Housing Authority to lose approximately $549 million in key funding. And on top of that, we have this amendment to prohibit the access to that money. The President's budget request also reduces key funding for the Section 8 program, requesting approximately $18.8 billion or $5 billion less than FY 2020 enacted levels. This will cost New York City to lose approximately 9,700 vouchers. However, that is not enough. We need to move the conversation forward. Rather than playing defense, we need to go on the offense and commit again to quality housing for every single American. And that is exactly what H.R. 5187 does. Like roads, bridges, and tunnels, affordable housing is a key component of the country's infrastructure. H.R. 5187 will invest more than $100 billion into our affordable housing programs, and I support the gentle lady, Chairwoman Waters, the Public Housing Emergency Response Act, and I ask for everyone to support it.
For what purposes does the gentleman from North Carolina seek recognition?
Move to strike the last words.
The gentleman is recognized for 5 minutes.
Thank the chair for yielding, and I just want to thank my colleague from New York City for her comments, and also just want to point out those tax cuts that were referenced. We have now seen African unemployment at its lowest point in 50 years, Hispanic unemployment, lowest since recorded, women's unemployment, lowest since recorded, and now the bottom quartile of earners in our country their wages are growing faster than the top 1%. We don't have a tax problem in this country, but we sure have a spending problem. I'd like to use some of my time and yield to the gentleman from Michigan.
Thank you. I appreciate my colleague from North Carolina lending me some of his time, and I want to point out a couple of things. First and foremost, the other side just voted down the RAD amendment from Mr. Stivers that would put additional private money into the housing stock. So if there is a concern of that, we ought to be linking up with the private sector. That's one point. Second point, my colleague from New York helps make the point that the New York City Housing Authority has run an unbelievably poor organization. In the consent decree that they have, dating, this is from press release of June 11, U.S. Attorney Jeffrey Berman stated, quote, "Not just failure to provide decent, safe, and sanitary housing is simply unacceptable and illegal. Children must be protected from toxic lead paint, apartments must be free of mold and pest infestations, and developments must provide adequate heat in winter and elevator service. NYCHA has put its residents at risk. Today's unprecedented settlement will improve life for the 400,000 residents who call NYCHA home while ensuring accountability, reform, and oversight at this troubled institution," close quote. I don't have 400,000 people in my district, but I have the poorest county in the state of Michigan. It's a rural county with a significant African-American population. I have Section 8 housing and other housing in Muskegon County and Ottawa County. So please don't get preachy about that this is only about New York, because this affects everyone in every district. And this consent decree that was executed June 11, New York City Housing Authority made admissions regarding, among other things, deficiencies in physical conditions with respect to lead, mold, heating, elevators, and pests, untrue statements to HUD, meaning they lied regarding the conditions of those properties, and practices with regard to public housing assessment system inspections.
Would the gentleman
I don't care,
yield?
no, I will not. I don't care whether this is New York City or Lake County, Michigan, or somewhere in California or anywhere else in the country. First and foremost, there's a responsibility to those tenants that they get what they're promised. Second of all, we have a responsibility to the taxpayers who are helping fund that. And how we can possibly put up with institutions that are abusing their power is unconscionable. Now, this is not a direct parallel, but I'm dealing right now with, in Muskegon and Muskegon Heights, some of the poorest counties, some of the poorest neighborhoods and poorest communities in Michigan, where we have a health clinic that's being shut down. Why? Because there had been abuse by the leadership. And there had been investigations that had been going on. And now finally, when a whistleblower came to me and we reported it to HRSA, the FBI, and the Attorney General, and the U.S. Attorney, they finally had an arrest, and they are finally trying to change the culture. That's the kind of thing that we owe to our constituents. We actually owe them the services that they get promised. So, my amendment is an attempt to make sure that those agencies that are entrusted with delivering those services actually do it. And I'm concerned that we are going to give and heap even more money on this bill into those organizations when they have not been able to demonstrate that they are competent in running the organizations with the money that they have. Yeah. So that is the nature of my amendment. So I thank my colleague from North Carolina, and I yield back.
Is there further debate on the amendment? If not, the question occurs on the amendment. All those in favor of it? Oh. Does the gentlelady from Ohio seek recognition?
Move to strike the last word.
Gentlelady is recognized for 5 minutes.
Thank you, Madam Chairwoman. I simply want to be on record as being in opposition to this amendment and in support of your legislation. And let me just very briefly say, after listening to my colleague from Colorado, listening to my colleague from New York, I'm from the great state of Ohio. And let me just tell you, I spent an early part of my career working as a consultant in public housing. And I want to applaud you for understanding and taking the time to develop a piece of legislation that will help move the needle. The needle for those individuals that we are here in this Congress to look out for, to protect, and to make a better way for them. When we look at the breadth of problems that we have in public housing, the funding that has been cut for public housing, and to be here today denying and being against a piece of legislation that will open the door when we know what's happening in public housing, what's happening in Section 8. So I simply wanted to applaud you, and I wanted to yield time to my colleague from New York if she would like to have that time.
Thank you, gentlelady, for yielding. The fact of the matter is that members of this committee do not want to recognize the effects that it costs. The fact that the Public Housing Capital Fund has been underfunded year after year. And I will ask the gentleman, how do you expect NYCHA to meet these requirements under the consent decree without more money? Without money, NYCHA will get worse, not better. I yield back.
Is there further debate on the amendment? If not, the question occurs on the amendment. All those in favor of the amendment say aye.
Aye.
Opposed, nay. Nay. In the opinion of the chair, the nays have it, and the amendment is not agreed to.
Madam Chair, I request a recorded vote.
A recorded vote has been requested. All in favor of a recorded vote shall raise their hand and be counted. There is a sufficient second, and a recorded vote is so ordered. Pursuant to Section C5 of Rule 3 of the Committee Rules, the vote on this question is postponed. For what purpose does the gentleman from North Carolina seek recognition?
Madam Chair, I have an amendment at the desk.
We will pause to allow copies of the amendment to be distributed. The clerk will report the amendment.
Amendment to the amendment in the nature of a
Madam Chair, I move that we dispense with the reading of the
Without
amendment.
objection, the amendment will be considered as read. The gentleman is recognized for 5 minutes in support of the amendment.
Thank you, Madam Chair. I want to start by thanking the chairwoman for her work on the underlying legislation here. I know that she's sincere, and this bill comes from a good place. However, I want to raise some concerns I have with the underlying text. The biggest of those is being that this bill is merely throwing federal money at a serious problem while not holding states and localities accountable. My amendment's a simple one. It merely requires states and localities to contribute to public housing projects by requiring them to match funds allocated by the federal government. And states and localities who own these properties should be held accountable for also maintaining them and investing in them. This amendment would essentially allow localities who operate these housing projects to increase the impact of this money. Matching funds are often required in federal infrastructure spending. They require buy-in from communities and add local oversight as to how these dollars are spent. They can promote sustainability of these grants in the long term, knowing that localities share these funding priorities in their communities. We shouldn't be handing out federal dollars to states and localities that aren't themselves willing to contribute to solving their own problems. I urge my friends on both sides of the aisle to support this amendment because it addresses the problem at hand that the majority is rightfully trying to solve. If the funding is not the issue, this amendment will essentially help double what is being proposed in the bill. Unfortunately, I have a sneaking suspicion that the majority will vote against this amendment because they understand that just like many local localities across the country understand, that the public housing system is a deeply flawed program and that localities will not sink their money into this program when there are more and better proven models. Major cities across the country, from San Francisco to Atlanta, have wholly converted their public housing portfolios. They realize, like many in Congress realize, there are more proven solutions to these issues, whether it's RAD, which was from Stivers of Ohio, or the Housing Choice Voucher Program, or the Moving to Work Program. Innovative programs exist to better help the low income. These communities look at the failings that occurred at Cabrini Green, or more recently, NYCHA, and know that their communities deserve better. Again, I appreciate the bill offered by the chairwoman, and I understand that this has been a problem not only in her state, but across the country. And I know, like all of us, that she wants to fix it, and I urge a yes vote on my amendment. I yield back.
I recognize myself for 5 minutes. I oppose this amendment. State and local governments across the nation are struggling to provide affordable housing for their communities. We, as the federal government, must do our part to provide resources to localities, help increase the supply of affordable housing, which is exactly what H.R. 5187 does. Requiring jurisdictions to provide a matching requirement is a financial burden that many jurisdictions cannot bear and afford on their own. The point of my bill is to provide federal resources to address the affordability crisis that our nations face, including urban, rural, and suburban communities across the country. This amendment would disadvantage the communities that need the funding the most, including many rural communities. For these reasons, I oppose this amendment, and I urge my colleagues to do the same. To my colleagues who have raised questions about whether or not those who have voluntary compliance agreement should be funded, if they have been in violation, I guess, in the previous 5 years. Those who are saying that we should not fund unless, and of course, we accept RAD. Those who are talking about move to work. All of these issues, including matching funds, will only stand in the way of the development of affordable housing in the communities across this country. We have a housing crisis in this country. When you raise these questions and you submit these amendments, what you're doing is setting up ways by which they cannot be funded to deal with these issues. You come from communities, then you know that many of these cities have deficit. You know that they cannot afford matching funds. Also, I want you to know that one of our colleagues had a group up from New York who described that they were in a RAD agreement and how they were slapping paint on the walls, and they were not living up to the agreement of RAD. You also understand what the problems are with moving to work. And you know that we don't have the information, we don't have the data, we don't have the research, we don't have what is needed to determine why moving to work even works. And so I respect that you all think that increasing funding in some ways is housing, except for. All of these except fors will stand in the way of us being able to provide this housing that's so desperately needed. And I want you to know we're not just talking about New York and Los Angeles. We're talking about suburban areas. We're talking about rural communities, many rural communities who have been ignored for years by those who represent them because they felt that other issues were more important. And I want to tell you, and I've been talking to members on the opposite side of an aisle about working together to deal with the lack of healthcare centers and healthcare opportunities and transportation and housing in rural communities. We care about rural communities just as we care about urban and suburban communities. So, of course, I oppose this amendment, and I would ask my colleagues to vote against it. Is there further debate on the amendment? If not, the question occurs on the amendment. All those in favor of the amendment say aye.
Aye.
Those opposed, nay. In the opinion of the chair, the nays have it, and the amendment is not.
As for a recorded vote.
A recorded vote has been requested. All in favor of a recorded vote shall raise their hand and be counted. There is a sufficient second, and a recorded vote is so ordered. Pursuant to Rule C5 of Rule 3 of the committee rules, the vote on this question is postponed. If there are no further amendments, without objection, the previous question is ordered on H.R. 5187, and further proceedings on recorded votes are postponed. The chair now calls up H.R. 5932, the Ensuring Chinese Debt Transparency Act of 2020. The clerk will report the bill.
H.R. 5932, a bill to ensure greater transparency about the terms and conditions of financing provided by
Without objection,
China.
the first reading of H.R. 5932 is dispensed with. The gentleman from Arkansas, Mr. Hill, the sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed in advance and are on the dais. The clerk will read the amendment.
Amendment in the nature of a substitute to H.R. 5932, offered by Mr. Hill of Arkansas. Strike all after the enacting clause and insert the following. Section 1, short title. This act may be cited as the Ensuring Chinese Debt Transparency Act of 2020. Section
Without
2,
objection, the amendment in the nature of a substitute will be considered as read and considered base text for purposes of further amendment. I now recognize the gentleman from Arkansas for 5 minutes to explain the bill and his amendment.
I thank Chair Waters. Thank you for the opportunity to present 5932, the Ensuring Chinese Debt Transparency Act this evening. Appreciate my colleagues' forbearance in this long day. I thank the chairwoman for supporting this legislation coming to the committee tonight. What it does, it will ask the Secretary of the Treasury to instruct the U.S. Executive Director at each of our international financial institutions that U.S. policy should ensure greater transparency of Chinese government lending to countries that are beneficiaries at the World Bank or the IMF. Additionally, this bill would require the Secretary to report annually to Congress on the progress in advancing this policy and in lending to foreign countries by entities owned or controlled by the Chinese government. As we know, the IFIs, the international financial institutions, include the International Monetary Fund, the World Bank, and the regional development banks. The IMF lends to foreign countries in order to resolve the balance of payments crises, while the development banks focus on financing projects around the world with an aim to eliminating poverty. With the growth of China's global presence, there's concern that the countries that borrow from Beijing will be overburdened, forcing them to be rescued by the IMF or complicating the development bank's ability to underwrite quality loans for new projects. Specifically, China's Belt and Road Initiative is a specific and significant concern. The Belt and Road Initiative is a global development strategy adopted by the Chinese government in 2013 involving infrastructure development and investments in nearly 70 countries and international organizations in Asia, Europe, and in Africa. To date, the Belt and Road has committed more than $200 billion, with estimates that China may invest up to $1.3 trillion in Belt and Road by 2027, according to Morgan Stanley. Some estimates are near $400 billion already spent, and this dwarfs the World War II Marshall Plan of $130 billion in current dollars today. However, unlike the Marshall Plan, Belt and Road financing can make underwriting assistance difficult or even unworkable for third world countries, as the initiative has opaque financial terms. China simply doesn't report on this lending in any systematic way, and there's no evidence that China is adopting international transparency standards from the multilateral development banks. There's no effort on China's part to engage in best practices to prevent debt traps, corruption, or poor construction practices. China needs to be held accountable to ensure it's not taking advantage of vulnerable economies in these countries. In my view, the World Bank, the IMF, must know the terms and conditions of this opaque Chinese lending before they go to the World Bank or the IMF for assistance. This legislation will contribute to that accountability by seeking to secure greater transparency consistent with the requirements and principles of the Paris Club. The Paris Club is a group of global creditors, including the United States, who find workable solutions for nations currently in debt. In theory, many of the underlying policies in this legislation should already be practiced. However, due to political insensitivities, inertia, and other concerns, it just doesn't always happen. This legislation will underscore the United States' leadership and help develop a global, multilateral effort to ensure more scrutiny for China. As China becomes a major creditor nation, it should be held to a high standard, which will be used to better determine better outcomes on a global scale for borrowing countries. I urge my colleagues to vote for this legislation, and I yield back the balance of my time.
Is there further discussion or amendment to H.R. 5932? I recognize myself for 5 minutes. I very much agree with the objective of this legislation, which is to reinforce U.S. policy at the international financial institutions to seek greater disclosure of the amount and terms of Chinese lending abroad. Loans from China's many lending institutions, especially those associated with China's Belt and Road Initiative, not only lack transparency, making the amount and terms of much of that debt unknown, but it is also putting developing countries at risk of debt distress. In the absence of transparency, there is also greater opportunity for political capture and corruption. Opacity is also a problem when it comes to crisis resolution. While the ability to accurately identify the amount and terms of Chinese lending in developing countries is essential to better debt risk management surveillance work and asset risk pricing, it's important to understand that greater transparency itself is only a starting point. In order to help low-income and emerging markets countries meet development objectives like maintaining debt sustainability, we must also do more through the World Bank and the regional development banks to offer these countries better options than China does, to provide additional financing on more concessional terms, which China does very little. Let me add that one argument for China's ongoing borrowing from World Bank is that it allows a broader public global good to be imported into the Chinese system. Things like international, environmental, and social standards, high standards of transparency, and open procurement processes, strong governance programs, and respect for the importance of global economic cooperation. I have to say that I see no evidence that World Bank lending to China has had any such effect on Chinese behavior with respect to its own development financing abroad. And this is a serious problem. So I urge my colleagues to support this legislation, which understands that far greater transparency is the first essential step China must take if it is to be a responsible member of the global financial community. And with that, I yield
Would the
back.
gentleman yield for a comment?
I yield to the gentleman from Arkansas, Mr. Hill.
Thank you, Chair. I want to be on record to say that my friend, Mr. Cleaver, has had a traveling staff member, but I was informed today that he'd very much like to be a co-sponsor on this bill. I introduced it last week without Mr. Cleaver due to that conflict, I'd say travel conflict. So I was pleased to hear that from Mr. Cleaver, and I also will move on the House floor that he be deemed an original co-sponsor in the legislation. I thank the chairwoman, and I yield back.
Gentleman yields back. Is there further discussion of or amendment to H.R. 5932? If not, the question now occurs on approving the amendment in the nature of a substitute. All those in favor say aye. Aye. Those opposed, nay. In the opinion of the chair, the ayes have it, and the amendment in the nature of a substitute is agreed to. The question now occurs on ordering H.R. 5932 as amendment to be reported favorably to the House. All those in favor of approving H.R. 5932 as amendment say aye. Aye. Those opposed, nay. In the opinion of the chair, the ayes have it, and H.R. 5932 as amended is favorably reported to the House. A recorded vote has not been requested.
About the schedule.
The gentleman from North Carolina seeks recognition.
A parliamentary inquiry of the chair to inquire about the schedule.
Thank you very much. Mr. McHenry, as you know, we have the votes that must be taken on the bills that we have worked on today. And of course, the hour is late, and we have members who are on to other commitments tonight. And so I do not think it's possible to get these votes taken tonight. I understand that we're all going to be here tomorrow morning early at 8 because of the session that we're going to have on the coronavirus. And so I believe that if we are going to attend that session should take no more than an hour. Usually those sessions do not take more than 1 hour. And I would recommend that we resume our committee work and take those votes at no later than 9:30 tomorrow morning. If we come back at 9:30 tomorrow morning, I think that we would be here and be able to get our work done in time to go to the floor for the votes that are being taken on the floor. And so that is what I am requesting participation and support for.
Further inquiry of the chair. Is it the chair's intention to start the vote at 9:30? Whether or not members happen to darken the door or not, that the chair would start the roll call. We have members that believe that that is a flexible time when the chair makes that announcement. It is a common problem for both parties, and a firm announcement like that, I think, would send the right signal to our members that we intend to get through the votes.
Well, I intend to do everything possible to get our members here at 9:30. Not only will we make sure that that information is in their offices, we will follow up with calls, and I believe that we will be prepared to proceed at 9:30 tomorrow morning. With that, the committee stands in recess.